Good morning, everyone. So, in last class, we completed accounts and records e-way bill. Now, we'll start with offences, penalties, search, seizure. So, kindly look into that. Usually, it is the most neglected area. So, we will think that we'll not get any question and all, but sometimes surprisingly, we'll get a 5 marks question from this. So, look into page number 160. Segment 18, search, seizure, offences and penalties. There are total 5 aspects we need to know here. What are the cases, what are the offences that leads to penalties? Second, what are the offences that leads to imprisonment? Third, what are the offences that leads to arrest? Then 4, what are the offences which are cognizable, non-cognizable? And finally, what are the offences which are compoundable? Okay, these 5 aspects we need to know. Again, I am repeating: offences that leads to penalties, offences that leads to imprisonment, offences that leads to arrest, offences that are cognizable or non-cognizable, and finally compounding of offences. And we will start with first area, what are the offences that leads to penalty? Kindly look into page number 162. So these offences that leads to penalties are given in section 122 to 125. 122 to 125 deals with offences that leads to penalties, and all these penalties will be under CGST Act. So in exam, when you get a question on penalty, you need to compute only as per CGST Act unless it is given as IGST Act. Suppose if it is given as IGST Act, you do the computation regularly as per CGST Act, multiply with 2, that will be the penalty under IGST Act. You follow this style. So generally, whenever the question is about penalty, you do the penalty as per CGST Act. Whenever specifically they are asking about penalty under IGST Act, still you do the penalty as per CGST Act, multiply with 2, then you will be getting penalty under IGST Act. So here, first one is section 122 subsection 1. There are certain offences, that is bio discredits TFT. This is the list of offences, and who will commit this offence? A taxable person is committing these offences. And what is this list of offences? B for books of accounts default. You can see below the table. B for books of accounts default. I for invoice default. So books of accounts default means not maintaining books of accounts or maintaining false books of accounts or fake books of accounts. And invoice default means there are 2 aspects here: invoice without supply or supply without invoice. I am giving invoice but I am not making any supply. Then second one, then what is the advantage of giving invoice without supply? So that the recipient can take ITC. Then second one is I am making supply but I am not giving invoice. And next, supply with incorrect details in the invoice means I am mentioning instead of 5%, like instead of 12%, I am mentioning 5%, or even though it is taxable supply, I am mentioning it as exempted supplies, like that. Okay. So that is this offence. Then O for obstructing an officer from doing duty, and D bio discredits. D for dealing in goods liable for confiscation. Then I for input service distributor default, ISD default, and S for supply with the GSTN of another person, which means I am making supplies but I am issuing invoice in some other person's GSTIN. So that is this. B for books of accounts default, I for invoice default, O for obstructing an officer from doing duty. Then DIS, D for dealing in goods liable for confiscation. I know that the goods are liable for confiscation. When the goods are liable for confiscation, if the goods are unaccounted, means like we have not properly maintained accounts and records pertaining to those goods, then unaccounted goods or which are prone to evasion is known as goods liable for confiscation. If I am dealing with those goods, means if I am selling those goods, buying those goods or storing those goods, etc., that is called as dealing in goods liable for confiscation. And next we have I, that is ISD default. Suppose if I am an input service distributor, I should follow the procedure for distributing the credit. If without following the procedure and without following a proper ratio, if I am distributing the credit, then it is known as input service distributor default. And then yes, supply with the GST of another person. This credit. C for collected tax or collected an amount as tax but not paid within 3 months. I am supposed to collect tax, I collected tax but I have not paid, that is collected tax not paid. I am not supposed to collect tax but I collected tax but not paid, that is known as amount collected as tax but not paid. Okay. So therefore, in that case, both cases, collected tax not paid, amount collected as tax not paid within 3 months, that is an offence. And next we have R for registration default. Registration default means giving fake details for registration, or not giving proper details for registration, or not obtaining registration. This will come under registration default. CRE, E for erroneous refund. I am not supposed to get the refund, but I got the refund. I am unnecessarily inflating the turnover. I have not really made export, but I made the export. Like that, I have created documents and I claimed the refund. That is known as erroneous refund. Or if I am already claiming export on payment of IGST, also export without payment of IGST, refund of ITC also I have claimed. So that is also erroneous refund. Then D, that is disposal of goods while detention or seizure is operational. So there is a detention or there is a seizure of goods, which means that these are unaccounted goods. Unaccounted goods, first they will seize. Seize means they will take over the possession, but we are trying to break that possession and take those goods, and we are selling off those goods. That is known as dealing in goods liable for confiscation first. And this is already when we are dealing with goods liable for confiscation, they would have seized. At that time, we are disposing of the goods. Actually, when the seizure or detention is operational, we should not dispose of that goods. Suppose if we are disposing of that goods, and then I for ITC default, CREDI, I for ITC default, T for tampering material evidence. ITC default means you are not supposed to take the credit, but you took the credit. Then T for tampering material evidence, you are trying to destroy the material evidences, okay, wherein there is some details of evasion, you try to destroy that. Then CREDIT, S for suppression of turnover. Even though you have crossed the turnover, but you have suppressed the turnover so that you are escaping from no attracting provisions. For example, your turnover crossed 150 lakhs, but you are suppressing the turnover in order to continue in the composition scheme, like that. Then TFT, T for TDS TCS default, F for failure to supply information asked for. So they are asking us to supply the information, or like we are supplying wrong information or failure to supply information. And then T for transportation default. These are the list of offences. Now whenever you get a question, you need to check whether these offences is listed out, that is whatever question is covered in these offences. If it is covered in these offences, then always the penalty will be 100% of the tax or ITC or TDS TCS or refund, whatever is the amount involved in the offence. Amount means not value, tax component or ITC component, TDS TCS component or refund component, or 10,000, whichever is higher will be taken as the penalty. But this penalty is on whom? Taxable person. Then 122 subsection 2, this penalty, 122 subsection 1A, 1A is on any person, so not necessarily taxable person. Who is a taxable person? A person who is registered or liable to be registered is known as taxable person, whereas a person who got registered is known as registered person. Liable to be registered will come under a taxable person. If they are registered, they will be called as registered person. But 122 1A is on any person. So there is a person who is creating invoice default, ITC default, ISD default, but he is not the person directly involved in the offence. Means at his instance, the offence is being committed and he is the beneficiary of the offence, but he is not the supplier, he is not the recipient. That person is like a mastermind behind the offence, and he is neither supplier nor recipient. If he is a supplier, anyhow 122 subsection 1 invoice default is there, and if he is a recipient, anyhow there is a ITC default under 122 subsection 1, but he is neither supplier nor recipient. So but he is a beneficiary of the offences. So mostly chartered accountants who try to make this structuring of the transaction and retain the benefits out of the transaction will be covered under this case. Not only chartered accountant, any person for that matter. Two conditions. At their instance, these three offences should be committed. What are the three offences? 3 I's. Invoice default, ITC default, ISD default. And they are beneficiary of these offences. Then in that case, what will be the penalty? 100% of the ITC or tax involved, not the money retained. 100% of the ITC or tax involved in that offence, or 10,000, whichever is higher. So but here it is tax evaded or ITC availed or passed on. Mostly that will be higher than 10,000. So you remember that tax evaded or ITC availed or passed on will be taken. Then 122(1)(b). In case of 122(1)(b), it is now an amendment on e-commerce operator. E-commerce operator already 122(1) is there, that is TDS TCS default. TCS is to be deducted by e-commerce operator. But what is this point? E-commerce operator should not allow unregistered person to make supplies through their platform, but if they are allowing an unregistered person to make interstate supplies, actually they can allow unregistered person to make only intrastate supplies. If they allow unregistered person to make interstate supplies, or if they allow a person opting for composition scheme to make interstate supplies, or if they have not filed GSTR 8 TCS return, so then in that case allows unregistered supplier to make interstate supply of goods, allow person opting for composition scheme to make interstate supplies, or failure to furnish correct details in GSTR 8. Then what will be the penalty under 122(1)(b)? 10,000 rupees or tax involved, whichever is higher. Then 122 subsection 2 is on registered person. 122(1) is on the taxable person. 122(1)(a) is on any person. 122(1)(b) is on e-commerce operator. 122 subsection 2 is on the registered person. And this 122 subsection 2 is connected to 73-74 demand and recovery. So there are 5 cases where 73-74 will come into picture. Non-payment of GST, short payment of GST, wrong availment of ITC, wrong utilization of ITC, or erroneous refund. So these 5 cases, if it is on account of fraud, collusion, willful misstatement, suppression of facts, or contravention with an intent to evade payment of tax, then in that case it will be 74. If it is other than fraud cases, then it will be 73. And whenever there is a penalty that is under 122 subsection 2, it will come into picture only when 73 or 74 notice is invoked. If 73, 74 is not invoked, so this 122 subsection 2 penalty will not be coming. So therefore 122 subsection 2 penalty, non-fraud case, how much is the penalty? That is 73 penalty, 10% of the tax or ITC or refund, or 10,000, whichever is higher. Suppose if it is 74 penalty, then it is like fraud cases. So what is that penalty? 100% of the tax or ITC or refund, or 10,000, whichever is higher. And remember, whenever 73 or 74 is invoked, then only 122 subsection 2 penalty will come. Otherwise it will be 122 subsection 1 penalty. And also remember, whenever 73, 74 is invoked, when this penalty is levied, 122 subsection 1 will not come, which means that 122 subsection 1 penalty and 122 subsection 2 penalty are mutually exclusive. Then 122 subsection 3 is on offences, that is a person who is a party to the offence, not directly connected to the offence but a party to the offence, and who aids or abets commission of the offences. So the person is not committing the offence, he is aiding or abetting the commission of the offence. Mostly accountants, then drivers, and the managerial personnel persons, all those people are coming into this, those who aids or assist the person to commit the offence, and they are not party to the offence. Then sir, already we have 122(1)(a), then what is the difference between 122(1)(a) and 122 subsection 3? 122(1)(a) is like at whose instance the offence is committed and they retain the benefit out of that offence. They are a beneficiary of the offence. Whereas in this case, they are not beneficiary of the offence, they just the aid or abet commission of the offences. That's why in case of 122 subsection 3, the penalty is only up to 25,000. 122 subsection 3 is also applicable in case of a person to whom summons were issued and that person did not appear. So the person has been issued summons by the officer to appear before the officer, but he did not turn up. Then also penalty will come under 122 subsection 3. Offences where the person is not directly involved in any evasion but may be party to evasion, or if he does not attend summon or produce documents, it can be on any person. Actually 122(1)(a) is also on any person, 122 subsection 3 is also on any person, but the penalty under 122 subsection 3 is only up to 25,000. It is up to 25,000, not 25,000. Up to 25,000 means even 15,000 can be levied or 5,000 also can be levied. Then 123 penalty will come into picture in case when a person is required to file the information return under section 150. Information written under section 150 is required to be filed whenever the officer is asking a person to submit the information about the taxpayer, they can ask any person to submit the information about the taxpayer. A chartered accountant they can ask, a bank manager they can ask, or a electricity department or sub-registrar, any person they can ask about the information of a taxable person. And that person, that is that person to whom the information is asked for, they have to share that information in the information written under section 150. What is the time limit? Usually it should be shared within 90 days from the date of notice. Suppose if it is not shared within 90 days from the date of notice, for every day delay there will be a penalty which will be 100 rupees per day, subject to maximum 5,000 rupees. So person fails to furnish an information written under 150 within 90 days from the date of notice. So 150 empowers the jurisdictional commissioner or officer authorized by him to seek notified persons from filing information written, and 100 rupees per day subject to maximum 5,000. Again I am repeating, all these penalties are under CGST Act. Suppose if the question is about IGST Act, multiply with 2. Then next 124 penalty is on account of information under section 151. What is the difference between information written under 150 versus information under section 151? Suppose about a particular person, if I need the information, then it is called as information written under 150. But I need the data of all the taxpayers. For example, I am asking the bank manager to share the details of all the taxpayers whose gross receipts in a particular year exceeds 40 lakhs. So now this will be called as information under section 151. In case of information under 151, there is no time limit per se specified in 151. But for 150, they specified the time limit of 90 days. But for 151, they have not specified the time limit in the section. So therefore, the officer who is seeking that information will be giving the time limit to the person from whom the information will be sought, and that person has to share that information. Suppose if he is not sharing that information, if the bank manager says, no, I will not share this information, for the first time offence, the penalty will be up to 10,000 rupees. For subsequent offence, that is continuing offence, the penalty will be 100 rupees per day, subject to maximum 25,000 rupees. That is his penalty. Normal cases up to 10,000. Continuing offence means subsequent offence, 100 rupees per day, subject to maximum 25,000. Then 125 penalty is general penalty. That will be coming into picture when we don't have any penalty under any of the above sections. Then general penalty under 125 will be applicable. General penalty is also up to 25,000. And section 152 says whatever information that has been obtained under 150 or 151 without giving opportunity of being heard should not be proceeded with. Just because from the bank manager we got the information that the person gross receipts exceeds 40 lakhs does not mean that always he need to register. Maybe he may be making exempted supplies. So therefore a notice should be given, and then only they can proceed accordingly based on the data what they have obtained under 150 and 151. That is given in 152. Information obtained in 150 and 151 cannot be used without giving an opportunity of being heard to the person concerned. Then section 126. So we completed what are the offences that leads to penalties, and we have some other aspects related to this penalty. Section 126 talks about the general disciplines relating to penalty, some general provisions. 126 says wherever there is a scope for up to penalty. So there are three places where you have come across up to. What is that? Section 123. 123 also 122 subsection 3, it is up to 25,000. 125 it is up to 25,000. 124 also up to 10,000. In these three places, officer is having power to reduce the penalty or waive off the penalty also. But what are the reasons? Number one, suppose if it is a minor offence. What is a minor offence? So if the minor breach means tax involved is less than 5,000. Less than 5,000, not less than or equals to 5,000, less than 5,000, then they can waive off. Or that offence is easily rectifiable, made without a fraudulent intent, then also it can be easily be waived. For example, so every person has to display GSTIN on the name board. Suppose if they are not displaying GSTIN in the name board, if they are registered, then that is an offence. If you see below, so we have a name board of THARUN'S Brainery, but I have not mentioned the GSTIN. So therefore you can complain to the GST department that sir, he is a registered person, but they have not mentioned GSTIN in the name board. Yes, it's an offence. And what will be the penalty under 125? Up to 25,000 rupees. But whenever officer comes and asks, I will take a printout of the GSTIN and I will stamp it, means it is easily rectifiable. So therefore the penalty will be waived off. You understood or not? So that is this. no penalty for minor offences, or which can be easily rectifiable and made without a fraudulent intent. Yes, I have made this offence without a fraudulent intent and easily rectifiable or gross negligence, then this will be 126. So don't complain and all, okay. So this will be applicable in case of 122 subsection 3, 124 or 125, only these three places. Then 127, that is, generally there are some proceedings under GST, assessment proceedings are there under section 59, 60, 61, 62, 63, 64. These sections deals with assessment proceedings, and demand and recovery proceedings are there in 73, 74 and even 76. And even we have search seizure offences like penalties. In that search seizure proceedings is also there under section 129 and 130. So under that particular proceedings itself, penalty can be levied. But what if there is no proceedings, but just the penalty needs to be levied? How to levy the penalty? For that they are telling a notice and order will be given under section 127. See this, where proper officer is of the view that person is liable to a penalty and the same is not covered under any other proceedings, he may levy penalty after giving a reasonable opportunity of being heard. Only for levying penalty they can pass a penalty order under section 127. And section 128 says government can waive off the penalties levied under section 122, all sections, all subsections of 122, 123, even 125, but 124 cannot be waived off, okay. See the sections 122, 123, 125, except 124. Even government is having power to waive off the late fee, but only thing government will not waive off, okay. So at times whenever they require, so whenever some elections are nearing etc., at that time they will be waiving off, okay, but they have power to waive off. What is the difference between 126 and 128? 126 is the power to the officer, 128 is power to the government. And 133, suppose if there is an officer who is engaged in this act, or a person who is working in the GST portal willfully discloses information of a taxpayer with any other person, he will be charged with a penalty which will be up to 25,000 rupees or imprisonment up to 6 months or both. Officer engaged under this act willfully disclose any information or contents of any return otherwise than in execution of his duties, then in that case up to 25,000 or imprisonment of 6 months or both. So these are the various offences that leads to penalties, you need to keep in mind. Then next one we have, what are the offences that leads to imprisonment? So very important, because last time I expected a question on imprisonment, but surprisingly question came on compounding of offences. So therefore imprisonment, definitely this time they will be asking question. So imprisonment, because that is also an amendment for May 24, but they have not asked. Imprisonment is applicable in case of I's bid, I for invoice default, C for collected an amount as tax, not collected tax. Actually the same same mnemonic. I's bid, the full form is same as biodiscredits TFT, but in that ICEBID. If you see in biodiscredits TFT, T I's are there, 3 I's are there. What are the 3 I's? Invoice default, ITC default, ISD default. But which offence is covered for imprisonment? Invoice default and ITC default. ISD default is not an offence for imprisonment. Then C, if you look into biodiscredits TFT, C has 2 C's, collected tax not paid within 3 months, collected an amount as tax not paid within 3 months. But here we need to take it as collected an amount as tax but not paid within 3 months. And next E, there is only one E, that is erroneous refund. Only one B, that is books of accounts default. I already we discussed. And last D, there are 2 D's, dealing in goods liable for confiscation, disposal while detention or seizure is operational. Which is a grave offence for imprisonment? Dealing in goods liable for confiscation. Disposal while detention is operational, already they know that these are seized goods, they have the records. So when you dispose it off, it's okay, not a great offence here for imprisonment, but dealing in goods liable for confiscation is an offence for imprisonment. So I's bid plus abet to commit, abetting the offence or committing the offence. So attempt to commit or abetting commission. Attempt to commit, you have not committed, you just attempted it, okay. So then also it will be applicable, imprisonment will be applicable, like I did not kill the person, sir, but I tried to kill the person. That is also attempt to murder, na? Like that. Attempt to commit. Or abetting commission. That is, I am not A1, I am A2. It is like I am holding the hands and you stab the person. So you are A1, okay, and I am A2. I am also party to the offense, correct or not? So therefore that is what? Abetting commission of the offense. So ice bid plus attempt to commit or abetting commission of this ice bid will also attracting imprisonment. So can you tell me once what is ice bid? I for invoice default. C, collected an amount as tax not paid within 3 months. E, erroneous refund. B, books of accounts default. I, ITC default. D, dealing in goods liable for confiscation. Now what is the imprisonment in this case? Easily you can remember. So in case of books of accounts default, see, for first time offense, he is a fresher. For that only you need to remember. Repeater and all, no issue. Always it will be up to 5 years plus fine. If he is a repeater, okay. Fresher only we need to think about how much involved, etc. and all. Once he is committing the offense, thereafter he is habituated. So therefore always it will be the same punishment. What is that? Up to 5 years and fine. And minimum will be 6 months, because here the words up to 5 years means one day also he will go and come in imprisonment and say that imprisonment is served. No, minimum 6 months, up to 5 years. And next, if he is first time offender, if it is books of accounts default, up to 6 months or fine or both. See, because books of accounts default is not that criminal offense and all, that's why up to 6 months enough. 6 months or fine or both, so that they can go there and they can maintain books accounts there, okay. So like that. Then next, if it is other offences, what is other offences? Be gone. Be gone. What is other offences? ICE ID. In that ICE ID, remember 1, 1, 2, 5, 1, 3, 5. 1, 2, 5, 1, 3, 5. Greater than 1 crore up to 1 year. Greater than 2 crores up to 3 years. Greater than 5 crores up to 5 years. Is it clear? 1, 2, 5, 1, 3, 5. Greater than 1 crore, 1 year. Greater than 1 crore, 1 year. And greater than 2 crores, 3 years. And greater than 5 crores, 5 years. Up to 5 years. That's what you can see. So, greater than 1 crore, 1 year. Greater than 2 crores, 3 years. Greater than 5 crores, 5 years. And in all cases, the minimum imprisonment will be for 6 months, and fine will be compulsory, and fine. It's not or fine, and fine. And here, whenever it is greater than 1 crore, only in one case that will be applicable. What is that? Invoice default. That too, which invoice default? Invoice without supply. So carefully listen. How you need to remember, I am just structuring it for you. So imprisonment you need to remember this way. First, all offences, repeater means up to 5 years plus fine, minimum 6 months. So can we forget this minimum 6 months for some time? Yes, because that is common everywhere. Then and fine also common everywhere. Yes or no, yeah. So therefore term alone you remember, and subsequent, let us repeater, what is the imprisonment? Up to 5 years. Suppose if it is first time, books of accounts default, up to 6 months or fine or both. Then other offences, greater than 1 crore up to 1 year, greater than 2 crores up to 3 years, greater than 5 crores up to 5 years, and this greater than 1 crore is applicable only in one offence. What is that one offence? Invoice default. That too, invoice without supply. What about supply without invoice? Not applicable for 1 crore. That is applicable from 2 crore onwards. 2 crore onwards, okay. So that is how you need to remember this. Next, after this imprisonment, you need to know what are the offences that leads to arrest. What is the difference between imprisonment and arrest? A person will be taken into custody for interrogation is known as arrest. And once the person cooperates, no need of arrest, because he is only confessing, yes sir, I defaulted sir, what you want to do, you pluck, whatever you want to pluck, you pluck, okay, like that. Then when he is cooperating, what officer will do? Okay, anyhow he is only confessing, then why to arrest that person? So directly they will go to the court and file the case in the court of law, and the court will award the imprisonment. So when the court awards the imprisonment, the person will be going to the prison and he will serve his imprisonment. So that is the difference between arrest and imprisonment. Mainly to gather the evidence or to interrogate the person, they do the arrest. But arrest is not applicable in all cases. There are only 3 offences for which arrest will be applicable. What are they? IIC, invoice default, ITC default, collected an amount as tax. Collected an amount as tax but not paid within 3 months. In these 3 cases only. That too, amount should be more than 2 crores. Amount should be more than 2 crores, then only arrest will be applicable. See this. Offences which are specified under section 122. It is specified under 122 also, 132 also. Anyway, you can say 122 is penalty related section, 132 is imprisonment related section. Okay. So, but these 3 offences are given in both the places na. So, either you can take 122 or 132. And what are these 3 offences? IIC, invoice default, ITC default, collect an amount as tax not paid within 3 months. Suppose if it exceeds 2 crores, definitely arrest can be made. What about other offences? All other offences, arrest cannot be made. Arrest cannot be made. Okay. So, understood arrest related provision. So, we have completed 3 offences that leads to penalties, offences that leads to imprisonment, offences that leads to arrest. Now, 4th one, offences which are cognizable or non-cognizable. Cognizable means the person who will be arrested without a warrant is known as cognizable offences, and all cognizable offences are non-bailable offences. Means arresting officer cannot grant bail, he need to be produced before the magistrate within 24 hours, not within 24 working hours. So, within 24 hours you need to be produced before the magistrate. So, that is in case of cognizable offences. Suppose if it is non-cognizable offences, which means arresting officer require a warrant for arresting that person, and all non-cognizable offences are bailable offences. So, when it will be cognizable plus non-bailable, actually which is severe, cognizable plus non-bailable is severe. When it will be non-cognizable, so that is if the amount exceeds 5 crores, these 3 offences only, invoice default, ITC default, collect an amount as tax not paid within 3 months, these 3 offences only. If it exceeds 5 crores, then it will be coming under cognizable plus non-bailable. If it does not exceed 5 crores, okay, then it will be, it means exceeds 2 crores, exceeds 2 crores but does not exceed 5 crores, then it will be coming under non-cognizable plus bailable. So, you can see here, same these 3 offences, if it exceeds 2 but does not exceed 5, non-cognizable plus bailable, which means ACDC can give bail, arresting officer can give the bail. If bail not taken, then forwarded to the custody of the magistrate. Suppose if it is a cognizable plus non-bailable, then the person will be arrested without any warrant and he will be produced before the magistrate within 24 hours. That is where in many movies you would have seen night time and all of police will go to the judge house and will disturb the judge, and judge will be scolding the police and all, because the 24 hours target they need to complete. Within 24 hours he need to be produced before the magistrate, otherwise that person should be released. Okay. So, then in this case imprisonment already we know, if it exceeds 2 crores what is the imprisonment? Up to 3 years. If it exceeds 5 crores the imprisonment will be up to 5 years. All other offences is given as non-cognizable plus bailable, but actually that is stupid. When the arrest itself is not there, why we need to call it as non-cognizable and bailable etc. and all, but that is how the law has been made. Law itself is stupid, what to do. So, they have created such a kind of drafting error here. So, when arrest itself is not there, then why it is? But ICI will expect us to write that wrong answer only. So, therefore, whenever you are writing in the exam, you write that all other offences are non-cognizable plus bailable. Okay. Then next one. So, here this imprisonment is there na. This imprisonment, other offences. What is the meaning of other offences? Other offences here refers to what? ICEBID minus B. Why minus B? Because for books of accounts default already we have imprisonment. Same way here also other offences. What is the meaning of this other offences? That is ICEBID minus B. Why minus B? Because for books of accounts default already we know it is up to 6 months or fine or both. And sir, for this more than 1 crore, you remember only one case, that is invoice. Invoice without supply. Invoice without supply, not even supply without invoice. Okay. Next, the last area that is compounding of offences, section 138. So we have seen 4. Now the 5th one, compounding of offences. Compounding of offences is not important for any practical question and all, but maybe in MCQ only it will be tested, because already they have tested this in the last attempt itself, May 24. First, what is the meaning of compounding? Wherever there is imprisonment, if you pay the compounding fee, you will get the immunity from imprisonment. Means imprisonment you are not required to undergo, you can pay some money. So it is like an official bribe what law has created. So you can pay that money so that imprisonment will be dropped. So granting immunity from prosecution, that is imprisonment, upon payment of compounding fee by the offending person. So that is known as compounding. And what will be the compounding fee? The compounding fee as per section 138 is given as minimum 25% and maximum 100%. But this 25%, 100% is just the amount, that is just the percentage given in the act, but they are using the word but as prescribed by the officer. So, but as prescribed by the officer, specifically for each and every offences, they have created a table as to what is the specific compounding fee, whereas this is the general, that is 25% to 100%. In addition to this compounding fee, whether we need to pay penalties, interest and taxes, etc. Yes. In addition to this compounding fee, such person should pay tax, interest and applicable penalty. And what are the cases where compounding is not possible? First time compounding itself is not possible in 2 cases. First case, invoice without supply. Invoice without supply, first time compounding itself is not possible. Okay, first time compounding itself is not possible, because they are considering invoice without supply as a serious offence, because the recipient is going to take ITC, and due to that reason it's a serious offence for which first time compounding not possible. Or if the prosecution order is already passed, prosecution order means in brackets write down imprisonment order, already they passed the imprisonment order, in that case compounding is not possible, because court will pass the imprisonment order, and once court passes the imprisonment order, then we will go for appeal only, but we cannot do anything with respect to this here. Okay, so therefore prosecution order is passed. That too, remember, prosecution order you cannot go for regular appeal. Regular appeal means our regular commissioner appeal, CESTAT, etc., GST 80, etc. is there na, that is not possible. So regular, as per the criminal procedure code, whatever is the regular process. So if the lower court passes a imprisonment order, we need to go to the higher court, na, high court or supreme court, that process only. So this is not as per GST law. So which means once imprisonment order is passed, officer is not having power to do the compounding. And restriction on subsequent compounding. Subsequent compounding is not possible for all the offences under section 132. How many times you will commit the offences and then go and ask for sorry? Okay, so therefore only one time, once in the lifetime only this section can be used. So thereafter every time you cannot get. Also here, sir, I got a doubt about this subsequent imprisonment, sir. First time I did erroneous refund, sir, and next time I did invoice default, sir. But for invoice default it is first time only, na, sir. Like that you should not argue. Okay, so out of this, any one case, if it is subsequent, that will be called as subsequent imprisonment. Like that, out of this, any one case, if you have already done the compounding, so a subsequent compounding is not possible. You understood? Then next, special points, compounding is possible if the prosecution is not initiated or during the prosecution also. During the prosecution means the case is going on in the court. At that time also compounding is possible, because the officer will withdraw the case, and but it should not be completed, because once it is completed, the prosecution order is passed, compounding not possible. After initiation of the prosecution, upon payment of compounding fee, all the proceedings shall stand abated. So that is like that's what I told you, prosecution will be dropped. So which means that you don't have to go for imprisonment or no imprisonment order, nothing. Now what is the specific compounding fee? So if it is books of accounts default, or dealing in goods liable for confiscation, or attempt to commit or abetting commission of the offences, it will be always 25% of the tax evaded. Okay, so what are the offences for which compounding is possible? All offences under 132 except invoice without supply, correct? And therefore we will divide it into 2. Offences under section 132, offences under section 132 we are dividing into 2, that is books of accounts default, then next D, dealing in goods liable for confiscation, plus attempt to commit offences, correct? Attempt to commit or abetting commission of offences. In this case, what will be the compounding fee? The compounding fee is 25% of what? Of tax, whatever is the tax involved, etc. and all. So 25% of tax involved, that will be taken as the compounding fee. So books of accounts default, dealing in goods liable for confiscation, plus attempt to commit or abetting commission. Other offences, you make it like other offences. In these other offences, except, which except? Except invoice without supply. Why except invoice without supply? Because for invoice without supply, first time compounding itself is not possible. And this again divided into two. If the amount exceeds 5 crores, if the amount in the offence exceeds 5 crores, amount means what? Tax. In offence always what is the amount involved in the offence? Tax. So if the tax involved in the offence is more than 5 crores, so tax or ITC or refund is less than or equals to 5 crores, or tax or ITC or refund is greater than 5 crores. If it is less than or equals to 5 crores, how much should be taken? They have not given exactly some amount, but they gave a limit. So 50 to 75%, 40 to 60%. Suppose if it does not exceed 5 crores, 40% to 60%. If it exceeds 5 crores, then 50% to 75%. Okay, this is what you need to remember. This chart you remember. So for MCQ purpose, if you are getting any question by chance, you can write this. Okay. Then, sir, in revised book page 296, I bid minus B, order of imprisonment is in wrong order. Can you please confirm it? Yes, that's what I am confirming now. Here you can see whatever is discussed by me here, that you can update there. Okay. So some print error has happened in revised book. Sorry for that. So the order got changed. So greater than 1 crore, it was given as 5 years and all like that. That row or column got changed. Kindly correct it. Okay, if you are having revised book. Then next, sir, how much fine in section 122 and 132? 122 or 132, wherever we have fine, fine is not given by the law. Fine is imposed by the court. So here plus fine, when I am telling that plus fine is not in my hands, or it is not in the hands of officer, it is in the hands of the court, who is deciding that they will be deciding. So fine will be as decided by the court. Sir, what is the place of supply in profit earned on buying and selling of cargo space on airlines, and whether it is taxable or exempted? See, usually in case of buying and selling of cargo space, that is like logistic operations, transportation. So we need to classify it under transportation of goods. Transportation of goods, whatever is the place of supply, the same thing we will be applying. So what is the place of supply in case of transportation? 12 means starting point of the goods, B to be location of recipient, and suppose if it is section 13, general provisions, that is how we will determine. And here profit will not be chargeable to GST. So whatever is the gross amount involved in the transaction, because we are not talking about income tax, we are talking about GST. GST is always on the gross amount. Okay. Next, look into search, seizure. So we completed offences, penalties, etc. and all. Look into the search and seizure. There are two situations where search and seizure will be applicable. So one is section 67 read with section 130. This is search in the premises, whereas section 68 read with section 129, that is search in the transit. There are two places where search will be applicable. Situation number 1, 67 read with 130, then 68 read with 129. First situation is in the premises, second situation is during the transit. Suppose if the search happens in the premises, inspection was carried out at the business premises of the taxable person or transporter or warehouse keeper or any other premises. In this any other premises, even residential premise also can come if there is some records maintained in the residential premises. Then if any unaccounted goods are found, such goods are liable for confiscation. So section 67 says that seizure order will be passed. That seizure order will be passed with respect to seizure from the place of business. Basically, seizure means transfer of possession to department. The goods will be transferred to the department, and there are two options that will be given in case of seizure. Option number 1, pay the appropriate tax and penalty and all the proceedings are concluded. But what is the penalty that we need to pay? 122 subsection 1 penalty. Why? We are dealing with goods liable for confiscation. These are called as goods liable for confiscation. So we need to pay penalty, and that penalty will be under 122 subsection 1, which is 100% of the tax or 10,000, whichever is higher. So therefore, we will pay the applicable tax and penalty under 122(1). Goods shall be released. All the proceedings in this respect shall be deemed to be concluded. Or option 2, suppose if you don't have money to pay the tax and penalty, you execute a bond. When you execute a bond, they will be releasing the goods provisionally, but the proceedings are not yet completed because just they release the goods, but you have not paid the tax and penalty, so they can proceed to recover the tax and penalty from you at a later point of time. That is, furnish security and get provisional release. Provisional release of goods by executing a bond covering the value of the goods. And then suppose if you are not exercising any of these two options, then they will be passing a confiscation order. That is under section 130. When they pass a confiscation order under section 130, confiscation means transfer of ownership to department. So far, just the possession has been transferred to department. Once a confiscation order is passed, even the ownership also will be transferred to the department. And whenever confiscation order is passed, still we have got a chance to get our goods. They will be giving a redemption option. That redemption fine we need to pay within 3 months from the date of confiscation order, so that the goods will be released. Now at this stage, what is the extra thing that we need to pay? Anyhow, tax we need to pay, penalty we need to pay, plus extra we need to pay even the redemption fine. What is the redemption fine? There is no exact redemption fine. The redemption fine depends upon release of goods or release of conveyance. For release of goods, the redemption fine will be 100% of the market value of the goods. So whatever is the market value of the goods minus tax payable thereon, but that is a maximum redemption fine. Not that much fine they will be levying. They can levy any amount lesser than that. So market value of the goods minus tax payable thereon with respect to that goods, that is a maximum redemption fine in case of release of goods. What is the maximum redemption fine in case of release of conveyance? GST payable on the goods transported thereon in the conveyance. But this conveyance is in which place? Is it in the transit or in the premises? In the premises. This conveyance is in the premises. Suppose if you pay the tax and penalty for the goods, then conveyance also will be released. Yes. So in option 1 and option 2, you don't have to pay separately the penalty for goods and conveyance. So it will be released. But when you are not exercising those two options, when the redemption fine is being paid, that redemption fine will be separate for goods and separate for conveyance. And suppose if you are not even paying the redemption fine also, what will happen? So the goods will be confiscated na. So that confiscated goods will be disposed of by way of auction by the department, and the proceeds will be realized and kept by the department. 1 rupee also will not be shared with us, because here confiscation means transfer of ownership to department. So tax and penalty payable along with redemption fine. If option not opted, confiscated goods shall be disposed of and entire amount will be retained by department. Okay. Then next one. Second situation, seizure of goods during the transit. So during the transit, the proper officer is having power to intercept the vehicle under section 68. When the proper officer intercepts the vehicle, at that time, if the goods are with valid documents and e-way, no issue. Otherwise, that goods as well as conveyance is liable to be seized. So conveyance carrying the goods are intercepted by the proper officer for inspection in transit. If the transporter was found transporting or storing such goods which are removed in contravention of the provisions of the Act, such goods and conveyance are liable for confiscation. So under section 129, they will pass a seizure order for seizure of both goods and conveyance. And once they pass a seizure order, the ownership will be transferred to the department or possession will be transferred to the department. Only possession will be transferred to the department, and we need to pay the penalty. So what will happen? As soon as they pass a seizure order, they will give a notice within 7 days for levying the penalty. After they give the notice for levying the penalty, within 7 days from the date of notice, they will pass a penalty order. First from seizure order within 7 days, notice. From notice within 7 days, penalty order. So penalty order 15 days, we have to make the payment of penalty. Otherwise, after 15 days, the goods will be disposed of. The conveyance also will be disposed of. Notice within 7 days of verification. penalty order within 7 days of service of notice. Upon payment of penalty within 15 days of receipt of order, all proceedings shall be deemed to be concluded. But in situation 2, we need to pay only penalty. We don't have to pay the tax, because that tax will be as per our regular assessment. Our regular returns we will be paying. Now we don't have to pay. On the spot we need to pay only the penalty. And here the set period of 15 days shall be reduced in case of perishable goods. So means for perishable goods, even we don't have this 15 days to pay the penalty, they will specify maybe 1 or 2 days only. So by that time we need to make payment of penalty. What is the penalty that is payable for release of goods? You can see here, who is coming forward to claim release? Is the owner coming forward to claim release, or the transporter is coming forward to claim release? Because on the spot, who is there? Transporter is only there. So is transporter coming forward, or the owner of those goods is coming forward to pay penalty? If the owner is coming forward to pay penalty, the penalty will be 200% of tax. Again, this is under CGST Act. All the penalties that we are learning under CGST Act. So when it is IGST Act, we need to multiply with 2. Okay. So 200% of the tax payable on such goods if the owner is coming forward. And if it is exempted goods, then what will be the penalty? 2% of the value of goods subject to maximum 25,000. Means it is 25,000, whichever is lower, like that it is given. So maximum 25,000 rupees, correct? 2% of value or 25,000, whichever is lower. Means maximum penalty will be how much? 25,000. Suppose for release of conveyance, what is the penalty that is payable? That is whatever penalty that is payable for goods above, or 1 lakh, whichever is lower. Means what is the maximum penalty for release of conveyance? 1 lakh. This is when the owner is coming forward. When the owner is not coming forward, what will be the penalty? We have a higher penalty. When owner is not coming forward, who is coming forward? Transport is coming forward. We have a higher penalty, that is 200% of tax or 50% of the value, whichever is higher. So definitely 50% of value only will be higher, na sir? No, because sometimes we have GST compensations also. Let's take GST rate as 28%. So now we are computing CGST section. Means what is the tax under CGST? If 28% is the rate of GST, 14. 28% GST pass, CGST is how much? 14. Okay. And GST compensation cess is somewhere like 16%. GST compensation cess is 16%. So 16%, half is what? 16%, half, 8. So that itself is 22%. So 22% into 200%. What is that? 44% or 50%, whichever is higher is 50%. You understood? No issue. But what if the GST compensation says itself is somewhere like 25%. 25% already. So somewhere like 14 plus 12.5, 26.5 into 200%, 53% or 50%, whichever is higher will be 53%. So therefore in exam carefully you write that 200% of tax or 50% of value, whichever is higher. And if it is exempted goods, what will be the penalty? 5% of the value of goods or 25,000, whichever is lower. And for release of conveyance, what will be the penalty? Penalty payable for release of goods or 1 lakh, whichever is lower. So maximum will be 1 lakh. Now if you see, if transport is coming forward, there is a higher penalty because they want the owner to come forward. When the transport is coming forward, higher penalty, so definitely owner will come forward. So with the department will know who is the owner of the goods. So they will get to know his premises so that they can go to his premises and do the search. So they can convert to situation 1. So that's the reason why they have created this disparity in the penalty. Then, so what will happen within 15 days if you pay this? The goods will be released. What will happen within 15 days if you are not paying this penalty? The goods will be auctioned. Where the person transporting any goods or the owner of such goods fail to pay the amount of penalty under section 129 within 15 days from the date of receipt of copy of order, the proper officer shall proceed for sale or disposal of the goods or conveyance through the process of a auction, and the said period of 15 days may be reduced in case of perishable. Now whenever they are doing auction, what they will do? First, whatever money that is realized will be adjusted towards the expenses, and second, it will be adjusted towards the penalty payable by that person, and balance amount will not be retained by the department because they have not passed a confiscation order yet. confiscation order is applicable only in the previous situation. Here they passed only the seizure order, so therefore they cannot retain the amount, they have to return the amount to the owner of the goods. So they have to return that amount to the owner of the goods. Suppose if they are not able to identify who is the owner of the goods, they will wait for 6 months, and in the 6 months any person should come and claim, otherwise this amount will be transferred to consumer welfare fund. Why this situation happens? Say the lorry has been stopped by the officer, and the driver came to know that definitely this officer is going to torture me. So the driver ran away. So he got down and he ran away. He left the lorry, he left the goods, everything, and he ran away. And in that lorry there is nothing. There is no goods, like there is no documents related to the goods and nothing. Just the lorry number is there. But that lorry number also belongs to some person. He is telling, sir, long back I sold my lorry in OLX, like that. Okay. You understood? So therefore they don't know who is the owner of the goods, they don't know who is the owner of the conveyance, etc. In that case they will be giving a notice, they will pass a penalty order, and they will auction it, and they will wait for 6 months. In the 6 months no one is coming forward, definitely no one will come forward, because they will know that if they come forward then they have to pay a huge amount of penalty, and after paying this amount also, if they get these goods, if they sell these goods, it is like they will not be able to recover whatever money they have paid as penalty. So therefore they will leave it, and this money will be transferred to consumer welfare fund. That's how it works. If the balance of the sale proceeds cannot be so paid within 6 months from the date of sale, it shall be deposited in consumer welfare fund. Okay. So that is about offences and penalties, search, seizure we have completed. So let's see some 2 questions related to this offence and penalties. See this. This is one question which they have already tested in exam related to penalty. Question 29, which is in page 408. If you have solved workbook, you can see. Measures fly by night traders, a taxable person, issued an invoice on 15th April 2021 involving input tax credit of 25 lakhs to measures runway traders who utilized the same. So what happened? A taxable person issued an invoice involving a ITC of 25 lakhs and to the recipient, and the recipient has utilized the same. No supply of goods was involved in this transaction. So what is it? Invoice without supply. Between the 2 traders, fly by night traders conducted this transaction at the instance of its tax consultant, who was not a qualified professional. Explain the relevant provision in brief and determine the amount of penalty leviable under CGST Act, if any, on the persons involved in respect of the above referred transaction. Now here if you see, first of all, on the supplier, who is the supplier? Fly by night traders. On fly by night traders, there will be penalty under 122 subsection 1. For what default? Invoice default. Because they gave an invoice without supply of goods, so there will be penalty under 122 subsection 1. Why not 122 subsection 2? Because is there a tax amount involved in the offence or not? There is no tax involved in the offence. Why no tax involved in the offence? I have not at all supplied, but I raised invoice. Where I have liability? I don't have liability at all. I just gave an invoice. Just because giving invoice there will be liability on me? No. There should be supply. What is a taxable event under GST? Supply. If the supply itself is not there, why the hell I need to pay GST? So therefore on fly by night there is no tax liability. When there is no tax liability, there is no non-payment of tax, short payment of tax, etc. How the recovery can be made? So due to that reason 7374 will not be applicable on the supplier. As 7374 not applicable on supplier, there will be only penalty under 122 subsection 1. Now you understood. So therefore penalty will be only under 122 subsection 1, which is 100% of the amount involved in the offence. What is the amount involved in the offence? 25 lakhs or 10,000, whichever is higher. So they need to pay a penalty of 25 lakhs. Is it clear in the hands of fly by night traders? Now go to the recipient. Who is the recipient? Runaway traders. Runaway traders availed the ITC and utilized the same. So they have taken the ITC and they have utilized the same, which means that it's a fake ITC, correct or not? So they should not have taken ITC. And if you have to write in exam, see in that attempt, in December 21 attempt, this circular was not there. That's the reason why I have not given. But now what you need to write is that if demand and recovery is initiated under section 73 or 74, then the penalty will be payable by these runaway traders under section 122 subsection 2. Okay, and if that too, because see, actually if you are not writing that also, the answer is correct, but we are just showing the knowledge. See, I know, my dear examiner, I know the subject, like that you have to show off, you understood, so that you have to tell. But even if you are not writing this, the answer is still correct. Reason being, they have not given in the question that they are invoking 73 or 74. What I told you, only when 73 or 74 is invoked, the penalty will be coming under 122 subsection 2. But on a safer side, we are writing this point. Okay, what is that? If the recovery is initiated under 73 or 74, then the penalty will be levied under section 122 subsection 2, which will be 10% of tax or 10,000 whichever is higher, or 100% of tax or 10,000 whichever is higher. However, if the recovery is not initiated under 73 or 74, then the penalty will be levied under section 122 subsection 1, which will be under ITC default, which is also 25 lakhs, correct? Then next, here fly-by-night traders conducted this transaction at the instance of this tax consultant who was not a qualified professional. Now in this case, actually we need to take one assumption and we need to write. What is that assumption? So as the offence is committed, which offence it is? ITC default. As the offence is committed at the instance of the person, and assuming that he retains the benefit out of that offence, the penalty will be levied under section 122 subsection 1 capital A, that is 25 lakhs. How much ever is the tax passed on or ITC passed on, the 25 lakhs will be taken as penalty. However, this point also you write on safer side in the answer. However, if that person has not retained any benefit, but he is just a party to the offence, then in that case the penalty will be levied under 122 subsection 3, which is up to 25,000. But you know why we are taking this assumption? Because out of the two conditions, one condition is specifically given, because at his instance the offence is committed. Actually, what are the two conditions for 122 1A? At the instance of that person, the offence should be committed and there should be the beneficiary of that offence. Okay, as one condition is given, that's why other condition we are taking as the assumption. Okay, so in all these three people there will be penalty 25 lakhs, correct? Yes or no? Then here, assuming that he retains the benefit, okay, we are taking this as the assumption. Even ICA also took the same assumption for the suggested answer, that's why I am telling you this. Okay, next, understood now this question? And here you can also apply section 73, 74 if invoked, then penalty under section 122 subsection 2. Next, another question pa. Yes, see this question. This is a question already they have tested related to imprisonment, cognizance, bailable, etc. They have given this question. Examine whether the offences committed in each of the following independent cases are bailable. Further, determine the quantum of punishment on prosecution under CGST Act in each of these cases. Number 1, Homi Gaba collected 240 lakhs as tax from its clients and deposited 150 lakh with the central government. So 240 lakhs is collected as tax and paid. So 150 lakhs, balance amount of tax is not paid to the central government. It is found that he has falsified financial records and has not maintained proper records to evade the tax. What are the two offences that he has committed to attract imprisonment? Books of accounts default and collected an amount as tax not paid within 3 months. First, for books of accounts default, should we see any amount? No, always it will be up to 6 months, or fine, or both? And what will be your answer if they have already committed this offense? Up to 5 years plus fine and minimum imprisonment of 6 months. Then what about the second offense? That second offense is collected an amount as tax not paid within 3 months. And should we check the amount? Of course, yes. What should be the amount involved? Greater than 1 or greater than 2? Greater than 2. Greater than 1 is only in one case. What is that? Invoice without supply. So greater than 2 should be involved. So is it the amount involved more than 2 crores? No. Because 240 minus 150, how much? So it does not exceed 200, that is 2 crores. It does not exceed 200 lakhs, that is 2 crores. So due to that reason, will there be any imprisonment on this person? No. There won't be any imprisonment on this person under that offense. But on account of books of accounts default, there will be imprisonment. Then look into second. So for subsequent offense also we should check the amount. Yes, amount we should always check. First time offense or subsequent offense, amount we need to check. But the imprisonment term will change if it is first time offense or subsequent offense. Then second, Datukeshwar Dutt collects 630 lakhs as tax from its clients, but deposits only 120 lakhs with the central government. Again here it is amount collected as tax and balance amount of tax is not paid to central government. What would be the implications in above case if Homi Gabha and Datukeshwar repeat the offences first? So only one offence, amount collected as tax but not paid within 3 months. What is the amount involved in the offence? 630 minus 120, that is, so more than 5 crores. More than 5 crores, what will be the imprisonment? Up to 5 years plus fine, and there is a minimum imprisonment of 6 months, and this answer will be same even if they are a subsequent offense. Okay, even if it is a subsequent offense, you understood? Then this is about imprisonment you have written, but you have to write about the arrest also. In the first case, is there arrest? No, arrest is not applicable. Why arrest is not applicable? Because it is not IIC. Only for IIC arrest is applicable. And in the second case, whether arrest is applicable? Yes, because it is collected amount as tax not paid within 3 months and the amount exceeds 2 crores. So arrest is applicable. In the first case, what is the type of offense? We have to write as non-bailable and like non-bailable or bailable? Bailable, non-cognizable plus bailable. Okay. And but sir, arrest is not there, sir. That's what I told you. Stupid point we have to write even though there is no arrest. And second one, in the second case, what is this offense? Cognizable plus non-bailable. Why? Amount exceeds 5 crores. So we need to write it as cognizable plus non-bailable offense. These are the 3 aspects we need to write in every question. So this attempt, I don't know, somewhere my intuition is telling it will come. So imprisonment related provision with arrest and with this cognizable and bailable. Okay. So you have to learn this, and these 3 points you have to apply in the question and you need to write the answer. Okay. So these are some questions. Yes. Now we will move on to the next area, that is demand and recovery. Before that, one friend is having a query. My doubt still persists regarding including the value in taxable amount. Arey, leave it here. You don't put a value at all here. So better. You don't put value. You do it normally. That is not at all a problem. That value column is only for the purpose of calculating turnover. Separately also you do that computation. You leave it. Please leave it. No. So because if you are not able to understand that, better to leave rather than breaking your head. And sir, in exemption question number 33, pay halal question in adjustment 5 and 6, the taxable value is not shown for insurance commission. Again the same value question here. See, our target is to write the answer whether it is taxable or exempted. If it is taxable, we will write the liability. If it is exempted, we will not write the liability. Simple. So value column, whether you update or not update, you will not be deducted with any marks. But value column is for our convenience, we are putting it so that in order to find the turnover. Okay. So there is no big mistake in that. Okay. Sir, for invoice without supply default, between 1 crore to 2 crore, there is an imprisonment up to 1 year. but arrest is applicable only for defaults above 2 crores. So does this mean imprisonment can be made directly? Yes, that's what the entire Ramayana I said now. That is, a person can be imprisoned without arrest. Arrest is not a prerequisite for imprisonment. So normally case will be filed, and when the case is filed in the court will pass an order, imprisonment order. Until that point of time, daily that person will go to court and come to his home only. And when the imprisonment order is passed, then he will tell to his family members, Tata, bye bye, and he will be going to imprisonment. Until that point of time, he will be in color dress only. Only when it is imprisonment, that white dress will come. You understood? Arrest time also color dress only. You know that. During arrest, they will not be given a number, the dress code, etc. and all will not be there. They will be in the normal color dress only, and they will not be called as imprisoned person. That is arrest. So imprisonment can be with arrest or without arrest. Okay. Not all arrest lead to imprisonment also. Not all imprisonment requires arrest. These two are not mutually inclusive and all. Okay. Then correct, how you will know all these things? If you have did that in articleship, you will be knowing. So you will not get this exposure now, because ICAI says that why we need articleship, because we need to give exposure. Super. So imprisonment exposure also you give to the article students, so that they will also know arrest means how, imprisonment means how, etc. and all. Anyhow, this 2 years articleship, no one is considering as experience. You know that? No one is considering experience. Then why the hell here? What is the need of this articleship here? Ask them to fold and keep somewhere here. So what is the use of it? 2 years of waste. Rather, you can complete after intermediate. Now I am talking about now, updated. For you, okay, 3 years. So at least immediately after inter, they can write the final exam and go for some job, and they can settle in that career. And this is nothing but bonded labor only. So this 2 years or 3 years of articleship, and they are not even counting it as a experience also. And if that much exposure is required, give all the kinds of exposure, how smuggling is happening and how imprisonment is being done, how arrest will be made. So where exposure they are getting, they will do only income tax return work, or if not internal audit work or stat audit work. Not every area they are getting exposure. How many companies you incorporated, merged, amalgamated, demerged? Where you got that exposure? You did not get, na? Correct. So see this segment 19, demand and recovery under GST. In this, there are actually section 73 and 74. 73 and 74 is applicable in 5 cases. That is in a quit panidrampa. So can you summarize bailable and non-bailable and cognizable and non-cognizable? So far I said summary only na yaar. Hey, too much pa, you are playing with me yaar, wantedly. So far I said summary only, no? You did not understand, huh? Too much. Take it for granted this is. Then see this. Promise pa, mother promise pa, like how I took fast track batch, I took pa. Demand and up to this, offences, penalties, I know that you will not be, because fast track batch also, those who attended fast track batch, if you have watched the lecture, you will be knowing how I took for fast track batch, that much patiently I took pa. I cannot summarize again. Video will be there, you go back and you watch it, okay? So too much here. Reason for issuing show cause notice. So 73, 74 will be applicable in 5 situations: non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC, and erroneous refund. These 5 situations, if it is on account of fraud, collusion, willful misstatement, suppression of facts, or contravention with an intent to evade payment of tax, then it will be 74. If it is other than fraud, then it will be 73. And what is the time limit by which order should be passed if it is 73? The order should be passed within 3 years from the due date of filing annual return. But in case of erroneous refund, it will be 3 years from the date of erroneous refund. So 3 years. So 3 years, 73 I'm talking first. 73 is other than fraud. 3 years from the due date of filing annual return for the relevant financial year, or 3 years from the date of erroneous refund. And what is the time limit by which notice to be given? At least 3 months before the due date of passing adjudication order, the notice to be given. And wherever this 3 years comes, in case of 74, you replace this 3 years with 5 years, and wherever this notice 3 months come, you replace it with 6 months. So don't remember separately the provision for 73, 74. 73 provision you remember, and wherever 3 years come, you need to replace it with 5 years, and wherever the 3 months notice comes, you need to replace it with 6 months. And is there a possibility of giving a supplementary notice? Yes. So in case of 73, 74, first notice to be given and thereafter the order to be passed. But they gave the order time limit and thereafter they gave the notice time limit. So but notice definitely needs to be given, which means from notice to order, what should be the minimum gap in case of 73? 3 months. And from notice to order, what is the minimum gap in case of 74? 6 months. And here, suppose if already a notice has been given for a particular financial year, for another financial year, they don't have to give another notice. So if the offense is same, rather than giving a separate notice, for the same notice which was given for the last year, we can give an annexure, that is called as supplementary notice, so that these 2 financial years liability can be recovered at once by passing a single order, demand order. Okay, so there are 2 notices or single notice, 1 notice and 1 supplementary notice. But this supplementary notice to order also, there should be a minimum gap of that 3 months and 6 months that should be maintained. So whether a supplementary notice can be issued, yes, but if it is on account of same grounds. Okay, and what will be the amount that will be mentioned in the order? Tax, interest and penalty, that will be mentioned. What is the penalty that will be payable? Just now we saw the penalty in case of 73 is 10% of the tax or ITC or refund or 10,000, whichever is higher. Whereas in case of 74, it will be 100% of the tax or ITC or refund, whichever is higher, or 10,000, whichever is higher. And in case of 73, there is a discount. What is that? If you pay before the show cause notice, the tax and interest, the penalty will be waived off. 73, you see, 73. If you pay before show cause notice, the tax and interest, the penalty will be waived. Suppose if you pay after show cause notice within 30 days, the tax and interest, penalty will be waived. Otherwise, you have to pay the penalty, whatever is the applicable penalty. Whereas in case of 74, what is the discount offer that we have? Before show cause notice, if you pay, you have to pay the tax and interest and even penalty you have to pay, but just 15%. If you pay after notice within 30 days, you have to pay the tax, you have to pay the interest, but penalty will be 25%. Full penalty you don't have to pay. Suppose if you miss that 30 days from notice, thereafter if you are paying within 30 days from the adjudication order, that is demand order, then you need to pay 50% penalty. Beyond 30 days from demand order, it will be 100%, that is original penalty you need to pay. So here we have only 3 slabs. Before notice, no penalty. After notice, within 30 days, no penalty. Otherwise, we need to pay the original penalty. Whereas here, before notice, 15% of the original penalty. And after notice, within 30 days, 25%. And within 30 days from order, 50%. Thereafter, you need to pay the full penalty. And there is one more section, that is section 76, which talks about you are collecting an amount as tax. So far, 73, 74 is collected tax not paid. But 76 is collected an amount as tax not paid within 3 months. We have already seen the penalty now. Actually, this is related to that. So section 76 will be passed, order will be passed if an amount has been collected but not paid. Collected as tax but not paid to government. Now, what is the time limit by which show cause notice can be given? It can be given any time. After 5 years, 10 years, 200 years also they can give. So, there is no time limit for show cause notice. But whenever they give the show cause notice to recover this amount, from there within 1 year, they need to pass the order. No time limit for show cause notice, but the order should be passed within 1 year from show cause notice. And the penalty will be 100% of tax. 100% of tax or 10,000, whichever is higher, definitely it will be 100% of tax. And interest at the rate of 18% per annum Here usually interest will be calculated from the first date after due date, but in this case the interest will be computed from the date of collection till the date of payment. It is not from the due date. There is no concept of due date because it is first of all not tax. It is an amount collected as tax. So today I collected means from today till the date I am making payment, I need to compute interest at the rate of 18% per annum. Then time limit for payment of amount. Once they pass the order under 73 or 74 or 76, within 3 months I have to make the payment. Otherwise recovery shall be initiated, or within these 3 months I can even go for appeal. So either I need to go for appeal or I need to make the payment. Otherwise they will initiate recovery, that is given in section 78. Will I get the installment facility? Yes. For everything there is EMI facility. Why not for tax amount? Definitely you will get EMI facility, but not no cost EMI, because Bajaj Finance is not working here. So therefore it will be cost EMI, means interest will be there. What is the maximum number of EMIs that will be given? 24 EMIs, maximum 24 months. And here what happens is that whenever a person makes the payment, that is he can make the payment even after show cause notice or within 30 days from show cause notice, etc. How he need to make the payment? Not in his 3B. If he pays in 3B, no one will know whether he paid or not, because 3B is like a ocean, all the amounts will be there. So therefore whenever he gets a notice or whenever he gets an order, if he is required to make the payment, that payment should be made through DRC 3. In the DRC 3 they need to properly select as to what is the notice under which they are making the payment. Where the person makes payment of the amount under 73 or 74 shall intimate the proper officer in the form DRC 3. Proper officer shall issue an intimation in form DRC 5 concluding the proceedings. Then section 75, general provisions relating to determination of tax, say this: the stay has been granted by the court or GSTAT for notice or order. Such period shall be excluded from the notice or order due date. So usually what is the time limit by which the order should be passed under 73? 3 years. But the particular issue for which they are passing an order, that issue there is a stay that is granted. So that is the registered person is going to the court to get the stay, and the court is giving stay for 8 months, which means in these 8 months can the demand order be passed or cannot be passed? Cannot be passed. So the time limit will not be now 3 years, the time limit will be 3 years 8 months. So because these 8 months they cannot pass any order, so therefore while counting the 3 years, these 8 months will not be considered, which means the overall period will get increased to 3 years and 8 months. The same way, if the stay is given for notice also, the notice could not be issued, so the notice time limit also needs to be enhanced accordingly. Then notice issued under section 74 not sustainable in the court, then the same shall be converted to be 73 notice. What does it mean? So first they gave a notice on account of fraud. So therefore we went to the court. They gave a notice, they passed an order, and we went to the court. Our argument is not that we have not paid tax. Our argument is that not that we are not required to pay tax. I agree that I have to pay tax, but my argument is there is no fraud. You understood my question? That argument here is that, sir, I have to pay tax. Agreed, sir, but there is no fraud. Then that notice will be not valid. If that be the case, if court passes an order like that, okay, notice is not valid, then really I have not paid. I admitted that I have not paid, but the government will never be able to recover the tax from me because there is a period of limitation for issuance of notice, correct? Already they gave notice, but when I went to the court, they have nullified that notice. Again, there is no time limit for the government to give a new notice. Due to that reason, what does the law says? If the court says that the notice under section 74 is not valid, the same notice will be treated as notice under section 73. If it is issued within the time limit under 73, then it will be valid. If it is not issued within the time limit under 73, then it will not be valid. Okay. Let's try to understand this with a quick example. Say, for the financial year 2022-23, what is the time limit by which order should be passed? Order under section 74. Order under section 74. What is the time limit? 74 Kumutta. 5 years, not 3 years. I heard somewhere 3 years. Order under section 74. Time limit will be 5 years. So what is 5 years from which date? From the due date of filing annual return. What is the due date of filing annual return? 31st December 2023, 24, 25, 26, 27, 28. So 31st December 2028. That is the time limit by which the order should be passed. What is the time limit by which notice to be given under section 74? 6 months before this. 6 months before this means 30/6/2028. This is for the financial year 23-24. Suppose if it is order under section 73, order under section 73, what is the time limit by which order under section 73 should be passed? 31st December 2000. So 23, 24, 25, 26. And what is the time limit by which notice to be given? Notice under section 73. At least 3 months before this. At least 3 months before this means 39/2026. So these are the time limits. But what has happened? Notice under section 74 issued on 5/5/2027 for financial year 2022-23, and order passed on 30/12/2027 and appeal filed, where court ordered that 74 cannot be invoked. You understood the story? Now tell me, can the same notice be considered for the purpose of recovery under 73? No. So 74 notice is issued on which date? 5/5/2027. Is it within time? Yes, within time. For 74 it is within time, because time limit for giving notice under 74 is 36/2028, 5/5/2027 within the time for financial year 22-23, and order passed on 30/12/2027. Is it also within the time? Yes, that is also within the time, and appeal is filed where the court ordered that section 74 cannot be invoked. Then in that case, check whether section 74 notice is within time limit, under section 73. Yes or no? No. Because what is the time limit under 73 for notice? 39/2026. But here they gave a notice on 5/5/2027. So it is beyond that date. So due to that reason, can recovery be made or recovery cannot be made? Therefore, recovery cannot be made. You understood here? What if, sir, the notice under section 74 is issued on 5/5/2026? What if it is given on 5/5/2026? Then even though it is given under section 74, but it is within the time limit under 73, so recovery can definitely be made. Okay, so this is also another area which is not tested in last exams and all, so definitely you can get this question. Mark it as very, very important. Notice issued under section 74 but not sustainable in the court of law, but whether that notice under 74 is issued within the time limit under 73, that is within 2 years 9 months from the due date of annual return, yes, then that amount can be recovered. Suppose if that notice under 74 not sustainable in the court, but that notice is given beyond 2 years from the date of annual return or date of erroneous refund, then entire proceeding shall be dropped, because it is not issued within the time limit under 73. So therefore recovery cannot be made. What if it is for multiple financial years? Same way you need to see. Even though for multiple financial years they gave a notice under 74, check for all these financial years whether that notice given is within the time limit under 73. For whichever financial years the notice is given within the time limit under 73, for those financial years only recovery can be made. You can see that if notice was issued under 74 for multiple financial years and such demand order is not sustainable in court, then with respect to those financial year for which time limit under 73 is satisfied, redetermination can be done and order can be passed. Now what is the time limit by which we need to do the redetermination? That is, court gave order. After court gave a order, we need to redetermine the tax and we need to pass the order. So what is the time limit by which we need to redetermine and pass the order? Within 2 years from the date of communication of directions. That is when the matter remanded back for fresh adjudication. Why the matter will be remanded back for fresh adjudication? If the court considers that this is not an account of fraud, then demand order shall be passed within 2 years from the date of communication of directions. And proper officer shall grant adjournment for a maximum of 3 times. And interest is payable even if not specified in the order, because interest is a statutory liability. Whether it is mentioned in the order or not mentioned in the order, it will be payable, but penalty is not like that. Penalty only if mentioned in the order is payable, otherwise it is not required to be paid. And amount in the order should not exceed the amount in notice. Notice is given for 5 lakhs. Can they pass an order for 6 lakhs? No. The order should be for less than or equals to 5 lakhs. And in case of self-assessed tax, what is self-assessed tax? That is liability reported in GSTR 1 but not paid in GSTR 3B. So for that self-assessed tax, there will be direct recovery under section 79. Already we saw that in rule 88C. In rule 88C, I told you when the liability in GSTR 1 is greater than the liability in GSTR 3B, they will be giving an intimation to us in DRC 1B, and within 7 days we need to give the reply. If we are not giving reply or we are not paying, directly they will recover and there is no separate notice and all. Actually this is that point. So in case of self-assessed tax, direct recovery without order can be initiated under section 79. You just write down rule 88C. And suppose if there is a similar issue which is pending in some other proceedings in GST 80 or High Court or Supreme Court, such period shall be excluded in the due date of the order. That is, what happens is that, say there is a issue, that issue is employer providing food to the employee and collects some nominal amount from the employee. Is it supply or not a supply is the issue, and for which there are different views. So some views are that it is supply under 71A and chargeable to GST, but there are some contrary views also that it is not a supply, it will come under employee welfare because it is covered under offer document. So due to that reason it will not be chargeable to GST. Like that there is a different argument, but right now this case is in the court, that is High Court the case is in. Now same issue is there with some other person, and that some other person, can the recovery be made by the department? No. Why recovery cannot be made by the department? Because on this issue there is a case which is pending in the court of law. So till the time the court decides that case, here the recovery cannot be made. So that period the case is in the court should be excluded while counting the time limit. You understood? Suppose if it takes 3 years for them to give the judgment, and that 3 years is the literal time limit here. So due to that reason, the 3 years should not be considered. So if the similar issue is pending in some other proceedings in GST 80 or High Court or Supreme Court, such period shall be excluded in the due date of order. Then section 77, tax wrongfully collected and paid, already we discussed in refunds chapter. That is, if we have paid CGST, SGST instead of IGST, so we need to pay the CGST, SGST already paid. So first we need to pay the IGST and get the refund of CGST, SGST. Same is the case. So reverse also. So treating intra as inter and inter as intra, pay the correct tax and get the refund of wrong tax. Then section 79 talks about recovery. What are the various modes of recovery? And various modes of recovery, first it will be deduction from money owed from government. That's why there is a refund withhold order. So whenever government is required to give you some refund, so from that itself they will deduct. So that's why the withholding of refund, whatever refund that government is required to give you, they will withhold it. Suppose if that money is not sufficient, they will sell the goods which is under the control of proper officer. So during seizure, they would have seized some goods, so that seized goods they will sell it off. Or garnishee proceedings, recovery from a third person, that is from the bank manager or debtor or etc. Then sale of movable or immovable property, like attachment proceedings, they will attach our assets and they will sell it off. And suppose if that is also not sufficient, as arrears of land revenue by the collector, so like they will take a mic announcement in our area where we are living and that will be recovered. If that is also not possible, as fine imposed by magistrate, fine imposed by magistrate, if not paid, that person will be arrested and it will be imprisoned, and we need to do the work, labor work, whatever is given there, and the wages will be adjusted towards your tax dues. If that is also not sufficient, through surety, so it will be recovered. So these are the various modes of recovery of money from the government. That's the reason why any person who defaults taxes, they will run away from the country. And section 81, transfer of property to be void. So what is that? Whenever the tax becomes due from a person, so there is a person, on whom the tax has become due. So means you need to pay the tax. Thereafter, if he tries to transfer the assets, whatever he is having, in order to escape from payment of taxes, because usually if I have an asset, that asset will be attached and that asset will be sold and it will be realized towards the tax dues. So what I will do, I will transfer this asset to my wife, or I will transfer this asset to my relatives, or I will transfer this asset to some other person. This transfer is held to be void. So but when the transfer should be made, if the transfer is made before the money has become due from the person, no issue. But the moment when the money has become due from the person, notice date, actually notice date, okay, as soon as the notice is given, so that time. But notice or order, there is no clarity in that, but mostly notice itself, the money will become due from that person. Notice given under 73, 74 itself, this much money you need to pay, because audit and all would have happened. After that only they will be giving notice. So mostly notice, but sometimes notice just to check whether you have to pay tax or not. So in that case, the order, okay. So depends upon facts to facts only we can determine. In case of 73, 74, no doubt, as soon as the notice is given itself, there will be amount becoming due from the person. But don't worry, in the question you see that, and depending upon that you take accordingly. So when any amount has become due from a person, creates a charge on or transfers any of his properties in favor of any other person with the intention of defrauding the government revenue, such charge or transfer shall be void, provided that the transfer is made for adequate consideration in good faith. Such charge or transfer shall not be void if it is made for adequate consideration in good faith and without notice of pendency of proceedings or with the previous permission of the officer. Suppose, sir, before the tax has become due from that person, if he tries to sell off the asset, then in that case there will be a provisional attachment. So people will try to transfer and the section 81 cannot be applied. So that's where section 83 will come into the picture. As soon as the proceedings started on that person, what proceedings? Any kind of proceedings, audit or seizure proceedings or such proceedings, any kind of proceedings. Provisional attachment of any property, including bank account, after initiation of such any proceedings, either assessment proceedings or such proceedings or demand and recovery proceedings, for a period of 1 year from the date of provisional assessment, which means that, so what is the period for which they can provisionally attach the assets? 1 year. Means in that 1 year they need to complete the proceedings and they need to either give the notice or pass the order. That is the meaning of that. And during this 1 year, whenever they are attaching, whenever they are giving the provisional attachment, so even on assets also they will do provisional attachment. For example, if we have a car, on that car there will be provisional attachment. So what they will do? So they will place a embarkation or they will place an encumbrance on this particular car and they will be informing it to the RTO. So whenever we try to sell this car, so they will be saying that no, you cannot sell this car, you cannot register or transfer this car because there is a encumbrance on this particular car. And as and when they withdraw the provisional attachment, at that time they need to inform the RTO also. There is one amendment related to that. The revenue authority or the transport authority or any such authority who has placed the encumbrance on the movable or immovable property or on the order of the commissioner shall remove such encumbrance on the written instruction from the commissioner to that effect or on expiry of a period of 1 year from the date of issuance of the order, whichever is earlier. Then section 82 talks about tax to be first charged on the property, that is subject to IBC. If the IBC is not invoked, then taxes will be having first charge at the time of liquidation. Next, section 84, continuity and validity of certain proceedings, concentrate. So first I got a notice for 5 lakhs and they passed an order for 5 lakhs. Now I want to go for an appeal. I went to the appeal stating that I don't have to pay 5 lakhs, I have to pay only 3 lakhs. But the appeal authority is telling, no, you don't have to pay 5 lakhs, you have to pay 8 lakhs. Okay. Actually, I went to the appeal asking for reduction in tax, but they have enhanced the tax. They are telling, correct, you are not required to pay 5 lakhs, but you need to pay 8 lakhs. But for the 3 lakhs, there is no notice. That's the reason why they have given 84, which says that whenever appellate authority is enhancing the tax liability, for that enhanced liability, the commissioner can give a notice, no need to pass a new order. So the appellate authority also can enhance the tax dues. So appeal against an order, appellate authority enhance the amount, commissioner shall serve notice for such excess amount, and appeal order shall be passed on such enhanced amount without adjudication order for that excess amount. And next, seizure, confiscation, etc. we have separate proceedings, so that is not coming under 74. Look into this CBIC circular. So this circular only I was referring to give you the clarity about mutually exclusive provisions about section 122 subsection 1 versus 122 subsection 2. Have a look into this example. Example number 1. Mr. Amar is making supply of goods or not making supply of goods, not making supply of goods or services to Mr. Balaji, but Amar has raised invoice to Mr. Balaji. Now in this case, is there a liability on Amar or no liability on Mr. Amar? There is no liability on Mr. Amar, because first of all, he did not make supply, just he raised the invoice. Just because he raised the invoice, he don't have to pay the tax. There is no liability. Now in this case, whether demand and recovery under 73, 74 applicable or not applicable on Amar? Not applicable on Mr. Amar. As 73, 74 not applicable, so can the penalty be levied under Amar under any of the other sections? Yes. 122 subsection 1, under invoice default, the penalty can be levied on Mr. Amar. Is it clear? Then second example, you see, Mr. Amar is supplying goods or service or not? No. But he raised invoice to Mr. Balaji. What Mr. Balaji did? He availed the ITC and utilized for payment of his tax liability. Now in this case, will there be demand and recovery on Mr. Balaji? Yes. There will be demand and recovery on Mr. Balaji under 73 or 74. Due to that reason, the penalty cannot be levied on Mr. Balaji under 122 subsection 1, even though there is a ITC default. Even though there is a ITC default, but the penalty cannot be levied here. Then third example, you see, Mr. Amar invoiced to Mr. Balaji, Mr. Balaji invoiced to Mr. Charan, and what happened here? They just raised the invoice without supplying. First, from Amar point of view, you see, they raised the invoice without supply. Is there a liability on Amar? No, there is no liability on Amar. So 73, 74 will not come. So penalty payable by Amar under 122 subsection 1 under invoice default. Then Mr. Balaji availed the ITC. That ITC is fake. Also, he raised the invoice without supply, and that liability is also fake. ITC also fake, liability also fake. That fake ITC, adjusted accounts, a fake liability. Means first of all, he is having a liability. No. Why he is not having a liability? Because he made supply or not? He did not make supply. So then that liability is not a genuine liability or original liability. So whatever ITC that he has taken itself is a wrong ITC, adjusted against a wrong liability, which means he is not having a liability at all. So 73, 74 cannot be invoked on Mr. Balaji, but Balaji is required to pay penalty under 122 subsection 1 on account of two defaults. What are the two defaults? Number one, invoice default and ITC default, means two times he need to pay. So 122 subsection 1 penalty, twice it will be applicable to him on account of ITC default and invoice default. Then finally, Mr. Charan has availed the ITC and utilized for payment of his tax liability. Now in that case, will the demand and recovery be applicable on Mr. Charan? Yes, because of using this fake ITC against his actual liability, his liability would have come down. So therefore, short payment of tax and recovery can be made under 73, 74. So penalty will not come under 122 subsection 1. So that is this mutually exclusive. So either penalty under 122 subsection 1 will be applicable or 122 will be applicable. But how it applies is that if demand and recovery under 73, 74 is invoked, then penalty will not be applicable under 122 subsection 1. If demand and recovery 73, 74 not invoked, then the penalty will be applicable under section 122 subsection 1. Okay. Next. So look into this appeals. Segment 20. So now appeals is actually the outcome, that is whenever there is a adjudication, demand order. I told you 3 demand orders. What are the 3 demand orders? 73 demand order, 74 demand order, 76 demand order. So on that we can go for appeal. So here we need to understand 2 aspects, adjudication and appeal. Adjudication means the process which starts after giving notice till the time of passing the order is known as adjudication. At this stage, the person will be given an opportunity to give a response to the notice, and he need to get an opportunity to explain as to why he is not satisfied with that notice and why he is not required to pay the liability. That stage is known as adjudication. At the adjudication stage, there will be deliberations between the taxpayer and the officer, and if the taxpayer admits, he can make the payment. That is what, if the payment is made before show cause notice, there is no penalty that is payable, etc. and all. And in case of adjudication, the outcome of adjudication is known as adjudication order or demand order or order in original. These are the three names for the same order. Either it will be called as adjudication order or demand order or order in original. And who will be the adjudication authority? So lower level we have superintendent, the next level assistant commissioner, deputy commissioner, and the above level additional or joint commissioner. Only these three officers will give the notice and pass the order. So they are called as adjudication authority. Even anti-profiteering authority is also called as adjudication authority. And once this authority passes the order, thereafter we will go for appeal to the appellate authority. Who is the appellate authority that we have? At the lower level we have commissioner appeals or additional joint commissioner appeals, and the next level we have GST appellate tribunal. Thereafter we have High Court and then Supreme Court. But if the issue is related to place of supply, we can skip the High Court and directly we can go to Supreme Court. In GST there will be two benches, that is principal bench and state bench. If it is the issue related to place of supply, the principal bench will hear. If the issue is related to other than place of supply, then the state bench will hear. So from principal bench directly it will go to Supreme Court. If it is from state bench, then it will go to High Court, and thereafter further it will go to Supreme Court. And the outcome of the appellate authority, that is appeals, is called as appeal order, appellate order or order in appeals. So either it will be called as appellate order or order in appeals. But we don't have the provisions related to High Court and Supreme Court in GST, because the provisions related to High Court and Supreme Court is governed under Civil Procedure and Criminal Procedure Code. That will only be applicable. Now, what is the process? So first adjudication order we got. Thereafter we will go for first appeal against that order. First appeal to whom? First appeal to either commissioner appeals or additional or joint commissioner appeals. In income tax we have only commissioner appeals, but in GST we have commissioner appeals as well as additional or joint commissioner appeals. That is the first appeal. And when we go to the first appeal, so depending upon whose order we will go for appeal, simple. If the additional or joint commissioner passes the order, we will not go to additional or joint commissioner appeal same level. So we will go to commissioner appeals. So if below the rank of additional commissioner, that is assistant commissioner or deputy commissioner or superintendent passes the order, so then we will go to additional or joint commissioner appeals. You understood? So commissioner appeals when against the order of additional or joint commissioner. Additional commission appeals when against the order of officer below the rank of additional or joint commissioner. What is the time limit within which we need to go for appeal? 3 months, plus it can be extended for a further period of 1 month, 1 month continuation of delay. So 3 months plus 1 month. Whereas department also can go for appeal. Why they will go for appeal against their order? Basically on the subordinate order, the superior will go, that is the commissioner will go for appeal, because commissioner is not an adjudication authority, it is only additional or assistant or deputy or superintendent. So commissioner will go for appeal against their subordinate. That time limit will be 6 months plus 1 month, and that is only called as review. Okay, this is the time limit. And what is the time limit by which they need to dispose of the appeal? That is, once the first appeal we have filed, what is the time limit by which they need to give the decision? Time limit is 1 year, but that is not mandatory. So it is advisory. By 1 year, within 1 year they need to pass the appellate order, or the decision needs to be pronounced. And there is a concept of pre-deposit. Pre-deposit means whenever we are going for appeal, the registered person or the taxpayer is required to pay pre-deposit. Pre-deposit not applicable for department. Pre-deposit applicable only for the taxpayer. How much is that pre-deposit? If it is admitted due, 100% of the admitted due. Admitted due means out of that order, say for example order is for 10 lakhs, and in the 10 lakhs 2 lakhs really you have to pay. So the 2 lakhs is called as admitted due. So 2 lakhs plus its interest plus its penalty, that is 100% of the admitted due, plus disputed tax. What is the disputed tax? 8 lakhs. In that 8 lakhs, 10%, that is 80,000. But sir, in disputed tax also there is interest and penalty. Should we pay that? No. If the tax itself is in dispute, automatically interest and penalty is also in dispute. So only on disputed tax you need to pay 10%. So literally how much extra we will be paying? The 10% only we will pay as pre-deposit. So assessee not applicable in case of department. pre-deposit, 100% of admitted due plus 10% of disputed tax. But the 10% of disputed tax is subject to maximum 25 crores. The 10% component alone is subject to maximum 25 crores. Okay. Whereas pre-deposit under section 129, that is whenever you are going for appeal against a penalty order under 129, the pre-deposit will be 25% of the penalty. What is 129? So if the proper officer intercept the vehicle, we need to pay penalty. Owner come forward, owner does not come forward, some penalty we need to pay. Na? On that also we can go for appeal, but the pre-deposit will be 25% of such penalty. And there is no appeal fee. This is about the first appeal. Then second appeal, you see, to whom you will go for second appeal? Against the order of the commissioner appeals, or against the order of the additional commissioner appeals, or revisional authority. So either commissioner appeals, additional commissioner appeals, or there is a separate authority called as revisional authority. Against their order we will go to GST-80. And for GST-80, what is the time limit? For the first appeal, what is the time limit? 3 plus 1 na? Here 3 plus 3. For the first appeal department 6 plus 1, but here it will be 6 plus 3. And what is the pre-deposit? In the first appeal 100% of the admitted due, here also 100% of the admitted due. Here 10% of disputed tax, here it is double, 20% of the disputed tax. Here it is subject to maximum 25 crores, here it is subject to maximum 50 crores. But this is under CGST Act, means double, into 2 will be IGST Act. Then next fee, what is the appeal fee? For the first appeal there is no appeal fee, but for the second appeal there is an appeal fee. How much is the appeal fee? 1000 rupees for every 1 lakh or part thereof, subject to maximum 25,000 rupees. For example, if there is a dispute of 10 lakh 40,000, how much will be the appeal fee? 11,000. How 11,000? For every 1 lakh or part thereof it will be 1000. So 10 lakh 40,000 means 11,000. What if it is 28 lakh 50,000? 25,000. Because the maximum amount will be 25,000. 14 lakh 10,000, 15,000. Part thereof is the word used. So therefore, even if small fraction is there also, automatically the 1000 rupees will be coming. But the maximum fee will be 25,000. And what is the time limit for disposal of appeal? Same, 1 year, not mandatory. Then third appeal we are going. So third appeal to whom? High Court. Against whose order? GST-80 order. GST-80. That to which bench? State bench. What is the time limit for appeal? 180 days from the date on which order is pronounced by GST-80, and it can be extended for an unlimited condonation of delay. And pre-deposit provision and fee, everything is as per CPC, Civil Procedure Code. And fourth appeal to whom? Supreme Court. Against whose order? Either GST-80 principal bench, or it may be High Court. Either GST-80 principal bench or against High Court, but the time limit, pre-deposit fee, everything is as per CPC. And if the matter is relating to question of law, we can go up to Supreme Court. But if the matter is relating to question of fact, the final fact finding authority will be GST-80. Difference between question of law and question of fact. If it is related to provision, then it will be question of law. If it is related to condition on which the provision is dependent, then it will be question of fact. Whether it is supply or not a supply, question of law. Whether consideration is involved or not involved, question of fact. Are you getting this? Then whether the ITC is available or not available, whether it's a blocked credit or not, question of law. Whether this particular inward supply is covered under this statutory obligation or not covered under this statutory obligation is a question of fact. Remember, there are provisions. These provisions are dependent upon many conditions. So whether the condition is satisfied or not is a question of fact. But whether the provision is applicable or not is depending upon question of law. So who is the final fact finding authority? GST-80. Suppose if it is substantial question of law, then only we can go to Supreme Court. And monitor limit for filing appeal. So if it is GST-80, we cannot go for appeal if it is less than or equals to 50,000. So minimum 50,000 rupees, or that is above 50,000 should be there, then only we can go for appeal. But for department we don't have any restriction yet. Then interest on refund of pre-deposit. Actually interest on refund of pre-deposit is actually 6%. But in ICA suggested answer for May 24 already they asked this question, they have taken 9%. But that is a mistake. In suggested answer it should be 6% only, because in the section clearly it is mentioned as, so as per Section 56, interest at the rate as per section 56. In 56 there is no 9%. In proviso to section 56 only 9% is given. So actually in case of pre-deposit 9% they are not paying, they are paying only 6%. But as ICI in the suggested answer they have taken for May 24 exam 9%. For your reference I am just telling you that for ICI purpose they are taking 9% per annum, okay, and they have not given any correndum also. They have not given any correndum. Maybe before exam they will be giving correndum, okay. We don't know when they will give, but in study material there is no information at all related to 6% or 9%, and in some past exam they took 6%. Same ICI in one past exam they took 6%. So that's the reason why. So therefore I have taken only 6% pa. Even though recent exam they have taken 9%, but according to me 9% is wrong. 6% only should be taken. 6% per annum from the date of deposit till the date of refund, and no time limit. See, date of deposit they are not telling. Usually interest rate 6% from the 3 months after application, but here it is not like that. 60 days after application, correct or not? We will make an application for refund. Within 60 days if the refund is not given, then from 61st day they will pay interest. That is what we learnt in refund, but here it is not like that. From the date we deposited till the date we are getting the refund, they will give us 6%, but when they will give refund, that they have not given. No time limit prescribed for returning the pre-deposit. And there are some orders which are considered as non-appealable orders. Non-appealable orders means what? On these orders we cannot go for appeal. What are they? Number one, transfer of proceedings from one officer to another officer. Say they transfer the proceedings from one officer to another officer. You cannot say, no, I like that officer only, I want that officer only, like that. We cannot go for appeal. Then number two, seizure order. So whenever they pass this seizure order, we cannot go for appeal. Can we go for appeal on confiscation order? Yes. Can we go for appeal on penalty order? Yes. So but not on seizure order. Then on imprisonment order also I told you. Imprisonment order we cannot go for appeal here, but we can go regular. Regular. What is that regular? That is High Court, Supreme Court, because this imprisonment order is passed by the court. When the court is passing the order, the next appeal will be with the High Court or to the Supreme Court. So that's why this appeal is not applicable. And order sanctioning payment of dues in installment. So they are ordering you to pay in 6 months EMI, but you are telling, no, I want 18 months EMI. Like that you cannot go for appeal. Okay, even though maximum 24 months is there, but that is up to them as to how many EMIs that they will be giving. So these are the 4 orders on which appeal cannot be made. So this is important for short note. What are the non-appealable orders on which appeal cannot be made? Then look into revisional authority under GST. So while discussing here, I told you there is one revisional authority, and against the order of the revisional authority also we can go to GST 80. So basically who will be coming under revisional authority? So revisional authority is for revision of the adjudication orders, not appeal orders, adjudication orders. Sometimes when the adjudication order is passed and the department also not going for appeal and the registered person also not going for appeal, but they want to verify whether these orders passed are genuine or not, because we can bribe the officers and we can ensure that the orders are passed in our favor. So that's why they have established revision authority. Revision authority is appointed for the purpose of revision of adjudication orders. How they will take up this order for revision? Either on their own motion randomly they will take, or upon information received by it. So they come to know that one particular officer has passed the order by collecting bribe, like that they got the information. So then whatever orders passed by that officer, they will be taking up for revision, or on the request from the commissioner. So that is commissioner, like state commissioner will tell, sir, CGST commissioner, so he is passing, that is they are instructing their team to pass the orders by collecting bribe and all, we have doubt to you, please check. So then revision authority will go and do the checking of this. Call for and examine the records of any proceedings. So here revision authority is not actually that particular jurisdiction. Other jurisdiction commissioner will be appointed as the revision authority for this jurisdiction, like a peer review. Okay, so wherein other jurisdiction commissioner, we don't know which jurisdiction, maybe some north, somewhere, any person can be coming here. So therefore this revision authority will call for and examine the record of proceedings. So every proceeding they will examine from the beginning, and if they consider that any decision or order passed is erroneous, or insofar it is prejudicial, erroneous or prejudicial to the interest of revenue, illegal or improper, or has not taken into account certain material facts. These words you need to write. In erroneous, order is erroneous or illegal or improper or prejudicial to the interest of revenue, or has not taken into account certain material facts, what they will do? They will either enhance, increase, or modify, decrease, or annul. They will cancel the said decision or order. And no revision in certain cases. Number 1, suppose if you are already going for appeal against an order, they will not do the revision. But there is an order for 10 transactions. In the 10 transactions, for 8 transactions you are going for appeal. For 2 transactions you are not going for appeal in that order. For the 2 transactions, can they do revision? Yes. So order has been subject to appeal. However, revision authority may pass an order on the point which has not been raised and decided in an appeal. Then order has already been taken up for revision. So when revision authority has taken up the order for revision and on merits they dropped it, which means they have not revised. Now can another revision authority come and touch this order? No. Suppose if the revision authority has taken the order for revision and they revised it, can another revision authority revise this order? No. That is another point. Orders ought to be revised is a revision order. Suppose if the order is taken up for revision by a officer, one officer, another officer cannot touch that order. Okay. Then next, time limit for doing the revision. What is the time limit within which revision should be done? Suppose if you are going for appeal, then on few grounds on which you did not go for appeal, that is for few transactions on which you did not go for appeal, they can do the revision. The time limit will be 1 year from the date of such appeal, or 3 years from the date of adjudication order. Already adjudication order is given, from there 3 years, whichever is later. Suppose you did not go for appeal. Actually, what is the time limit that is available to go for appeal? For registered person 3 months, for department 6 months. So due to that reason, that 6 months they will wait, and after 6 months they will be taking up the order for revision. So after 6 months and within 3 years from adjudication order. So what is the maximum time limit by which the revision order should be passed? 3 years from adjudication order. And while counting these 3 years, 2 points should not be taken. What are those 2 points? Same point even for adjudication order we discussed. That is, if the stay is granted, that stay period should not be considered. And if the similar proceeding is pending in any court, so that also, that period till the period of outcome also we should not consider that. Quickly read that. When the issuance of revision order is stayed by the court, in 3-year period it should not be taken. Time spent in the appeal under similar issue in tribunal or high court or supreme court, that also should not be taken. Then generally what will be considered as the date of filing appeal? Why is it relevant? Because we need to file the appeal within 3 months, otherwise we need to apply for condonation of delay. So what is the time limit of filing appeal? 3 months. What is the date of filing appeal? Suppose if the adjudication order has been passed by the officer and they already uploaded the copy in the portal, so whenever you submit the form, appeal form, when you submit, that date itself is the date of filing appeal. Suppose if the adjudication order copy is not available in the portal, then you submit the appeal form, plus you also required to submit the copy of the adjudication order. So whenever you submit the copy of the adjudication order, you need to check, is it within 7 days from the date of submission of appeal form? Yes, then in that case, the date of submission of appeal form itself will be taken as the date of appeal. Suppose if you have not submitted the order copy, which order copy? Adjudication order copy, within 7 days, then as and when you submit the order copy, that date will be taken as the date of filing appeal. So see this, date of filing appeal. Suppose if the copy, adjudication order copy already available in the portal, mostly 80% of the cases it will be available in the portal, unless the order is passed by the SGST officers. So because CGST officers will upload the copy in the portal, then date of provisional acknowledgement means when you will get provisional acknowledgement, as and when you submit the form you will get the provisional acknowledgement, that will be taken as the date of filing appeal. Suppose order of the adjudication authority is not uploaded in the common portal, you need to submit the copy of the order. What is the time limit within which you need to submit the copy of the order? Within 7 days from filing the appeal form, then the date of provisional acknowledgement will be taken as the date of filing appeal. Okay. Then suppose if you have not submitted within 7 days, whenever you are actually submitting, date of submission of the copy shall be considered as the date of filing appeal. Mostly in MCQ they can test this point. And next, can we withdraw the appeal? Of course, we can withdraw the appeal. And why we will withdraw the appeal? Maybe certain cases it so happens that we admitted a big amount. For example, 10 lakhs is the order. We admitted 8 lakhs and disputed 2 lakhs. But actually we should not admit 8 lakhs also. So thereafter our consultant is telling, sir, why you admitted 8 lakhs? You should not have admitted 8 lakhs. If you admit 8 lakhs, court will not discuss about 8 lakhs. Anyhow you admitted na, so court will not discuss about 8 lakhs. Now we need to withdraw the appeal and again make a fresh appeal. In that fresh appeal, now we will tell that entire 10 lakhs is in dispute, because the moment when you admit means you have to pay, and the court will not discuss during the appeal stage about this 8 lakhs which is admitted. So they will discuss only about the disputed tax. So therefore we will withdraw the appeal. So can we withdraw? Yes. Before issuance of notice or order, whichever is earlier. Notice or which notice? That's what. Whenever appellate authority want to enhance, there will be one notice that will be given by the commissioner. Either that notice or order, that is appellate order, whichever is earlier. So maybe withdrawn any time. Suppose if they have given a final acknowledgement, a final acknowledgement has been given means withdrawal of appeal shall be subject to appellate authority. We need to request them, and within 7 days they will decide whether to withdraw or not. Once it is withdrawn, again we need to make a fresh appeal. But when we make a fresh appeal, that fresh appeal date will be taken for the counting of the 3 months and 6 months, etc. The fresh appeal date will be taken. Fresh appeal can be made pursuant to such withdrawal subject to time limit of filing the appeal. Clear? So this is about appeals, and on appeals mostly we get short note questions only, okay, or else on this pre-deposit computation they may coin a question. Mostly it will be like theory question. Otherwise it will be on that pre-deposit they can coin one question. That pre-deposit area alone you need to remember, okay. And not that every attempt they are asking a question on appeals, like once in 3 attempts like that they will be asking. So don't worry about this appeal chapter, not that important. In today's discussion whatever we have made so far, so that offences and penalties is important, and even in the demand and recovery also. So that circular we have seen na, if 73, 74 comes, 122 subsection 1 will not come. On that only they will be coining questions, okay. Fine, we'll take a break and then we will continue with the remaining aspects. Okay, we'll start. So as we have completed all the category A topics, so now we will see even some other topics also you have seen. So all other pending topics we will complete in GST now. So look into the first segment, basic concepts of GST. There is nothing in this, you already know all these things. So what is the effective date of implementation of GST? 1/7/2017. And what are the taxes which got subsumed into GST? All indirect taxes levied by central government except customs duty got subsumed into GST. Whether CVD got subsumed into GST? Yes. And whether SAD also got subsumed into GST? Yes. And what are the specific state government levies which got subsumed into GST? 6 state government levies. What are they? Value added tax, advertisement tax, luxury tax, entertainment tax, lottery and betting tax, and purchase tax. These are the 6 indirect taxes levied by state government that got subsumed into GST. Can you give me some indirect taxes which are levied by state government not got subsumed into GST? Professional tax, local body tax or municipal taxes. So all local authority taxes also not got subsumed into GST. So entertainment tax or other indirect taxes levied by local authorities not subsumed in GST. And India is following single GST model or dual GST model? Dual GST model. And we adopted this dual GST model from Brazil and Canada. And what is the importance of constitution amendment related to GST? As GST requires both central government and state government to levy, so there is a need of changing the constitution. So constitution amendment has happened in the year 2016. And GST Council is the common decision making body of GST, and GST Council derives its powers from Article 279A of the Constitution. And who will be the members of the GST Council? There will be one Union Finance Minister and State Finance Ministers and Union MP in charge of revenue. So Article 279A of the Constitution, constituted by President of India. Union Finance Minister is its chairman. Basically it is a decision making body under GST. How many members will be there? 33 members. And State Finance Minister and MP of State Affairs in charge of revenue are its members. And what is a quorum? 50%. And then central government vote will have 1/3 weight and state government vote will have 2/3 weight. And in order to take a decision, how much of majority that is required? Simple majority or weighted majority? Weighted majority. That too, how much? 3/4. So weighted majority required to take a decision, 3/4. And types of GSTs you know. So CGST levied by central government on intrastate, SGST levied by state government on intrastate, UTGST levied by central government on intrastate, but if the supply takes place within the union territory, and IGST levied by central government on interstate. And usually in case of IGST, 50% will go to the consuming state or union territory if there is a consuming state. Suppose if the consuming state is a union territory without state legislature, then in that case entirely it will be retained by the government, just the account transfer will be made. And then GST compensations is levied by central government in order to recover the GST on some notified goods. That amount will be payable as compensation to the states on account of the loss suffered by them on account of implementation of GST. And what is the date up to which GST compensations will be applicable? Up to 31st March 2026. So remember 31st March 2026. And IGST levied by central government, and 50% out of that is transferred to state based on place of supply. What if the place of supply cannot be ascertained? It shall be apportioned between the states based on turnover of the supplier during the financial year. That is apportionment of IGST. And we have supply divided into intrastate, interstate. Already we know what is intrastate: location of supplier, place of supply in the same state or same union territory. Interstate, two different states, two different union territories, a state and a union territory. And state of Jammu and Kashmir is now divided into two union territories, that is Union Territory of Jammu and Kashmir, which is considered like a state, and Union Territory of Ladakh, which is like union territory without state legislature. What are the 5 union territories without state legislature? Ladakh, Andaman and Nicobar, Lakshadweep, Chandigarh, Daman, Diu, Dadra, Nagar Haveli. For these 5 union territories, only one act is there, that is UTGST Act. So Union Territory of Dadra, Nagar Haveli and Union Territory of Daman Diu got merged into single union territory. And then GST network. GST network is nothing but the common portal which provides the infrastructure, IT infrastructure for implementation of GST. So they will facilitate filing of returns, registration, payment of taxes, IGST settlement, etc. And these are the activities of GST network. Actually, they have removed this chapter in your CA final and they kept it as an appendix. So segment 1, that is chapter 1, is actually supply, okay, and but this may be MCQ somewhere, it may be coming, that's why we have discussed this. Hardly we spent 10 minutes in this. Now look into supply under GST, segment 2. So what is the taxable event under GST? Supply. And this supply is divided into 3 aspects. Supply includes, supply excludes, and activities which are classified into goods or services. Supply includes is given in 7 subsection 1, supply excludes is given in 7 subsection 2, read with schedule 3. There are 3 schedules. Schedule 1 talks about activities which are treated as supply even though without consideration. So we need to refer to 7.1c. And then schedule 2 talks about classification of supply into goods or services, 7 subsection 1a. And schedule 3, list of activities which are excluded from supply, 7 subsection 2. And 7 subsection 3, government is having power to reclassify supply of goods into service and vice versa, but practically we don't have any notification in this regard. And 7 subsection 1, supply includes 7.1a. 7.1a is what? Any activity for consideration in the course or furtherance of business, and that activity can be in the nature of debts RLL, that is D for disposal, barter, license, lease, rental, sale, transfer, all kind. But not only these activities, any activity will be coming under 7.1a. 7.1aa is any activity or transaction between a person other than individual and its members, and it should be for a consideration. And here between the members and the associations it will be applicable. Person other than individual will be HUF and its members, and firm and its partners, company and its shareholders. Between them it will be coming under 7.1aa. 7.1b is import of services, for consideration or without consideration? For consideration. Is it in the course or furtherance of business? May or may not be in the course or furtherance of business. Whereas 7.1c read with schedule 1, 4 activities. What are the 4 activities? DRIP. D for disposal of business asset on which IT is availed. R for related party transaction including transaction between distinct persons, and next I for import of service from a related person or another establishment located outside India, and it should be in the course or furtherance of business. Last, principal agent transaction, but principal agent transaction only for goods and where the agent is acting on behalf of principal. Then suppose if an activity is covered under 7 subsection 2, what is that you will write? It is not a supply. And suppose if it is not covered in 7 subsection 2, also not covered in 7 subsection 1, then also the said activity is not a supply. So these are the few definitions we need to know. Goods is defined under section 2 clause 52, service under 2 clause 102, business under 2 clause 17, and consideration 2 clause 31, and person definition 2 clause 84. And 7 subsection 2 talks about exclusion from supply. What are the activities which are excluded from supply? Spelled slow. Yes, for sovereign functions of government. Sovereign functions of government means all activities of government other than Department of Post, transportation of goods or passengers, airport or port, and services to business entities. So remaining activities are excluded from supply. Only these 4 activities are covered under supply. A for actionable claims other than, P for post. What post? Government post, constitutional post, and nominated post. A for actionable claims other than specified actionable claims. So specified actionable claims are covered under supply, that is HC block. Horse racing, casinos, betting, then lottery, online game, money gaming, and gambling. And then next we have legal fees. L for legal fees collected by court or tribunal, but only legal fees collected by court or tribunal is excluded from supply, but any other activity of the courts or tribunals will be covered under supply. And if it is provided to business entity, the business entity is required to pay GST under RCM. L for land sale. Land sale always excluded from supply. Even building is also excluded from supply, provided the entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. If part consideration before, part consideration after, it is covered under supply. If entire consideration also before completion certificate, it is covered under supply. And then next we have E, employee to employer in the course of employment. D, death related activities, funeral, burial, crematorium, mortuary, including transportation of deceased, that is PAL. Slow, in that yes, sale on high seas, that is when the goods are being imported, before the goods are imported into India, I transfer the document of title to some other person. That some other person is going to clear the goods. So due to that reason, whatever money that I have collected will be excluded from supply. That is yes. Then L for liquor license. Liquor license granted by state government. State government will be giving license to sell the liquor, for which they will collect a license fee. That is also excluded from supply. For example, if I got the liquor license, I transfer the liquor license to you for some 40 lakhs. Whether this is also excluded from supply? No. Only liquor license granted by state government is excluded from supply. Then O for outside the country movement of goods. That is, seller of the goods is in India, buyer of the goods in India, but the goods are originating outside India and terminating outside India, as the goods are neither entering India or not leaving India. That's why it is not covered under supply. Last, warehoused goods under custom. That is, I have imported the goods, I deposited the goods in the warehouse and I got the warehouse receipt. That warehouse receipt I am transferring to you. So now you are going to file the bill of entry, ex-bond bill of entry, and clear the goods. So whatever money that I have collected will be excluded from supply. Then next one, gifts point. So gifts by employer to employee. What should be the value of the gift? It should not exceed 50,000 per annum per employee. Then it is not a supply. What if the value of gifts exceed 50,000? Entirely it will be treated as supply. And as this gift entirely treated as supply, can they take ITC on the inward supplies? Yes, generally inward supply is, inward supply distribute as gifts or pre-sample is blocked credit. But if the gifts or pre-samples constitute supply, then they can take ITC with respect to that. And next, CBIC circular related to the exclusion, that is sale of land. Usually there will be sale of developed land. So what a developer will do, they will buy the agricultural land or the industrial land or any land, and they will do the development and they will construct the plots. They will divide the plots and they will lay down the roads and they will do leveling. They will fix the electrical lines or they will fix the pipelines, water supply lines, and they will be selling this developed plot. Now they will be collecting two types of consideration, one for land, one for development charges. That sale of land will be excluded from supply, but the amount towards development charges, whatever they collect, will be covered under supply. What if this development charges is absorbed in the sale of land? That is, they are together selling the developed land for some amount. Then in that case, it is excluded from supply. That is the CBIC circular. Next point, usually employer giving gift to the employee beyond 50,000 is supply. What if that particular product is specified under the employment agreement? Then it will come under perquisite. When it is a perquisite, don't check value. Whatever may be the amount that is given by employer to employee as a perquisite, then it will be excluded from supply because it will come under salary, and employee to employer in the course of employment is excluded from supply. But when it is perquisite, it should be covered under the salary of a document, then only it will be called as perquisite. So that is another circular. Perquisite provided by employer to employee in terms of contractual agreement entered into between them will not be subject to GST when the same is provided as per the terms of the contract. Then next one, so 7.1a, nature of supply, any activity, consideration should be present in the course or furtherance of business. Generally, all the supply activity should be seen from whose perspective? Supplier point of view. But only in one case it should be seen from recipient point of view. Which case? Import of services. So wherever we get import of services, that we need to see from recipient point of view. Why import of goods is not given under section 7? Because import of goods is a taxable event under customs. That's the reason why import of goods and export of goods is not given under section 7, but import of service is given. What is the difference between import of service in 7.1b versus import of service in 7.1c? Import of service in 7.1b for consideration, but 7.1c without consideration. 7.1b whether or not in the course or furtherance of business, but 7.1c should be in the course or furtherance of business. And there are two places, whether or not in the course or furtherance of business it will become supply. What are the two places? 7.1b import of service and 7.1c disposal of business asset. I am purchasing a business asset on which ITC avail. That business asset is disposed of, and whether this disposal is in the course or furtherance of business or not, it will always be supply under 7.1c. For all cases in 7.1c, consideration is not necessary, but it should be in the course or furtherance of business. Then in 7.1c, principal agent transaction, what is the subject matter of discussion? Is it goods and service or only goods? Only goods. For 7.1c, disposal of business asset, only goods. And for related party transaction, it will be either goods or services, but import of service specifically only services. And next, meaning of goods. Goods defined under section 2 clause 52. What is the meaning of goods? Goods divided into 3. Goods means any kind of movable property, and goods includes two things: actionable claims and growing crops are things attached to a forming part of land agreed to be severed under a contract of supply. Whereas goods excludes what? Money and securities. Money and securities is not only excluded from goods definition, but it is also excluded from services definition. and therefore money and securities are neither goods nor services. Whereas in case of services, if you see what is the meaning of services, anything other than goods, and service includes what? Transaction in money for a separate consideration. Suppose if transaction in money is without consideration, then it is neither goods nor services. But if the transaction in money is for a separate consideration, that separate consideration will be coming under services. Same way, transaction in securities neither goods nor services. But if the transaction in securities, that is a person is facilitating or arranging transaction in securities like stockbrokers or depositories, etc., they will be coming under supply of services. Then actionable claims means any instrument which satisfies 4 conditions will be called as an actionable claim. What are they? So you have right to receive a benefit or right to recover a debt, and that right is transferable and it is legally enforceable, and the holder of that right is entitled to receive the benefit or recover the debt. So these actionable claims, some actionable claims are covered under the money definition like bill of exchange, then promissory note and bearer check. These are covered under money definition, as money is excluded from both goods and services. So therefore actionable claims which are covered under money definition is neither goods or services, and other actionable claims are treated as goods, but in that also only this HC block is covered under supply and all others are not a supply. Then here we need to understand what is the meaning of money. Money means either Indian currency or foreign currency or any instrument recognized by RBI. But currency do not include, that is money do not include currency held for numismatic value, that is old coins. So therefore whenever there is a sale of old coins, is it covered under money? No. Due to that reason, is it covered under goods? Yes. And it will become supply and chargeable to GST. Same way, sale of cryptocurrency. Cryptocurrency is not recognized by RBI, so it will not come under money. So sale of cryptocurrency is treated as supply of goods and it will be chargeable to GST. And the specified actionable claims are treated as goods or services. All specified actionable claims are treated as goods. I told you, no, all actionable claims will be treated as goods. So specified actionable claims are treated as goods. Now in that case, you will get a doubt. Sir, whenever I am importing specified actionable claims, that is online money gaming, then it should be import of goods. Import of goods means I need to pay customs duty. Now why am I paying GST? Because there is a carve out. So which says that in Customs Act itself they have given clearly that on import of specified actionable claims there won't be any customs duty, only IGST will be applicable. So say this. Important points relating to specified actionable claims. So online gaming versus online money gaming, you need to know the difference. Online gaming means game on the internet, and where the objective is not to earn and all, just the game on the internet or any electronic network, and includes online money gaming. But online money gaming means what? In which players deposit money or money's worth in the expectation of winning monies or money worth, including virtual digital assets. So whether or not its outcome or performance is based on skill or chance or both. So whether that game is game of skill or game of chance or both. So for example, certain games are there which are related to game of skill. So only if you have skill you can play that games. So then some games are game of chance. Even if you don't have skill also, as a chance you can play. So but both are covered under online money gaming. But what happens? You deposit some money and in expectation you get some money. And this is the point I was referring to. The central government has notified that the supply of online money gaming as the goods on import of which integrated tax shall be levied and collected, and not in accordance with the provisions of Customs Tariff Act. So even though it is goods, but Customs Act is not applicable in that case. Then meaning of consideration. Consideration is defined under section 2 clause 31. Consideration means what? Either monetary or non-monetary amount, and consideration excludes subsidy from central government or state government or refundable security deposit. And monetary means either payment received or receivable. Non-monetary can be in the form of goods or services. But subsidy from central government, state government not treated as consideration. That's the reason why in value of supply, subsidy from CGST will not be included in the value. Same way, refundable security deposit also not treated as consideration. What if it is a non-refundable security deposit? That will be treated as consideration. And consideration can be received from any person, either from the recipient or from any other person. But the presence of consideration is only relevant. For example, in case of one warranty example, the Toyota dealer has provided the free after sale service but recovered the money from the manufacturer. but consideration is present on the transaction and they have to pay GST. And consideration should be in respect of, in response to, or for the inducement of supply of goods or services. In respect of means this much money I have to collect for the services or goods. In response to means I am not quoting any amount, but whatever recipient pays for that is coming under in response to. Or for the inducement means he is giving me some money and making me to provide the goods or services, that is inducement of. All these three things will be coming under consideration. And activity without consideration is not a supply, and consideration without activity is also not a supply. Example for consideration without activity is donations. So donations will not be treated as supply, provided against that donation we don't have any obligation to do anything in return. So basically donations are divided into two: conditional donation, unconditional donation. Conditional donation means against that donation I have an obligation to do something in return, and that will become supply under 7(1)(a), and this donation will become consideration in the hands of the person who is receiving that donation, because he has an obligation to do something in return. Whereas unconditional donations means the person who is receiving the donation is not having any obligation to do anything, means that unconditional donation is not treated as consideration, consequently it will not become supply. Now display of donor name, whether display of donor name is conditional donation or unconditional donation, whether he insisted to display the name or not. If he insisted to display the name, then it is a conditional donation. If voluntarily out of gratitude if they display the name, then it will be unconditional donation. And suppose if we are displaying the name and that gives business advantage to the donor, then it is deemed to be conditional donation. So for example, if you display the name of the person, donated by Mr. Rajaram, proprietor, Rajaram Associates, like that, so whenever it is mentioned, then it will be like a conditional donation treated as consideration. So if donor name displayed anywhere in the premises, against donation, not obligated. Display of name does not give business advantage to the donor, not a supply. If display of name gives business advantage to the donor, it will be supply. And what it will be treated as, sir? It will be treated as sponsorship services. So therefore, if the recipient is body, corporate or firm, it will come under RCM. If the recipient is other than body, corporate or firm, then it will be coming under FCM. And meaning of person, already you know. What is the meaning of person? The same meaning of person under Income Tax Act: individual, HUF, AOP, BOI, artificial juridical person, company, body, corporate, everything same. Plus central government and state government is also person under GST. And meaning of business, we need to understand the general meaning of business, that is trade, commerce, manufacture, profession, occasion, adventure, wager or any other similar activity. But remember, whether it's incidental or ancillary also coming under business, yes, incidental or ancillary also coming under business, irrespective of the volume, frequency, continuity. Even if it is only one transaction, it will be coming under business if it is done with the business motive. And then whether or not for a pecuniary benefit, monetary benefit may be or may not be present in the transaction, it will be coming under business. And there are some specific activities which are always treated as business, that is entry tickets. All entry tickets is business. And holding an office which is accepted by a person in the course or furtherance of his trade, profession or occasion. And supply of goods or service in connection with commencement or closure of business. At the time of commencement of business or closure of business, if I supply any goods, assets, etc. and all, that is also business. And provision of facilities by association to its members. So for a consideration, that is anyhow supply under 7(1)(a), that is also business. And any activity of race club, including betting activities and all activities of government. These are the specified activities. Literally every activity is business activity only, unless it is a personal effect. Okay, unless it is a personal activity, everything will be treated as business. Almost everything is covered here. And meaning of related, already we discussed. Total 9 transactions we have. Such persons are officers or directors of one another's business. So that is, in my business I am appointing you as officer or director. In return, your business you are appointing me as officer or director. Now we both are treated as related. In this, one important point you need to remember is that director of a company and the company is also treated as related. And such persons are legally recognized partners of the firm. Say for example, there is a partnership firm. So A, B, C and co. A and B are related, B and C are related, and A and C are related. Such persons are employer and employee. Employer and employee also treated as related. And then fourth point, there are 2 companies in which there is a common shareholder. The common shareholder is holding 25% or more. Now those 2 companies are treated as related. Then one company directly or indirectly control the another. Control is not defined in GST. Control generally means investment more than 50 or majority common board of directors are controlling the operations. And both of them directly or indirectly controlled by a third person, means 2 companies which is having a common holding company. These 2 companies are also treated as related. Then 7th point, together they control a third person. For example, X Limited invested 28% in Y Limited. sorry, in A Limited, and Y Limited invested 30% in A Limited. So 28 plus 30, that is 58%, more than 50%. So therefore X Limited and Y Limited together control A Limited and they are related. They are members of the same family. So family is not defined or defined. So family means spouse and children of a person, whether or not dependent. Then brothers, sisters, parents and grandparents of that person, if they are wholly and mainly dependent on that person. Then sole selling agent also treated as related. Now the meaning of related, whatever we learn in GST, the same meaning is applicable even in customs. Okay, same in customs, except that, write down, except that 0.4, 25% replaced with 5%. So all these points are there even in Customs Act also. So except that in point number 4, two companies with a common shareholder holding 25% or more makes those two companies related na. In that place in customs it will be 5%. Okay. So 25% replaced with 5%. But remaining definition will be same. So in customs also, when you are getting a related, because in customs we will definitely have a related point, because if the importer and exporter are related, so then we will not go for transaction value and we will determine the value as per identical goods, similar goods, etc. So there the related point can be tested. So same definition. Then next one, meaning of various supplies, we know that. So what is the meaning of zero rated supply? Export of goods or services, supply of goods or services to SEZ. What is non-taxable supply? Goods or services which is not liable to tax. That is alcoholic liquor for human consumption and petroleum products. What are the 5 petroleum products? Crude oil, petrol, diesel. Which diesel? High speed diesel. Then aviation turbine fuel and natural gas. Exempted supply. What is the meaning of exempted supply? For the purpose of payment of GST, notified as exempted, nil rated and non-taxable. What is the meaning of taxable supplies? So goods or services which are chargeable to tax, which means whether taxable supplies includes exempted supplies? No. So supply of goods or services divided into two. Chargeable to GST is taxable supply, not chargeable to GST either because it is nil rated, notified for non-payment or non-taxable. These 3 will come under exempted. So due to that reason, taxable supplies do not include exempted supplies. Then what is the meaning of aggregate turnover? Aggregate turnover includes taxable supplies, non-taxable supplies, zero rated supplies, exempted supplies, everything. And aggregate turnover always compute on all India basis. And in aggregate turnover it excludes inward supply on which tax is payable under RCM and CGST, SGST and compensation cess. At the end of this book I have given meaning of various turnovers. So we have come across turnovers in different places. So you can see that here. First, aggregate turnover for determining the eligibility for registration, same, that is it will be computed. So for the current year or previous year, definitely it will be computed for the current year. What and all will come? Taxable supplies will come, exempted supplies will come, non-taxable supplies will come. But inward supplies under RCM will not come in the aggregate turnover for registration, and GST also will not come. What about the old indirect taxes? Old indirect taxes will be included. Old indirect taxes will not be included only in one place, that is for the purpose of ITC and ISD. So reversal of ITC and ISD, there only old indirect taxes will not be taken, but otherwise old indirect taxes will be taken. And then interest on loans advance also will be coming, but interest on loans advances will not come in composition scheme only, and interest on account of delay in receipt of consideration also will come. And this aggregate turnover is usually computed on what basis? All India basis. Whether we do it for the current year or previous year, current year. Interstate supplies also will come. Pre-registration turnover not applicable because this is required for the purpose of registration. So now only we are checking the registration. Then what is the difference between aggregate turnover for determining the eligibility for registration versus aggregate turnover for determining the eligibility for composition scheme? What is the difference? Tell me. Already we know interest on loans, advances, deposits will not be coming, and even pre-registration turnover is included, and we need to compute it for the previous year, not for the current year. Am I right? So these are the adjustments. So if you see here, what is the adjustment you can find? So interest on loans, advances, deposits will not be coming, and which will be computed for the previous year, and pre-registration turnover will be included. Are you understanding this? So just highlight that so that you will know what are the differences between the aggregate turnover to this turnover. Then this point already we discussed. What is the difference between aggregate turnover to turnover for computing 10% limit? What is the difference between that? Aggregate turnover and for turnover 10% limit. Usually aggregate turnover is on all India basis, but this turnover will be computed state wise, remaining information and all will be same. And what is the difference between turnover for determining 10% limit versus turnover for payment of GST under composition scheme? What should be the difference? So you should not have non-taxable supplies, and even you should not be having this pre-registration turnover, and interstate supplies should not be there. Whether it will be computed for the previous year or current year, and remaining points and all will be same, correct or not? Then what is the meaning of taxable turnover for payment of GST under composition scheme by a trader? For a trader, what will be the difference here? In case of trader, what will happen is that, so they will be taking only taxable turnover, so exempt supplies will not be coming, okay? Exempt supplies will not be coming, and remaining points and all will be same. Am I right? Then next here, what is the meaning of turnover for computing reversal of ITC and distribution of ITC by ISD? Actually, this we need to compare with the aggregate turnover, but here everything as per aggregate turnover is same, but except that old indirect taxes will not be coming. So this point already we discussed. Old indirect taxes will not be coming, and then here we need to do it registration wise. And what is the period? Current month. Current month only we need to take in case of ISD, and in case of ISD, what is the turnover ratio? So previous year or previous quarter. This is the change. And then interstate supplies also will be coming. Pre-registration turnover not applicable. Then last, turnover for computing refund of unutilized ITC, net ITC into zero rated turnover by adjusted total turnover is there na? In the adjusted total turnover, exempt supplies will not come. Exempt supplies will not come, and remaining and all will be same as aggregate turnover. Last two you compare with aggregate turnover. You compare with aggregate turnover, okay? And difference is that exempted will not come, and here also it will be registration wise, and we need to do it for the current month, okay? Clear here? This is the entire GST where and all we come across turnovers. I just gave it in one place, okay? Then coming back to this, so we saw what is the meaning of aggregate turnover. Look into GST on sale of flats and buildings. This also we have discussed. Suppose if entire money is received before completion certificate, GST payable or not? Yes, and it will not be treated as construction services, it will be treated as works contract services, not sale of immobile property. Suppose if entire consideration is received after obtaining completion certificate, GST payable or not payable? Not payable, it is excluded from supply, and it will be treated as sale of immobile property. If part money is received before completion certificate and remaining amount after completion certificate, whether GST will be payable on the entire amount? Yes, GST will be payable on the entire amount, and the nature will be works contract service. And first occupation is the date on which flat is occupied by a buyer in the project, that is deemed to be the completion. And what is the meaning of distinct person? There are two meanings of distinct person. One is one registration of a person to another registration of a person is distinct person, or one registration of a person in the state to another establishment in the other state, even though not registered, will also be coming under distinct person. So every registration of a person to another registration. So between two registrations, it is a distinct person. I have a registration in Tamil Nadu, but I don't have registration in Karnataka. Why I don't have registration in Karnataka? Because I am making only exempted supplies there. If I am making exempted supplies there, I don't have to register there. Now I have an establishment in Tamil Nadu, establishment in Karnataka, but establishment in Karnataka is not registered. Even then it will be coming under distinct person. So registered establishment of a person in the state and unregistered establishment of that person in another state will also be treated as distinct, okay? Then say this, when a person is required to obtain more than one registration, if a person is doing multiple businesses in different states, separate registration with respect to each state is mandatory. What if he is doing businesses in the same state but in different place of business? Separate registration with respect to each place, that is optional. And what if he is doing multiple business in the same state, in the same place of business? Can he obtain separate registration? No, he cannot obtain separate registration. So another establishment in another state, whether registered or not registered, is treated as distinct person. Then what is the meaning of recipient? if consideration is involved in the transaction, the one who is liable to pay the consideration. For example, I enter into contract with holding company to provide the services to the subsidiary company. I am actually providing service to subsidiary company, but I have a privity of contract with the holding company, which means who is my recipient? Holding company, because the one who is liable to pay consideration is treated as a recipient. Suppose if consideration is not involved in the transaction, then to whom I am supplying goods or supplying services, that person will be taken as the recipient. Then once an activity becomes supply, we need to classify that activity into goods or services. So for that you see the first point, movable property. When movable property will come under goods, if there is a transfer of title, that title should be transferred at present or at a future date. Either at present or at a future date it will be treated as goods. And suppose if there is a transfer of right to use, then it will be treated as supply of services. And immovable property will never come under supply of goods, because goods excludes immovable property. Goods means only movable property. And then services, so if there is a construction of immovable property or a transfer of right to use immovable property, then it will be coming under supply of services. IPR, when IPR will come under supply of goods, if there is a permanent transfer of IPR. If there is a temporary transfer of IPR, it will be coming under supply of services. Carrying out process on the goods belonging to other person. So you are supplying the substantial material, you are my recipient. Recipient gives the substantial material and supplier undertakes the process, then it will be coming under supply of service, like a job work or any other process. Whereas if the supplier only supplies the substantial material, do the process and deliver, then it will be coming under supply of goods. If the substantial material required for the process is supplied by supplier only, then it will be supply of goods. If the substantial material required for the process is supplied by the recipient, then it will be coming under supply of services. And supply of goods along with services, we need to check whether it is notified activities or other activities. If it is notified activities, we need to see, is it works contract, information technology software, or supply of food. These three, even though it involves both goods element and service element, always it will be treated as supply of services. And other activities we need to classify based on composite supply, mixed supply. If the principal supply is supply of goods, entirely it will be treated as supply of goods. Example, ACN installation is principal supply, and the principal ACN installation is composite supply, and the principal supply is AC, which is goods. So entirely it will be treated as goods. Whereas in coaching and study material, if it is a composite supply, the principal supply is coaching, which is service, so therefore entirely it will be treated as supply of service. But if it is a mixed supply, see the highest rate. If the highest rate is goods, entirely it is goods. If the highest rate is service, entirely it will be service. Apart from that, any other activity will be coming under supply of service. Balancing figure, doing an act, not doing an act, or tolerating an act. Then what is the meaning of works contract? Works contract is always in relation to immovable property, keep that in mind. Works contract is never in relation to movable property, it is in relation to immovable property. A contract involving transfer of property in goods as well as supply of service in relation to immovable property against a single consideration. Then job work is carrying out process on the goods belonging to other person, but the other person should be registered person. Only then it will be called as job work. If the other person is not registered person, don't call it as job work, just call it as some supply of services. And composite supply versus mixed supply, section 8. So far what we have seen is section 7. Section 8 talks about composite supply, mixed supply. First of all, section 8 will come into picture when there are two or more supplies involved in a transaction. And composite supply, mixed supply, we need to see the differences. So in composite supply, first you need to see whether there are two or more supplies in a single transaction. If it is no, section 8 is not applicable. Yes, there are two or more supplies in a single transaction, whether all are taxable and naturally bundled in the ordinary course of business, and principal supply is identifiable. If these three conditions are satisfied, it will be coming under composite supply. In composite supply, all the given supplies should be taxable and naturally bundled in the ordinary course of business. All are taxable or not, easily it will be given in the question itself. And principal supply identifiable or not also, it's given in the question, because the predominant element in the transaction is known as principal supply. But the real confusion we get in the exam is that whether they are naturally bundled or not naturally bundled. So simply we can assume that majority of the cases, see actually exceptions will always be there, but majority of the cases one cannot be supplied without the another, then it will be naturally bundled. For example, laptop and laptop bag, usually laptop and laptop bag will be together, so therefore it is naturally bundled. But exception will definitely be there, because sometimes when we buy the laptop we will not get the laptop bag, but that side you should not see the most probable side. Same way in case of renting of furniture, that is in case of renting of furniture, coolers, etc., they will only do the transportation. So this is naturally bundled in the ordinary course of business. Then in case of accommodation, the complimentary breakfast is also naturally bundled. So these are all some examples, but exceptions will definitely be there in every case, but we need to see the most probable side. That is about the naturally bundled. Naturally bundled means what, pa? One cannot be supplied without the another. If all these three conditions are satisfied, what is the nature of that supply? Composite supply. Once it becomes composite supply, what we need to do? See the rate of principal supply and apply it on the entire transaction. If any one condition is not satisfied, then it is not a composite supply, and you need to check only one condition. What is that? Is it for a single price or separate price? If it is for a single price, then it will be called as mixed supply. If it is for separate price, then it will be neither composite supply. First, it is not a composite supply. So you are checking single price. It is not even single price. Then it will be coming under individual supplies, and we will take respective rate for the respective supply. For example, popcorn plus Coke given as a combo. Popcorn and Coke, even though taxable but not naturally bundled, so it will not come under composite supply. So is it for a single price? Yes, it is for a single price. Therefore, it will be coming under mixed supply, and the highest rate should be taken. Suppose if there is a transportation of passenger by airlines plus food provided by the airlines, is it composite supply or not? Not a composite supply, because it is optional for you whether to go for food or not. So therefore, it is not a composite supply. Okay, will it come under mixed supply? No, because this food is not given for free as a part of the ticket. So it is not for a single price, separately you are paying. So therefore, it is neither composite supply nor mixed supply. So it will be coming under individual supplies. One more circular is there related to this, that is important. Whenever you are purchasing food in a theatre, whether the rate of GST on the food will be 5% or the rate applicable to the theatre 28%. Usually in case of theatre, the rate of GST is 28%. But the food which is sold inside the theatre, the rate of GST will be 5% only. Suppose there could be three situations. Situation number one, you book the ticket, then you go to the theatre and you buy the food. What is the rate of GST applicable to the food? 5%, and the theatre will be 28%. Don't apply composite supply point here because it is not naturally bundled. Second situation, at the time of booking the ticket itself in the Book My Show, the next screen will be order food. So therefore, food also you have ordered. Now in this case, whether you apply the composite supply logic? No. Reason being, it is not naturally bundled. So therefore, the theatre will be taxable at 28% and the food still will be taxable at 5%. But sometimes the ticket, along with the ticket, we will get the food free. So in some costly theatres like 1,500, 2,000 and all will be the ticket price, where they will be giving the food also free. In that case, can we apply composite supply point? Yes, naturally bundled, and that food also will be taxable at 28%. Is it clear? So that is this note 2. Food and beverages purchased in a theatre taxable as individual supplies, taxable at the rate applicable to restaurant, and if the same is purchased along with the ticket, then it may attract composite supply. In such case, food and beverages taxable at the rate applicable to entry to cinema hall. Then next, in case of servicing of cars, so whenever there is a servicing of cars, for that also they have created one exception, that usually for servicing of cars, they will only supply the material and they will only charge the money for replacement of parts. Actually, it is coming under composite supply, but they are telling you treat it as individual supplies and take the respective rate. So the test of composite supply should not be applied. Parts replaced and labor charges for replacement are treated as individual supplies if the amount is shown separately for each. So if there are two or more supplies which is not a composite supply and also not involving single price, then these are treated as individual supplies and taxable accordingly. You understood your composite supply and mixed supply? Now look into some important circulars involved in this supply chapter. So whether interstate movement of various modes of conveyances for carrying goods or people will be treated as supply or not a supply if it is between distinct person. So from one distinct person to another distinct person, a vehicle which is carrying goods or people, on the vehicle there is no GST payable, it is not a supply. Point number 2. If that vehicle is sent from one distinct person to another distinct person for repairs or after repairs, that is also not a supply. Third point, if we are carrying from one distinct person to another distinct person any spares, tools or parts not for further supply but for consumption in the distinct person, then also it is not a supply. There are three activities between distinct person not treated as supply. What are those three things? Number 1, movement of conveyances between the distinct person carrying goods or passengers or both, or for repairs or maintenance, not a supply. Then next one, movement of what? Movement of rigs, tools, spares and all goods on wheels. So not for further supply but for consumption in the distinct person, that is also not a supply. But this circular is given in the context of interstate movement, but the same point can be even applicable in case of intrastate movement. Then when an agent will be acting on behalf of principal, already we know that when agent will be called as acting on behalf of principal, if the agent is raising invoice in his name, he is acting on behalf of principal. Suppose if the agent is giving invoice in the name of the principal, then the agent is not acting on behalf of principal. Then whether printing activity is treated as supply of goods or supply of services. In the printing activity, what is the goods element? Paper and ink is the goods element. What is the service element? Printing and binding is the service element. Now in this case, if printing constitutes principal supply, then it is supply of services. If the paper constitutes principal supply, then it will be supply of goods. For example, book. In case of book, what is the principal supply? Printing only, not the paper and ink. Therefore, it will be supply of services. Whereas in case of tissue papers, what is the principal supply? Paper, but not the printing. So it will be treated as supply of goods. Then whether the activity of bus body building is supply of goods or service is determined based on what is principal supply involved in the transaction. And whether rethreading of tires is supply of goods or supply of services. In rethreading of tires, suppose if I get the old tire from you and I am doing rethreading, means I am doing a process where the old tire belongs to you, so it is supply of service. If I buy the old tire from you and does the rethreading and then give the rethreaded tire, then it will be coming under supply of goods. Priority sector lending certificates are issued by one bank to another bank in order to meet the priority sector lending target. So that bank which is giving the priority sector lending certificate, so it is treated as supply of goods, but usually trading in PSLC is covered under RCM for 2017. So the liability to pay GST is on the recipient. And always PSLC, trading in PSLC should be treated as supply of goods and chargeable to IGST because it is a deemed interstate supply and RCM will be applicable. Usually when the artwork is sent by the artist to the art gallery, the date on which it is sent to the art gallery is not a supply, but the date on which art gallery subsequently sells to a buyer, that date only treated as sale in the hands of the artist. Then tenancy rights or pagadi system. Usually tenancy rights or pagadi system, whenever the tenancy premium is received by the tenant, the tenancy premium received by the tenant will always be taxable. But the tenancy premium received by the property owner, the taxability depends upon the property rent. If the rent of the property is taxable, tenancy premium received by the property owner also taxable. If the rent of the property is exempted, the tenancy premium received by the property owner is also exempted. Then GST on director remuneration. Already we know that if TDS is deducted under 192, then it will be coming under salary. So means the director is an employee, so there is no GST, consequently RCM will not be applicable. But if the TDS is deducted under 194J, then that will not be treated as salary in the hands of the director, so it will become supply and liability to pay GST is on the recipient, that is company. And no claim bonus is not treated as consideration because it should be treated like a discount. And interest received by a del creditor agent. Suppose if del creditor agent is only issuing invoice, means whatever interest that is collected by del creditor agent is on account of delay in receipt of consideration, so that should be included in the value and chargeable to GST. If del creditor agent is not issuing invoice in his name, but the principal issues the invoice, whatever interest that is collected by del creditor agent is on account of interest on loans, advances, deposits, and it will be exempted. Then next one, whether owning controlling interest in the form of shares by a holding company and subsidiary company is supply of services. What happens is that there is a holding company and a subsidiary company. Now holding company is purchasing some shares from the subsidiary company. Whether this activity will be treated as transaction between related parties and chargeable to GST? No. First of all, the transaction in securities is neither goods nor services. Due to that reason, there won't be any GST on that. Then this food and beverages in cinema hall point already we discussed. So these are the basic aspects. I just rushed it because this is not important, and in exam by seeing the question itself you know all these things because you would have studied this in detail. All beginning chapters and all you will give lot of importance. So it's like beginning, no, very interest will be there and you will read. So that's the reason why this revision is enough. This summary revision is enough. Then look into time of supply. So actually these are all intermediate topics. That's the reason why at CA final level that much importance will not be given, but it does not mean that we can skip this and go for exam. Okay, so we should read. That's why I am quickly discussing this. While discussing, if you are able to recollect, super. If you are not able to recollect, everything is going as a bouncer, better you please prepare again these chapters. Okay, whenever I am discussing, this is common to everyone, I am telling. When I am discussing this in a revision manner, if you are able to cope up with that, so yes, it is flashing. So whatever I am discussing, it is flashing in your mind. Superb, you are on the right track. But when I am doing it in a discussion revision manner, suppose, sir, I did not understand what you are telling, then it's time you have to focus, that means take the book and read in detail. Okay, then, but we have ample time. That's why I am doing it very much in advance. So this is the first time I am doing very much in advance. Usually I will do 1 month before exam only. Somewhere in October first week only I will be doing. But this time I am doing very much in advance because, so you know, students were asking me, sir, please do it well in advance so that we know what are all the areas we need to focus, etc. and all. That's why. Okay. Then say this. Time of supply, section 31. So in time of supply chapter, there are total 4 sections. Section 31 which talks about what is the due date of invoice, section 12 which talks about time of supply in case of goods, and section 13 talks about time of supply in case of services, and section 14 time of supply in case of change in rate of tax. So first section 31 we need to know what is the due date of invoice. Total 6 points we have. Section 31 subsection 147 deals with goods. Subsection 1 is normal cases. Subsection 4 is continuous supply of goods. Subsection 7 is sale on approval or on return basis. In case of sale on approval or on return basis, what will be taken as the due date of invoice? We should see 6 months from the date of removal or date of acceptance by the recipient, whichever is earlier. Suppose within 6 months he accepts, whenever he accepts we need to give invoice. Suppose if he is not accepting even after 6 months, immediately on expiry of 6 months we need to raise the invoice. Then in case of continuous supply of goods, what is continuous supply of goods? There will be successive supply of goods for which the payments are settled on a periodical basis. So we need to see whether the payments are received based on account statement or irrespective of account statement. If the payments are received based on account statement, then the payment account statement date will be taken. If the payments are received ad hoc without account statement, then the payment received date will be taken. As the case may be, it's not whichever is earlier. It's not payment date or account statement date, whichever is earlier. If the payments are based on account statement date means if the amount is mentioned in account statement date, otherwise the payment received date. Then normal cases, we need to check supply involves movement of goods or supply does not involve movement of goods. If supply involves movement of goods at the time of removal, that is the due date of invoice. If supply does not involve movement of goods at the time of delivery. But whenever you are writing the due date, don't write the due date alone, you write on or before like that. On or before the date of removal, on or before the date of delivery like that. Because due date means that is the final date, but you can give the invoice even before that also. Then in case of services, we have subsection 2, subsection 5 and subsection 6. Subsection 2 normal cases, subsection 5 continuous supply of services, and subsection 6 cessation of services. In case of cessation of services, whenever abruptly we stop providing the services, immediately upon cessation we need to raise the invoice with respect to that component which is to be retained by us. We need to raise the invoice. Whereas in case of continuous supply of service, what is the meaning of continuous supply of service? A service which takes more than 3 months to complete and it should involve periodic payment obligation. Just because it takes more than 3 months, it is not a continuous supply of service, and just because there is an installment facility, it is not a continuous supply of service. Both the conditions should be satisfied. It should take more than 3 months to complete and it should involve periodic payment obligations. In case of continuous supply of service, 3 aspects we need to check. Number 1, whether the due date of installment is given in the contract. Yes, then the due date of installment itself is the due date of invoice. Suppose if the due date of installment is not given in the contract, but the installment is connected to completion of an event, whenever we complete that event, the date of completion of event is the due date of invoice. Suppose if nothing is there, whenever we receive the installment, that is the due date of invoice. Whereas in normal cases, we need to see banking sector or insurance sector, the due date is within 45 days from the date of completion. In case of all others, it will be 30 days from the date of completion. So this is the due date of invoice, and due date of invoice we should check definitely while determining the time of supply, because the time of supply provisions, many places we are coming across the due date. And in case of time of supply, total 7 points that you need to remember. First, you need to see time of supply in case of goods under FCM. then time of supply in case of goods RCM, then services FCM, services RCM, then vouchers, residual cases, interest on account of delay in receipt of consideration. Last 3 points are actually common for both goods and services, that is the vouchers, residual cases, interest on account of delay in receipt of consideration. So look into the first point. So that is 12 subsection 1, 13 subsection 1, nothing. Liability to pay GST depends upon the time of supply. What is the objective of time of supply? 3 objectives are there for time of supply. Number 1, to determine the due date of payment of GST. So when should I pay GST depends upon the time of supply. If the time of supply for a transaction falls in this month, by next month 20th I need to pay the taxes. Okay. Then next one, we have to determine the exchange rate depending upon the time of supply. That's what we saw in section 34. The exchange rate prevailing on the time of supply notified by CBIC or GAAP will be taken. Also for rate of GST, on which date whatever rate may be there, but on time of supply whatever is the rate of GST, that only should be taken. So determine the due date of payment of GST, determine the exchange rate, and determine the rate of GST. And this section 12 subsection 2, time of supply in case of goods FCM, what should be taken? Divide into 2. That is in case of specified actionable claim and composition scheme. What is the time of supply for goods? Due date of invoice, actual date of invoice, or date of payment, whichever is earlier for 2 people. That is in case of specified actionable claims and in case of composition scheme. Due date of invoice, by when it should be given, actual date of invoice, when it is actually given, or date of payment, whichever is earlier. So GST payable on advances or not? Of course yes. In case of others, GST not payable on advances because the time of supply is only due date of invoice or actual date of invoice, whichever is earlier. Whereas in case of services FCM, you need to see whether the invoice is issued within the due date or not issued within the due date. If the invoice is issued within the due date, then we will be taking, so invoice date or payment date, whichever is earlier. If the invoice is not issued within the due date, then we will take completion date or payment date, whichever is earlier. And therefore, whether GST payable on advances here, no doubt, because date of payment is one of the date for determining time of supply, so we need to take. Then in case of goods RCM, we have 3 provisions, and always RCM we need to see from whose perspective, the time of supply, recipient point of view. So the date on which recipient has received the goods, the date on which recipient is making the payment to the supplier, or 31st day from the date of invoice, whichever is earlier should be taken. Whether GST payable on advances, yes, because date of payment is also one of the date. Whereas in case of services RCM, first point we don't have, the date on which payment is made to supplier, instead of 31st day it will be 61st day from the date of invoice. Here also GST payable on advances. Then in case of vouchers, residual cases, and interest on account of delay in receipt of consideration, this is common between goods and services. First, for vouchers, we need to see whether the voucher is identifiable voucher or non-identifiable voucher. Identifiable voucher means we will redeem that voucher against a particular product or service that is mentioned in the voucher. That is identifiable voucher. The date on which the voucher is issued, that date itself is treated as time of supply, and the GST will be payable. What if the voucher is not redeemed? At the time of issuance of voucher itself, they have already paid the GST. If the voucher is not redeemed and the product or service is not purchased, then in that case, unnecessarily they paid GST, they will be getting the refund with respect to that. Whereas in case of non-identifiable voucher, against which product or service it will be redeemed will not be mentioned. Just the amount will be mentioned in the voucher. It can be redeemed against purchase of any product or service. So the date of redemption will be taken as the time of supply. And what if it is not redeemed at all? Time of supply shall not arise. Then in case of residual cases, that is residual cases mainly applicable in case of evasion. So whenever a person is trying to evade taxes and the department identifies, now they need to recover the taxes. For that they need to know what is the time of supply for the transaction. So suppose if he is required to file the return, the due date of filing return will be taken. Who is required to file return? Registered person. The due date of filing return is the time of supply. Whereas if he is an unregistered person, not required to file return, as and when he actually pays tax, that date itself will be taken as the time of supply. Then 12 subsection 6, interest, late fee, etc. as and when it is actually collected. Remember, interest is taxable on what basis? Receipt basis. Generally everywhere in GST it is taxable on accrual basis, but in case of interest, late fee, penalty, it is taxable on receipt basis. Then some additional points. Usually what will be taken as the date of payment? In case of supplier, the date on which they have entered in the books of accounts, or date of credit in their bank account, whichever is earlier. Same way, parallelly from recipient point of view, the date on which they have entered in the books of accounts or date of debit in their bank account, whichever is earlier, will be taken. Whether GST payable on advances in case of goods covered under FCM? Yes. Yes or no? Yes, in case of composition scheme and specified actionable claim. But for others, it is no. But in all other cases, GST payable on advances. Then, in case of service also, GST payable on advances. But for 1000 rupees, if the advance is up to 1000 rupees, we have a relief. That is only for services. Suppose if I raise an invoice for 12,200 rupees, but you have paid 13,000. So I received 800 rupees extra. For this 800 rupees, so either I can pay GST in this month itself, because invoice or payment whichever is earlier is this month, I can pay this month itself, or for this 800 extra, whenever I am raising invoice in future, at that time I can pay. So I have two options. Either I can take the time of supply as the date of invoice for this extra amount, or normal provision, that is invoice or payment whichever is earlier. But this is applicable only in case of services, and that too if the excess amount is up to 1000 rupees per invoice. Okay. What if the excess amount is beyond 1000 rupees per invoice? This option is not there. We need to go by the normal provision, that is invoice date or payment date whichever is earlier. Then in case of transaction between associated enterprises, associated enterprises defined under section 92A of the Income Tax Act. So between associated enterprises, any transaction that takes place, that is import of services, supplier is located outside India, recipient is in India, it is actually RCM. Service RCM, what is the point? Date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. But between associated enterprises, usually invoice will not be there. That's why what they are telling, date on which payment is made to supplier, retain, and B, 61st day, instead of 61st day from date of invoice, they are telling date of entry in the books of the recipient, whichever is earlier. So therefore, time of supply shall be date of entry in the books of recipient, or date of payment to supplier, whichever is earlier. And then when the goods are taken outside India for exhibition, is it supply or not a supply? Not a supply. And therefore, whether we will treat it as zero rated supply? No. Why we will not treat as zero rated supply? Even though it is export, goods taken from India to outside India is export of goods. Even though it is export of goods, it is not a zero rated supply. Reason being, so it is taken outside India for exhibition. First, to become zero rated supply, it should be a supply. And as the goods taken outside India is not a supply, it is not a zero rated supply. But if the goods are not returned within 6 months from the date it is taken outside India for exhibition, then the deeming fiction will come under 31 subsection 7, sale on approval or on return basis, and immediately on expiry of 6 months we need to raise the invoice. So when goods are taken outside India for exhibition is not a supply, but when the same is not brought back within 6 months, it is deemed to be supply. Then last, section 14. Section 14 talks about time of supply in case of change in rate of tax. To whom this section 14 will be applicable? To all service providers this section 14 is applicable, and in case of goods only for composition scheme and specified actionable claims only it will be applicable. For normal good suppliers this will not be applicable, because for normal good supplier always the time of supply will be due date of invoice or actual date of invoice, whichever is earlier. Okay, and also for RCM cases, section 14 is not applicable. Section 14 is applicable only in case of FCM cases. Okay, that is outward supplies only, not for the inward supplies. And in case of outward supply, I have to raise invoice now. For me only it will be applicable, and to whom it is applicable, that clarity you should be having. To a service provider and to supplier of goods who is under composition scheme or making specified actionable claims. We need to first check whether the supply is before change in rate, that is completion is before change in rate, or the completion is after change in rate. That is the first aspect you need to freeze in the question. So whether the completion is before change in rate or the completion is after change in rate. If the completion is before change in rate, don't see anything, always invoice or payment whichever is earlier will be taken as the time of supply. Suppose if the completion is after change in rate, then you need to check whether both invoice and payment before or one before one after. If both invoice and payment is before, then whichever is earlier. If one before one after, then it will be whichever is later. Understood? And here what should be taken as the date of payment? Usually what will be taken as the date of payment? Date of entry in the books or date of credit in the bank account, whichever is earlier. But they have given one twist here. Suppose if the payment is credited within 4 working days from the change in rate, then only date of entry or date of credit whichever is earlier. If the payment is not credited within 4 working days from the change in rate, then the date on which it is actually credited in the bank account, that only will be taken as the date of payment. Understood here? That is this part. Now let's see some questions related to this in the solve workbook. After place of supply, before place of supply? Before place of supply. Yes, see this question. This question number 35. So one student is asking, sir, can you give all the amendments applicable for November 24 in one PDF? Actually, November 24, we don't have any amendments. Okay, whatever amendment for May 24, the same will be applicable for November 24 also. Okay, so you don't have to read anything else except for one or two simple points which I said, that is actually negligible. Okay, then conduct MCQ videos also. I'll try, definitely. I said that in my batches I will definitely do, but first revision we need to do and then only MCQ, because we cannot learn through MCQs. Okay, MCQ is for testing. Okay, so definitely I will do that. Sir, I remembered almost all section numbers, but I am scared while writing act which is related to that section. Better IGST Act section numbers you leave. IGST Act section numbers you leave. Only CGST Act section numbers you remember, so that every section number that you are writing in GST will be CGST Act only, no confusion. Okay, if you are having confusion between CGST Act or IGST Act sections, forget, leave it, throw it, and only CGST Act section numbers you remember. So by default, if you are writing a section number in the answer sheet, it will be of CGST Act only, and GST custom, that difference you will be knowing now. That difference you will be knowing. That is enough. See this question number 35. Messrs. Houseful Convention Hall is in the business of letting out its hall for functions. It provides you with the following information for determining the amount of refund out of advance received based on the time of supply for one of its clients. Now this is the data. Advance paid at the time of booking the hall for function from 1st to 3rd November 16/7/2020, additional deposit paid 18/8, and function is held as scheduled from 1st November to 3rd November. Invoice is issued, taxable value 25/11 for 2,50,000. Consider that there is a change in rate of tax from 15th October 2020 from CGST 2.5, SGST 2.5 to CGST SGST 9%, 9%. What would be the amount of refund payable to the client? First, actually this question is related to change in rate, because there is a change in rate. For this change in rate, we need to determine what is the time of supply for this transaction. To determine the time of supply for this transaction, what is the first aspect I asked you to check? Check whether this is before change in rate, completion is before change in rate, or the completion is after change in rate. Function is held on 3rd November, but there is a change in rate with effect from 3rd November, but there is a change in rate with effect from 15th October. So therefore the supply is after change in rate. Okay, now we need to see what is the date of invoice. What is the date of invoice? 25/11, before change in rate or after change in rate? After change in rate. And what is the date on which payment is received? The payment is received before change in rate. On two dates the payment is received, that is on 16/7 and 18/8, that is before change in rate. I told you, in case supply is after change in rate, if both invoice and payment before change in rate, whichever is earlier, if one before, one after, whichever is later. Which is later? 25/11 is later. So therefore, what is the time of supply in this case? 25/11/2020. As on 25/11/2020, what is the rate that is prevailing? Old rate or new rate? New rate. So therefore, what is the rate of GST? 9%, 9%, that is 18%. What is the taxable value? What is the taxable value? 2,50,000. So 2,50,000 into 18%. So how much it will come to? 2,50,000 into 18%, that will be 45,000. So which means, what is the total amount? 2,95,000, but already we collected 3 lakhs from that person in total, correct? So therefore already 3 lakhs collected, but we have to collect only 2,95,000. So what is the excess amount collected? 5,000. That 5,000 will be the refund. You understood? And suppose if they make a question like this, what would be the differential amount, if any, payable or receivable from the government if GST already paid on advance? If GST already paid on advance, what is the differential amount payable or receivable from the government? So what is the advance already collected? 3 lakhs. And at the time when we collect the advance, what was the rate of GST? 5%. So 3 lakhs into 5 divided by 105, that will be 14,286. 286 we would have already paid. But what is the liability? 45,000. So minus 45,000, which means that 30,714 rupees, 30,714 rupees still we have to pay. Even though on advance we have paid, still we have to pay, because the effective tax will be 45,000. Maybe like that also they can modify a question. Okay. Then one more question we will see. Related to change in rate, because mostly change in rate will only be tested in exam, because if at all they are asking a question on time of supply, section 12 and 13 was intermediate portion. So on that they will not ask a standalone question, but that information will be useful for doing the 14 marks question. But a standalone question, if you are getting on time of supply, that will be on section 14. Okay. See this. Already one type of question we saw. This is another type of question. Mr. Mahendra Sharma, an interior decorator registered at Ahmedabad, Gujarat, provided services to one of his clients, XYZ Company Limited, registered at Pune, Maharashtra. The provision of service was completed on 10/8 and the payment received was entered in the books of Mahendra Sharma on 11/8. With effect from 16/8, applicable GST rate was increased from 5% to 12%. So they have changed the rate, that is increased. Rate has been increased from 5% to 12%. What is the effective date from which it has changed? 16/8. However, the payment for the service received was credited in the bank account on 17/8 and the invoice for the same was also raised on 23/8. So first, what is the effective rate, change in rate? Change in rate with effect from 16/8, and what is the date of invoice and date of completion and date of payment? We need these three datas. Date of invoice is what? 23/8. 23/8 is the date of invoice. Date of completion, when the service got completed, 10/8. The service got completed on 10/8. And what is the date of payment? See, whether the payment got credited within 4 working days or not, we need to see. When the payment got credited in his bank account, 17/8. Is it within 4 working days from 16/8? Yes. So within 4 working days from 16/8, the payment got credited. So what should be taken as the date of payment? Entry date or credit date, whichever is earlier. What is the entry date? So the books was entered in the books on 11/8. So 11/8 or credit date 17/8, whichever is earlier. So which is earlier? 11/8. Okay, 11/8. And that is the data. Now you need to determine what is the time of supply. Whether the completion is before change in rate or after change in rate. Completion is before change in rate. Whenever the completion is before change in rate, always it will be invoice or payment, whichever is earlier. Correct or not? So completion, see there, completion is before change in rate here. Completion is before change in rate. So always we need to take invoice or payment, whichever is earlier. Which is earlier? 11/8/2000 will be the earlier date. As on that date, what rate is there? Old rate. So 5% will be applicable. Is it clear? So the time of supply will be 11/8 and the rate will be 5%. Now see the another part in this question. Would your answer undergo any change in the above case if the payment was credited to the bank account on 14/8 instead of 17/8? So payment credited 14/8 means even it is before the change in rate itself, then also the answer will be same. There is no change in the answer. Suppose, what if the payment got credited in the bank account, okay, on somewhere like 31/8/2000, then 31/8/2000, then what will happen? Payment got credited on 31/8. As a payment not credited within 4 working days, so we need to take the date of payment as the date of credit. Now, in this case, what will be taken as the time of supply? Invoice or payment, whichever is earlier. Still the same time of supply. Still the same time of supply provision, because the completion is before change in rate. Invoice or payment, whichever is earlier. So, invoice or payment, whichever is earlier is what? 23/8. 23/8, what is the rate that is prevailing? New rate. So, therefore, we need to take 12%. Like this also they can coin a question related to change in rate. Understood? So, that is with respect to this. And place of supply we completed, value of supply we completed. Look into invoice, debit notes and credit notes. Take page 104. Okay, see this. Tax invoice. So, there are various documents involved in GST. So, in this chapter, invoice, debit notes and credit notes, we have section 31 related other provisions. So, that section 31 related other provisions are like what are the various documents, e-invoice, dynamic QR code invoice, etc. and all. Okay. So, therefore, we will complete this and then take a break. Okay. Fine. Because only when we are hungry, we will be able to control our sleep, and because the moment when you are not hungry, you will not, because this chapter is full dry only. That's why we will try to complete this now. Okay. See this. Tax invoice. Who will be giving tax invoice to whom? Supplier will give tax invoice to recipient. But in one case, recipient will give tax invoice to supplier. When? RCM. And if the supplier is unregistered. So, if the supplier is unregistered, recipient will issue in case of RCM. Otherwise, always invoice will be given by supplier to recipient only. In case of taxable goods or services, time limit already we discussed. So, that 6 provisions we discussed, time limit, due date of invoice, that will be applicable. Then bill of supply. Who will be giving bill of supply? 2 people. A registered person. Registered person. Okay. Not a normal person. All these provisions are applicable to registered person only. A registered person who is making exempted supplies. Sir, why he will be registered, sir? First of all, because if he is making both taxable supply and exempted supply, definitely he will be registered. For taxable supply, he will give tax invoice. For exempted supply, he will be giving bill of supply. Or a person opting for composition scheme will also be giving bill of supply. Who will be giving it to whom? Generally, supplier to recipient. What is the time limit for bill of supply? Actually, there is no separate time limit for bill of supply. Whatever is the time limit applicable for tax invoice, the same time limit is applicable for bill of supply also. Then next, invoice come bill of supply. So, if a person is making B2C supply, concentrate, B2C supply, then if he is making both taxable and exempted, instead of giving separate document for tax invoice and bill of supply, he will be giving a consolidated tax invoice come bill of supply. A registered person is supplying taxable as well as exempted goods or services to an unregistered person. Okay. And who will be giving it to whom? Supplier only will be giving it to recipient. And what is the time limit? Same time limit of tax invoice, that only will be taken. But we have an exception here. In case of low value supplies, what is low value supply? Less than or equals to 200 or less than 200? Less than 200. Neither tax invoice nor bill of supply is required to be issued. But what are the conditions? 3 conditions. Condition number 1, that is it should be a B2C supply. Condition number 2, recipient do not require tax invoice. Condition number 3, at the end of the day, a consolidated invoice should be prepared with respect to all these low value supplies. And in case of multiplex theatres, even if it is a low value supply, invoice is always required to be issued, and in that case e-ticket is deemed to be invoice. Then debit note and credit note given in section 34. So, when the debit note will be given? Whenever there is an increase in invoice value. First tell me, who will be giving debit note and credit note in GST? Always debit note and credit note in GST will be given by supplier to recipient. So recipient shows what balance in supplier books? Debit balance. If the debit balance increases, when the debit balance will increase, when the supplier is collecting extra amount from the recipient beyond the invoice value, the debit balance will increase. So therefore the name of the document will be debit note. Whenever the recipient balance decreases, means the debit balance decreases, means he will make a credit. So what are the cases where he will be making the credit? Whenever he gives the discount or any other benefit, then in that case credit. So the name of the document will be credit note. So when there will be debit note, two cases. There is a taxable value which is more than invoice value, or the actual tax is more than tax as per invoice. For that a debit note will be given. And whenever debit note is given, what will be the consequence to the supplier? The liability of the supplier will increase. Where debit note should be reported by supplier? GSTR1 and GSTR3B. And whenever his liability increases, what will happen to the recipient? As the debit note is reported by supplier in GSTR1, it will be coming to the recipient in GSTR2B, and the recipient can take ITC based on this debit note. As debit note is also one of the tax paid document for availment of ITC, so he can avail the ITC. Is there any time limit for issuing debit note? No, because debit note lead to increase in the liability. Even after 50 years, 60 years also he can give the debit note, because it is increasing the government's revenue. Then credit note. Credit note, when it is to be given, four cases: when the taxable value is less than the invoice value, or when the actual tax is less than the tax as per invoice, or in case of sales returns, or in case of deficiency in the quality. But remember, in case of bad debts, credit note cannot be issued. Okay. Also, in case of discount, if the recipient is not reversing the ITC, the credit note cannot be issued. Okay. So credit note will be issued in these cases. And whenever credit note is issued, what will happen to the supplier? Liability will be reduced. So the credit note should be reported by supplier where? In GSTR1 and GSTR3B. His liability will be reduced. As he reported in GSTR1, this data will be made available to the recipient in GSTR2B, and the recipient should reverse the ITC. Clear? And is there any time limit for giving credit note? Yes. As there is a loss of revenue to the government, so there is a time limit. What is that? 30th November of the succeeding financial year, or date of filing and return, whichever is earlier. Also, debit note is shall, credit note is may. You understood? Debit note compulsorily it should be given. If at all you are collecting extra amount, you have to give shall. Revenue. So shall. Whereas credit note, loss of revenue, may. If you want to give, otherwise also not required. Okay. Suppose if the supplier has not issued the credit note, is there any alternative available? Yes. Concentrate. If the supplier, for example, 1 lakh I collected plus GST 12,000 I collected, 1,12,000 I collected. Now, if I am not giving you credit note, but refunded full 1,12,000, so very good person I am actually. I have not given credit note, but refunded 1,12,000 fully. Then in that case, I have the burden. Yes or no? I have the burden, so I can go for refund. Yes, I can go for refund. That is refund on account of excess payment of tax. When such situation will arise, the time limit for giving the credit note is expired. In that case, the supplier returned the full amount to the recipient, but the supplier is having the burden of tax. So therefore, refund of excess payment of tax category, the supplier will claim the refund. Is it clear? Suppose if the supplier has returned only 1 lakh but retained 12,000, when the situation arises, maybe supplier do not want to give credit note, or the time limit to issue the credit note is over. Then in that case, the burden of tax is on the recipient. In that case, the recipient also can claim the refund under GST. You connect that point? Then, so credit note cannot be issued in case of bad debts. And next, revised tax invoice. When revised tax invoice will be coming into picture, say I am liable to get registered with effect from one date, but I cannot recover the GST immediately from my recipient, but I have to pay GST liability. With effect from one date, when I am liable to get registered, from that date, I have to pay GST on my outward supplies, but I cannot recover GST from my recipient. So whenever I get the registration certificate only, I can recover the GST. So from the date I am liable to get registered till the date of registration certificate, on these outward supplies, I cannot recover GST as and when supplies are made. So I will be giving a revised tax invoice at a later point of time, that is after registration. But what is the time limit within which I should give revised tax invoice? Within 1 month, within 1 month, and I need to recover the GST. You understood or not? But here it is shall or may. Revised tax invoice is not shall. Revised tax invoice is may. So because sometimes B2C transaction, recipient will not be paying the tax. So recovery of tax may not arise. So due to that reason, they did not use the word shall. Now, in this case, one important condition is there. I can give revised tax invoice only if the application for registration is made within 30 days from the date I am liable to get registered. Because the effective date of registration, if the application is made within 30 days, the date on which I am liable to get registered. If the application for registration is not made within 30 days, the date on which I got the registration certificate is only taken. So therefore, in case if the application is not made within 30 days, revised tax invoice cannot be issued. What is the time limit for revised tax invoice? Within 1 month. Then, so highlight this, may issue. Okay, it is not shall, it is may issue. Receipt voucher. Receipt voucher, whenever advance is collected by the supplier from the recipient, some evidence should be given by supplier to recipient, for which supplier will be giving a receipt voucher to the recipient. But there is no condition like to be giving it, the receipt voucher need not be given if the payment is collected after invoice. The payment is collected before invoice, that is only called as advance. For that only they are telling. But if the payment is collected after invoice, may or may not be given. But if the payment is collected before invoice, definitely the receipt voucher should be given. And what is the time limit? Time limit not specified, means immediately upon collecting the advance, that receipt voucher should be given. And payment voucher, so in case of RCM only payment voucher will be coming. That is, whenever recipient is making payment to supplier, the recipient will be giving a payment voucher to the supplier in case of RCM. And next, refund voucher. That is, whenever supplier collected the advance and on that advance some GST would have been paid or not paid. Now, when the advance is to be returned, that is supply is cancelled, then the supplier will be giving a refund voucher. But remember, invoice is not yet prepared. What if invoice is already prepared? Then the name of the document is not refund voucher, it will be called as credit note. Okay. So refund of advance receipt and invoice is not yet generated. So then if the amount is refunded after invoice, then the credit note shall be issued by supplier to recipient. Delivery challan, in which case delivery challan, easily remember, whenever there is a movement of goods without supply. Whenever there is movement of goods without supply, the name of the document will be delivery challan. Example, goods sent on job work, or sale on approval or on return basis, or sale of like sending goods from head office to branch office in the same state for which no separate registration is obtained, like that. Then whether we need to mention the details of recipient in the invoice. Generally, we need to mention the details of recipient in the invoice. However, we have a relaxation in one place. That alone you remember. If the value of supply is less than 50,000, if the value of supply is less than 50,000 and it is a B2C transaction, other than services through e-commerce operator, OIDR services or OMG services, then recipient details not required to be mentioned. If he insists, we will mention, otherwise not required. Is it clear? So this part alone you need to remember. That is, value of supply is less than 50,000. It is a B2C transaction, and other than services through e-commerce operator or OIDR or OMG services, then recipient details required only if requested by them. Otherwise, everywhere we need to mention the recipient details. B2B transaction, no doubt we need to mention. B2C also we need to mention the recipient details. Then next, invoice in special cases. Usually what is the time limit in case of, what is the time limit in case of invoice? Usually 30 days from the date of completion, and in case of banking sector and insurance sector 45 days from the date of completion. But in case of insurance, banking company and telecom sector, if it is transaction between distinct person, by the end of the quarter the invoices can be issued. So the time limit has been extended at or before the entry in supplier books or the end of the quarter. And already we discussed GST implications on debit note and credit note. So where it should be reported, what will happen to the liability of the supplier and recipient side EC, etc. Then receipt voucher versus refund voucher. See this. So there is a date of invoice. Before the date of invoice, if the payment is received, what is the name of that payment receipt? Called as advance. Supplier shall issue receipt voucher or may issue receipt voucher? Shall issue receipt voucher to the recipient. Whether GST payable on advance or not depends. If it is goods, no need to pay GST on advance. If it is services, GST payable on advance. Suppose if the invoice is issued, means definitely time of supply will arise and GST we will pay. After giving invoice, if the payment is received, is it advance? No. In that case, is receipt voucher mandatory? No. Supplier may issue receipt voucher to the recipient. Same way, if the payment is refunded, if the amount is refunded before the date of invoice, what is the name of the document? Refund voucher. Is that refund voucher may or shall? Refund voucher is may. Supplier may issue refund voucher to the recipient. And if it is goods, they have not yet paid GST on advance, so therefore no refund. But in case of services, they already paid GST on advance, so they will get the refund. This is what we discussed in refund chapter. In case of refund arising on account of refund voucher, so we don't have to prove unjust enrichment. Do you remember that part? Then next, suppose if they are not giving refund voucher, sir, then what will happen? If they are not giving refund voucher, is there any alternative available to the supplier? Yes. Supplier has not issued refund voucher, then the burden is on recipient. Correct? I have not given refund voucher means I have not refunded money to you. If I refund the money to you, I will give refund voucher. If I have not given refund, I will not give you refund voucher. Then the burden is on you. So you can claim the refund. As a recipient, you can claim refund. Burden of GST on advance is on the recipient, and such recipient, even though unregistered, can claim the refund. Then suppose if I prepare the invoice and after preparation of invoice, if the refund is given or the supply is cancelled, what is the name of the document? Credit note. Again credit note, may or shall? May. Means is there alternative for credit note? Yes. Supplier can claim the refund. Say this, option 1, supplier may issue credit note to the recipient, liability gets reduced, or refund can be claimed under excess payment of tax by supplier, or alternatively recipient also can claim the refund. 3 options are there. Then section 32 says that being an unregistered person, you are not supposed to collect GST. If you collect the GST, that is an offense, and the recovery will be made as per section 76. Do you remember? Amount collected as tax. Then section 33 says that tax component should be always shown separately in invoice. Then HSN code in invoice. Usually in invoice we need to enter the HSN details. Suppose if the aggregate turnover during the previous year does not exceed 5 crores, usually HSN is a 8-digit code. First 4 digits need to be entered for B2B supplies. If the aggregate turnover during the previous year exceeds 5 crores, we need to enter 6 digits, let it be B2B or B2C. But service accounting code needs to be entered in case of services, which is always a 6-digit code, and we don't have any relaxation there. So usually HSN is for 8-digit, and if aggregate turnover during previous year does not exceed 5 crores, for B2B 4 digits, aggregate turnover during previous year exceeds 5 crores, for B2B and B2C 6 digit needs to be mentioned. For services it is service accounting code and it is always 6 digits. Then see the last 2 areas that we have in this, that is e-invoice and dynamic QR code in invoice. First, e-invoice is applicable for B2B supplies and dynamic QR code is applicable for B2C supplies. And what is e-invoice? Simple, you are obtaining 3 things from the invoice registration portal for a normal invoice, that is called as a e-invoice. That is invoice reference number, digital signature and QR code. Then it will be called as a e-invoice. And what is the requirement? That is in the sense like to obtain that invoice, what is the need? What is the need of it? To eliminate the fake invoices. Mainly when you obtain the invoice reference number, digital signature and QR code, the recipient will be sure that it is not a fake invoice and his ITC will not be affected. So for that purpose only they have brought in this e-invoice. To whom this e-invoice is applicable? If aggregate turnover, not turnover, aggregate turnover during any previous year from 17-18 onwards exceeds 5 crores, then for B2B supplies they need to give e-invoice. But when dynamic QR code is applicable, first of all, what is dynamic QR code? Simple, that is, we are collecting the money, digital collection, we need to create a QR code, and by scanning the QR code only we need to collect the money. That is known as dynamic QR code. But the QR code that we have in e-invoice versus the dynamic QR code is not same. It is completely different. Dynamic QR code we will generate, whereas QR code is generated by the portal, invoice registration portal. But dynamic QR code, our POS device is there, na point of sale device or swiping machine, that will be generating the dynamic QR code. Generally, whenever you order anything from Amazon, when you select pay on delivery, they will be coming and delivering the product, and they will ask, so whether it is GPay, then they will show you one QR code. When you scan the QR code, amount will automatically come in that. That is called as a dynamic QR code. To whom dynamic QR code will be applicable? If aggregate turnover of a registered person during any previous year 17-18 onwards exceeds 500 crores, then it will be applicable. So see this, aggregate turnover in any previous year from 17-18, it does not exceed 5 crores. So neither e-invoice nor dynamic QR code. It exceeds 500 but does not exceed, it exceeds 5 but does not exceed 500. For B2B, e-invoice. For B2C, dynamic QR code not required. If it exceeds 500 crores, for B2B e-invoice, for B2C, dynamic QR code in invoice. And whenever we are preparing the invoice should be prepared in the prescribed form, that is INV1, and it is optional for taxpayer whose aggregate turnover does not exceed 5 crores. Say my turnover does not exceed 5 crores, but I want to give e-invoice. Yes, I can give e-invoice. And whenever the e-invoice is prepared, it is auto-populated in GSTR1 and e-way bill. And the physical copy of invoices, usually invoices needs to be given in duplicate in case of services and triplicate in case of goods, but that is not required in case when the e-invoice is applicable. And QR code can be produced before the proper officer for verification whenever required. What are the type of transactions for which e-invoice is required? B2B transaction. Let that B2B transactions be covered under FCM or RCM. For B2B transaction, e-invoice is required. Not only for this, even zero rated supplies, that is export of goods or services or supply of goods or services to SCZ, and credit notes and debit notes also B2B. So we need to prepare e-invoice. Then see this dynamic QR code in invoice. So embedding these 5 details when we prepare a QR code, that is called as dynamic QR code. Supplier GSTIN, UPI ID of the supplier, bank account and IFSC code of the supplier, and these 3 are actually static. For every QR code, these 3 things will be same. And invoice number and date will change. Invoice amount with breakup of tax will change. So embedding these 5 details, if we prepare a QR code, that is dynamic QR code. But for UPI ID of the supplier, there is a exception that suppose if the payment is not collected by the supplier but by a e-commerce operator or a courier agency, then that e-commerce operator or courier agency's UPI ID should be mentioned. And for bank account and IFSC code also there is an exception, that is usually if UPI ID is connected to the bank account, then we don't have to mention the bank account. Means the banker is only giving the UPI ID. Means our UPI ID is our bankers. Sometimes there will be third party UPI ID. For example, I have THARUN'S at OK Access, but I don't have bank account in Axis Bank. But then it is not, my UPI ID is not connected to bank account. Suppose if my bank account is HDFC Bank and they give me OK HDFC Bank, then it will be coming under UPI ID connected to bank account. That is the meaning of that statement. Then invoice number and date. Practically in case of retail sales, we cannot enter the invoice number perfectly due to that reason. One serial number if we follow, that is sufficient. And invoice with breakup of value and tax. Suppose if the payment is collected already before preparing the invoice, whether dynamic QR code is required? No. So dynamic QR code is not required. Say this, exception to mentioning dynamic QR code in invoice, if the payment is received before or at the time of generating invoice and cross reference of such payment received is mentioned in the invoice, that is sufficient. No need to prepare the dynamic QR code. So what happens if say 60% of the amount already collected before invoice, now for 40% only I am preparing the invoice, means already 60% collected as advance. Now only for that 40% we need to prepare the dynamic QR code. So part received before invoice and remaining after invoice, then only for the balance amount we need to prepare the dynamic QR code. Also remember, dynamic QR code is not applicable if the payments are collected from a recipient outside India. How it will be recipient outside India? Anyhow for zero rated supplies it will be e-invoice na. So then how it will happen? That is not necessary that always recipient outside India means export of goods or export of services. In case supplier in India, place of supply in India, but the recipient is outside India, it is not an export of service. So e-invoice not applicable, dynamic QR code also not applicable. Why? Because UPI system we don't have outside India, only in India. So they cannot scan and make the payment. So supplier in India, recipient outside India, place of supply in India, and payment in convertible foreign exchange. It is not an export of service, and dynamic QR code not applicable because the recipient who is outside India cannot scan and make the payment. Then there are few cases where e-invoice and dynamic QR code is not applicable even though their turnover exceeds that 5 crores and 500 crores. First you see e-invoice. To whom e-invoice is not applicable? Biggest. B for banking company, I for insurance company, G for government department, GTA, okay. Another G for government department or local authority, E for exhibition of film in a multiplex theater, S for SEZ unit, not SEZ developer, SEZ unit. And then next T for transportation of passengers in any mode. So to these people, e-invoice is not applicable even if their aggregate turnover exceeds 5 crores. And not only for that services, any other service of that person. For example, there is a bank to whom e-invoice not applicable. They give renting of commercial property. For banking operations, e-invoice not applicable. But for renting of commercial property, e-invoice is applicable. No. Once e-invoice is not applicable to that person, for all other activities of that person also e-invoice will not be applicable. See that circular. Whether exemption from mandatory generation of e-invoice is available for entity as a whole or only in respect of certain supplies made by this entity. It is clarified that this exemption is available for the entity as a whole. Entity as a whole. Okay. Then to whom dynamic QR code is not applicable? Remember big toe. Big toe, B-I-G-T-O-E, B for banking company same, I for insurance company same, G for GTA same. But for government department, local authority, they have not given the relaxation. Then T for transportation of passengers in any mode, that is also same. O is extra, that is OIDR supplier located outside India and making supply to non-taxable online recipient in India. E for exhibition of film in a multiplex theater. Then this is the e-invoice process. So first taxpayer will prepare the normal invoice as per his billing system. Then he will be converting that into JSON file and it will be uploaded in the invoice registration portal. First normal invoice, convert to JSON, upload it into the portal. And which portal? Invoice registration portal. That invoice registration portal will do deduplication check to check whether any duplicate invoice is already there, and then they will be creating three things: generate invoice reference number, digital signature and QR code. From there it will be pushed to the GST system and e-way bill system. Automatically GSTR1 of the seller gets updated and GSTR2B of the buyer gets updated, and the buyer can verify the authenticity of these invoices at any time by scanning the QR code or by entering the invoice reference number. And this is the important point which I already discussed in input tax credit. If the supplier is required to give e-invoice but instead gave a normal invoice, the recipient cannot avail ITC with respect to that, even though it reflects in 2A or 2B of the recipient. And there is one amendment here. Sir, by when I should give e-invoice, sir? For a normal invoice, by when I should give e-invoice? There is no time limit. Time limit not specified. But recently they specified the time limit. If your aggregate turnover exceeds 100 crores by 30 days, that is within 30 days from the date of generation of normal invoice, you need to create a e-invoice. But others, maybe 1, 2 months, 3 months, 4 months also you can take. But as a norm, what lot of people are doing is that immediately they are making the e-invoices. But for greater than 100 crores, greater than 5 does not exceed 100, we have time limit, ample time limit. But for those who exceeds 100 crores, for them 30 days. Normal invoice today I prepared means within 30 days I need to upload it in the portal and obtain these three things, that is IR and QR code and digital signature. But practically what I have seen is that immediately on the spot itself they will prepare the invoice and they will be sending. Okay. So that is about this invoice, tax invoice, debit notes and credit notes. And what we are left with is only few topics. Registration. So up to this 11 we completed, and registration, payment process, returns, in that also already few aspects we have discussed. And then this assessment and audit, advanced ruling, ethics and other provisions. Afternoon, happily we will be completing, and even if time permits, we will solve some more questions also in the solve workbook for practice purpose. Okay. So today itself we will complete everything. Super. Thank you. At what time we will meet? 2:30? 3? Why? 5 o'clock we will meet. Okay, we'll start. See this. There are two queries. Sir, vouchers issued by Reliance Trends is non-identifiable. Depends. Usually it will be non-identifiable because all these garments or shopper stop or lifestyle, they will be giving vouchers which can be redeemed against any product. So therefore it will be coming under non-identifiable only. Then, sir, when a person to whom e-invoice is applicable issues a normal invoice and makes supply, will that also lead to penalty under 122 subsection 1? Yes, it's a invoice default. Supply with incorrect details in the invoice. So if e-invoice is applicable, instead gave a normal invoice, that is not called as a valid invoice. That is the reason why even recipient cannot take ITC. Means for the supplier, will the penalty be attracted under 122 subsection 1? Yes, under invoice default the penalty will be attracted. Then, so we'll move on to one interesting area, that is payment process. Page number 124, segment 13. There are three ledgers which are to be maintained by GST network on behalf of every registered person. What are those three ledgers? Electronic liability ledger, electronic credit ledger, and electronic cash ledger. These three ledgers are not maintained by the registered person but maintained by the GST network under section 49 on behalf of every registered person. In the electronic liability ledger, there will be total 5 dues: T, I, P, F, O. T for tax dues, I for interest, P for penalty, F for fees, and O for others. And whatever balance that is there in the credit ledger can be used only for payment of tax dues but cannot be used for payment of other dues. Same way, the balance in cash ledger can be used for payment of both tax dues as well as other dues. How money will be coming into electronic credit ledger? Whenever we avail the ITC. How we will avail the ITC? Through GSTR 3B, or sometimes availment of ITC on closing stock through ITC 1, or availment of ITC so by way of transfer of business in ITC 2, or in case of single registration being separated into multiple registrations, ITC 2A. So this is the way in which ITC will be availed. Sometimes we will get the refund. That refund also will be coming into electronic credit ledger. Why refund? Sometimes there is some excess payment of tax, and that excess payment of tax is partly from credit ledger, partly from cash ledger. When they are granting the refund, that refund will come into proportionate to whatever we have paid. It will be coming into credit ledger as well as cash ledger. Sometimes erroneous refund of tax. So we are claiming erroneous refund, and that refund of ITC we have claimed, and when we pay back that refund, so whatever erroneously we have claimed, then again the credit ledger will be recredited. So anyhow we are going to see that in later part. So refunds will come into electronic credit ledger and it can be used for payment of liability ledger. And how money will come into cash ledger? Whenever you make a deposit. What is that deposit? Through PMT 6 challan, and TDS TCS deducted by the other person, by the e-commerce operator and by the recipient, will also be coming into our electronic cash ledger. And even refunds, this can be used for payment of liability ledger. Here electronic liability ledger will be denoted with PMT1. So form GST PMT1 is a liability ledger, PMT2 is credit ledger, PMT5 is cash ledger, and PMT6 is deposit challan. Whatever balance that is there in the credit ledger and cash ledger, we can claim as a refund. But the balance in credit ledger we can claim as refund only in two cases. What are the two cases? We can claim refund of balance in the credit ledger. Two cases: zero rated supply and inverted tax structure. Only in these two cases we will get. Then special points with respect to electronic cash ledger. What are the various modes of deposit in the cash ledger? Either we can pay through internet banking, debit card, credit card, NEFT, RTGS, cash deposit over the counter up to 10,000 rupees per tax period, and UPI and IMPS. When the payment is debited in our bank account but not reflected into the electronic cash ledger, we have to file one form, that is PMT 7. So PMT 7 is communication to the payment gateway, so that the bank account got debited but not reflected. And suppose if the balances between the minor heads and major heads in the cash ledger, in electronic cash ledger there will be total 20 cells, that is 4 major heads: CGST, SGST or UT GST, IGST and compensation cess. For each and every major head there will be 5 minor heads: tax, interest, penalty, fee and others. So between these cells, if you want to shift the balances, you will be using PMT 9. for transfer of balances between major heads and minor heads in cash ledger, form GST PMT9 is notified. Also, balance available in the electronic cash ledger can be transferred between distinct persons in PMT9. So, one distinct person to another distinct person, we can transfer the balances in the cash ledger. But remember, only CGST and IGST balances can be transferred, but SGST balance cannot be transferred. For example, I have two registration, one in Tamil Nadu, another in Karnataka. In Tamil Nadu, there is a cash ledger. In that cash ledger, CGST, IGST head, whatever amounts are there, that only I can shift to the Karnataka's electronic cash ledger. And can I shift it to SGST head of that particular cash ledger? No. CGST, IGST to CGST, IGST. But SGST cannot be transferred. And CGST, IGST also cannot be transferred to IGST head of that person, that particular distinct person. For example, if you want to make note, you can write this. So, A Limited is having two registrations, that is Tamil Nadu and Karnataka. In Tamil Nadu and Karnataka, they are distinct persons. They have electronic cash ledger. In that electronic cash ledger, they have CGST, SGST and IGST. Same way, in Karnataka also they have electronic cash ledger, CGST, SGST and IGST. Now what happens is that they want to transfer the balances. When they want to transfer the balances, CGST balance can be transferred to CGST or IGST head in the electronic cash ledger of Karnataka. Possible. Okay, that is from CGST to CGST or from CGST to IGST can be transferred. Same way, IGST to CGST. From IGST to CGST or IGST to IGST can be transferred, no issue. Okay, but what cannot be transferred? SGST head cannot be transferred. Also CGST, IGST cannot be transferred to SGST head of the recipient registration. You understood or not? So 2 points you need to remember. What is that? Balance in SGST, balance in SGST cannot be transferred. Cannot be transferred. And balance in CGST and IGST cannot be transferred to SGST head of recipient registration. Is it clear? These 2 points you keep in mind. Balance in SGST cannot be transferred. Balance in CGST and IGST cannot be transferred to SGST head of the recipient registration. CGST, IGST, no restriction, it can be easily be transferred. Okay. But for SGST alone, there is a restriction. And how this transfer can be made? How this transfer can be made? Using PMT9. Using PMT9. So there are two purposes of PMT9. One is to shift the balance from one cell to another cell. But when we shift the balance from one cell to another cell of the same registration, we don't have any restriction. Any cell to any cell we can shift. Even SGST to CGST, CGST to SGST, IGST to SGST we can do within that state. That is within that registration. But when it is from distinct person to distinct person, SGST is a restricted. Okay. Then you understood, Nayar, this part? However, transferor should not have any unpaid liability in the electronic liability ledger. Then special points on electronic credit ledger. Refund from electronic credit ledger is possible only in two cases, that is inverted tax structure that is tax rate on output is less than the tax rate on input, or zero rated supplies. Refund to the original sources ledger, that is sometimes when we pay by mistake some excess tax, and in whichever proportion we have paid. So for example, from electronic credit ledger and electronic cash ledger, we paid in the ratio of 3:2. So then the balance will be reflected into the credit ledger and cash ledger in the 3:2 ratio only. For example, say for the month of July 2024, so my liability GSTR 3B liability is somewhere like 140 lakhs, and how this 140 lakhs I have paid for the month of July. So I have paid through electronic credit ledger somewhere like 100 lakhs, and from electronic cash ledger I have paid 40 lakhs. Okay, so therefore I have made the payment in 10:4 ratio, or in other words 5:2 ratio, correct? So I have made the payment. Now when I made the payment this way, I came to know that in this 140 lakhs there is some excess tax paid. Excess tax paid. What is that excess tax paid? Say 2,70,000 is paid in excess, but this 2,70,000 will be given as refund. So refund is also sanctioned, but how the refund will be given? Refund is also sanctioned, but how the refund will be paid? So refund to electronic credit ledger. How much is the refund to electronic credit ledger? 2,70,000 into 10/14. You understood? 10/14 will go to the electronic credit ledger. How much is that? 2,70,000 into 10/14. That will be 1,92,857 will go to electronic credit ledger, and refund to bank account. How much ever portion we paid through cash ledger, that will be going to the bank account. So 2,70,000 into 4/14. So that is minus this difference. So that will be 77,143 will be going to the bank account. So to give the refund into this electronic credit ledger, they will be using PMT3. Whereas to give the refund into bank account, they will be passing RFD6, usual regular refund order. Whereas in order to give the refund into credit ledger, it will be PMT3. So that is this refund to the source ledger. So whenever where the registered person has claimed refund of any amount as tax wrongly paid or paid in excess, only in these cases, tax wrongly paid or paid in excess, for which debit has been made from the credit ledger, then the said amount, if found admissible, proportionate amount debited from credit ledger shall be recredited to electronic credit ledger by an order in PMT3. Then there is one more form, PMT3A, that is when a person has wrongly claimed the refund of ITC. So see this, there is some balance in ITC. So what is that balance in ITC? That is before refund in the electronic credit ledger. In the electronic credit ledger, on the credit side, we have got some balance of 8 lakhs. 8 lakhs is the balance in the electronic credit ledger. And as and when we claim the refund, when we claim the refund, the electronic credit ledger gets debited. So therefore we are claiming the refund. So when we claim the refund of 5 lakhs, the electronic credit ledger gets debited. Okay. Now what happens is that, what is the closing balance? So there is an opening balance of 8 lakhs and there will be a closing balance of 3 lakhs. Okay, understood up to this? Now we claim the refund, and at a later point of time, so either department came to know that it is an erroneous refund, or we voluntarily have returned that. Okay, so but this is a erroneous refund. When it is an erroneous refund, so we have to pay this or it will be recovered. So it is recovered. So recovered by department along with interest and penalty. What is the penalty? Come on, either 73 or 74. So we have an erroneous refund. Even 122 subsection 1 also is applicable in this case. So recovered by department along with interest and penalty. Now in that case, what is the electronic credit ledger opening balance now? What is a credit ledger opening balance? There is an opening balance of 3 lakhs. Now whenever we are paying this 5 lakhs, so erroneous refund 5 lakhs, that 5 lakhs is recovered by department along with interest and penalty, then they have to give the recredit na. So therefore they will be giving recredit, and that recredit of 5 lakhs will be given. How this recredit will be given? Using PMT 3A they will be giving, so that the closing balance will come to 8 lakhs. You understood how there will be recredit? So tell me, what are the two cases where there will be recredit? First, recredit into electronic credit ledger on account of excess tax being paid, and second, recredit into electronic credit ledger because of erroneous refund which has been recovered. So that is this PMT 3 and PMT 3A. So that is this part. So when a registered person claims erroneous refund of ITC, upon payment of such refund along with interest and penalty, proper officer shall pass an order in PMT 3A for recredit into electronic credit ledger. Then balance in electronic credit ledger can be used only for payment of tax but cannot be used for payment of interest, penalty, fee or others. Also, balance in credit ledger can be used only for payment of GST under FCM. For RCM liability can be used? No. And can the balance in credit ledger be used for payment of arrears of tax? For example, July 2022 I have to pay some tax, and that tax I have not paid at that time. Now I am paying in 2024. Now can I use both credit ledger and cash ledger balance for payment of the arrears of tax? Yes, we don't have any restriction. Even for arrears of tax we can use the credit ledger balance. And can the balance in credit ledger be restricted by the officer? Yes, already we discussed that in rule 86A and rule 86B. In these 5 situations, up to 1 year it will be restricted. What are the 5 situations? Supplier not in existence or not doing business from the place where they have obtained registration. Recipient not in existence or not doing business from the place where they have obtained registration. Or the invoice is missing. Or they have not actually received the goods but they have availed the ITC. Or the supplier has not paid the tax. So up to 1 year it will be restricted, and thereafter it will be released, so we can utilize. While discussing input tax credit I told you this. Then even 86B also we discussed, that is, even though we have sufficient balance in our electronic credit ledger, we cannot utilize it for payment of our liability fully. 1% of our liability we have to pay through cash ledger, and only 99% of the liability we can use from the credit ledger. But what is the condition for that? The turnover in a month should exceed 50 lakhs. While counting the turnover, we will not take exempted supplies and zero rated supplies. Means literally it will be only taxable turnover, and turnover excludes taxes. And these provisions are not applicable to whom? This is not applicable to government and their family members, that is government department, public sector undertaking, local authority and statutory body. What is the point in creating cash flow from them? From one pocket to another pocket only it will go. So due to that reason this provision is not applicable to them. Government department, PSU, local authority and statutory body. Also, if the person has already paid income tax of more than 1 lakh in each of the preceding 2 financial years, then also this 86B is not applicable for the current financial year. Such person or proprietor or karta or managing director or any of its 2 partners deposited income tax of greater than 1 lakh in each of the last 2 years, or if they have received a refund of unutilized ITC, not refund on account of payment of IGST, refund on account of unutilized ITC greater than 1 lakh in the preceding financial year, or cumulatively more than 1%. This point also we discussed. Cumulatively more than 1% up to the current month already they have paid through cash ledger, then for the current month it will not be applicable. What is the formula for doing this? So cumulative cash ledger payment up to the previous month divided by total FCM liability up to the current month into 100. If it is greater than 1%, we don't have to pay 86, we don't have to pay 1% through cash ledger. Rule 86B will not be applicable. Otherwise rule 86B will be applicable. Already we discussed that. Then we are moving on to section 50. So section 49 is what we have seen so far. Section 50. In this chapter we have 4 sections. Section 49 which talks about various ledgers, and section 50 interest on account of delay in payment of tax and wrong availment and utilization of ITC, and section 51 TDS, section 52 TCS. So look into section 50 interest on delayed payment of tax. There are 3 situations where the interest will be applicable. Concentrate. So situation 1, delay in filing 3B. Whenever there is a delay in filing 3B, we need to pay interest on gross liability or net liability? On net liability, not on the gross liability. Means that amount which will be paid through cash ledger. How to compute the net liability? Gross liability under FCM minus input tax credit, add RCM liability, that is known as net GST payable. So on that net liability we need to compute the interest. At what rate interest is payable? At the rate of 18%. From the first date after the due date till the actual date of payment, we need to compute the interest. Okay, this is in the first situation. Whereas second situation, you see, and here what is considered as the date of payment, actual date of filing 3B will be taken. Whereas second, this is on account of delay in payment of tax. GSTR1, 3B, everything we filed, but we did not report the liability at that time. So means it is like a arrears of tax, purely arrears of tax. This pertains to some earlier month, we have not paid in that month, we are paying it now. So invoice not reported in 1 or 3B of a month but paid in the other month. Then we have to pay on the gross liability or net liability? Gross liability. Remember, in case of arrears of tax, we need to pay interest on the gross liability. Compute on the amount paid through both credit ledger and cash ledger, that is on the gross liability. But interest rate will be same at the rate of 18% per annum. And from the first date after due date till the actual date of payment. And what will be considered as the date of payment? Either we can pay through GSTR 3B or we can make payment through DRC 3. Whereas third situation is ITC wrongly availed and utilized. So we need to compute interest only on the utilized component. What is the meaning of utilized ITC? That month in which the balance of ITC falls below the wrongly availed ITC. To that extent, we have utilized the ITC. Compute on ITC utilized, that is the extent to which the balance in ITC falls below availed ITC. And interest will be at what rate? 18% per annum from the first date after utilization of ITC till the date of reversal. And here what is considered as the date of utilization? Date of utilization is the actual date of 3B or due date of 3B of the month in which the balance falls below. So actual date of 3B or due date of 3B, whichever is earlier, of the month for which the balance falls below the wrongly availed ITC. So actual date of 3B or due date of 3B, whichever is earlier, with respect to the month in which balance in ITC falls below wrongly availed ITC. And what is the date of reversal? Date of reversal is nothing but the actual date of 3B for that month in which we have actually reversed the ITC. Then, so related to this, there is one circular. So this clarification definitely can be tested in November 24 exam, because this point was not tested in May 24 exam. So concentrate. So please see this. Whenever the balance in ITC falls below the wrongly availed ITC, we need to compute the interest on the ITC utilized. Now concentrate. See this illustration. Illustration 1. If you want, you can make note of these illustrations in your book. So wrongly availed ITC. Wrongly availed ITC of IGST. In your notebook you write down, because lot of information will be there in this. Wrongly availed ITC of IGST is 1 lakh in Jan 2024. Wrongly availed ITC of IGST 1 lakh in Jan 2024. So for Jan 2024, Feb 2024, March 2024 and April 2024. What is the balance in CGST, SGST, IGST and total? So we have the balance in ITC. Balance in ITC for CGST, SGST, IGST total. CGST is 40,000, SGST is 40,000, IGST is 60,000. So the total is 1,40,000. And February, so CGST 60,000, SGST 60,000 and IGST is 20,000, and the balance is 1,40,000. And in March 2024, so CGST balance is 30,000, SGST is 30,000 and IGST is 20,000. So that will be 80,000. And April 2024, so it is CGST 70,000, SGST 70,000, IGST 30,000, so that is 1,70,000. And wrongly availed ITC in Jan 2024 is reversed in May 2024. Compute interest if any. Compute interest if any. Actually in this case, if you see, So IGST wrongly availed is 1 lakh, and 1 lakh, if you see January month, the balance went to 60,000, means 40,000 we have utilized, and again the balance went to 20,000, means we have utilized to the extent of 80, already 60 we utilized, so therefore remaining 20 we have utilized. But actually this is not the correct way in which we need to see, because what they are telling is that don't see that head alone. So what is the wrongly availed IGST? 1 lakh. As IGST can be utilized for payment of CGST, SGST and IGST, due to that reason see the total. What is the total? So 1,40,000 means wrongly availed ITC 1 lakh. What is the balance in ITC for Jan? 1,40,000. Whether the balance falls below wrongly availed ITC? No. And for Feb 1,40,000. Whether the balance falls below wrongly availed ITC? No. So total you see, and again March it is 80,000. Whether it falls below 1 lakh? Yes. To what extent? 20,000, which means 20,000 we have utilized in March. Only 20,000 we utilized. Again the balance has increased, irrelevant, but when are we actually reversing it? In May 2024. So now in this case, what is the ITC wrongly availed and utilized? ITC wrongly availed and utilized equals to how much? 20,000. And what is the date of utilization? What is the date of utilization? So what is the month for which the balance falls below wrongly availed ITC? March 2024. For March 2024, they have not given actual date, so we will take the due date. What is the due date of GSTR 3B? 20th of April 2024. And what is the date of reversal? What is the actual date in which it is reversed? So May 2024. For May 2024, when we will file GSTR 3B? 20th of June 2024. So what is the number of days for which we need to compute the interest? For the month of April it will be 10 days. For the month of May 31 days. And for the month of June it will be 20 days. So therefore we need to compute it for 61 days. And for 61 days we need to compute the interest. So what will be the interest that will be payable? So 20,000 into, what is the rate of interest? 18% into 61 divided by 365. So 20,000 into 18% into 61 by 365, that will come to how much? 602 rupees will be taken as the interest in this case. Okay. Now suppose same case, illustration 2. What will be your answer if wrongly availed ITC is CGST instead of IGST? Wrongly availed ITC is CGST instead of IGST. Then what we will do? We will see only CGST head, or we need to see CGST head and IGST head? CGST head and IGST head, both total we should take. So not only the CGST head. Okay. So therefore here we need to see this from Jan 2024. So CGST, IGST and total. Just tell me what are the numbers for CGST? 40,000, IGST 60,000, so total 1 lakh. Whether we utilized for the month of Jan? No. And Feb 2024, CGST 60, IGST 20,000, balance 80,000. So what is the ITC utilized? For the month of January 0, for the month of February the balance falls below 1 lakh to the extent of 80, so we have utilized 20,000. Then March 2024, what is the balance? 30,000 CGST, IGST 20,000, so the balance came down to 50,000, means to what extent we have utilized? 30,000. Then again for the month of April 2024, what is the CGST? 70,000 and IGST 30,000, so it went to 1 lakh. So we have not utilized anything beyond this. Okay, and therefore we need to compute two interest two interest we need to compute, correct or not? So first interest 1 is on 20,000 at the rate of 18% from which month? That is February. February month means 20th March 2024 to what is the date of reversal? 20th June 2024 divided by 365 days. Okay. And here in the previous question also April month only we are taking. So therefore February month is not there. Here also February month is not there. That's why we are taking 366 only. So 20,000 into 18% into what is the number of days? 20th March means March 11 days, April 30 days, May 31 days, June 20 days. That will be 92 days. Correct? So do the computation. 20,000 into 18% into 92 divided by 365. That will be 907 rounded off. And there is another interest. This another interest is on 30,000. 30,000 into 18% into what is the month in which we have utilized? March month means you take from 20th of April 2024 to 20th June 2024 divided by 365. So how much that will come to? Like same 30,000 into 18% into 61 days na? 61 divided by 365, that will be 902.46, so 902 rupees will be taken. Are you understanding this? Clear here? Now, for March month, how total balance is 1 lakh? For March month, the total is only 50,000, na? No, not 1 lakh minus 50. Already 1 lakh came down to 80. So 80 came down to 50. So 80 minus 50, 30,000 is only utilized. Already 1 lakh came down to 80 na, means 20 utilized. Then 80 to 50 means 30 utilized. 80 minus 50. Then illustration 3. Wrongly availed ITC. Wrongly availed ITC of GST compensation cess of rupees 1 lakh in Jan 2024 and reversed in April 2024. Balance in ITC for Jan, Feb, March. Okay, balance in ITC for Jan, Feb and March, and here we have CGST, SGST, IGST and compensation cess. Okay, so that balance is there. So CGST 30,000, SGST 30,000, IGST 60,000 and cess is 70,000, and February 60,000, 60,000 and IGST 40,000 and cess is 90,000, and March 2024 CGST 40,000, SGST 40,000, IGST 80,000 and cess is somewhere like 60,000. Now we have reversed. Now tell me what we need to do in this case. What should be taken as total? Nothing, only cess, only cess. So we should not see CGST, SGST, IGST at all. Only cess, because GST compensation cess can be utilized only for payment of GST compensation cess. Only cess should be seen. So what is the ITC utilized? ITC utilized. What is the ITC utilized for the month of Jan? 30,000. And for the month of Feb? 0. Very good. Why 0? Because see, it came down to 70, means we utilized. Is it coming below 70? No, it is going. So means we have not utilized. But is it coming below 70 next month? Yes. So we have utilized 10,000 in the month of March. So therefore we need to compute two interest in this case also. Interest 1 on what? 30,000 into 18% into 20th February 2024 to 20th May 2024 divided by 366 days. Okay. So therefore, here 9 days you are taking now in February month due to that reason. 9 days in February, 31 days in March, and 30 days in April, 20 days in May. So 90 days. So 30,000 into 18% into 90 divided by 366. That will be 1328. Then second interest, this second interest is on 10,000 rupees at 18% into, so this 10,000 is utilized in March, so we need to take from 20th of April 2024 to 20th of May 2024 divided by 366 days or 365 days, 365 days. So that will be coming to 10,000 into 18% into, what is the number of days? April 10 days, May 20 days, so 30 days divided by 365, so 148 should be taken. Okay. Clearly you write in the exam, why are you taking 366 days? As February month has 229 days in the numerator, so denominator 366 days is taken. And like this, I don't know which question will be asked, but out of these three, if my intuition is correct, one question will come. Okay. Because of this clarification, not tested. Simple paper, easily we can predict. May attempt, whatever amendments they have tested, they will not test again. But for May attempt, a number of amendments were there. Around some 30-35 amendments were there. Hardly some 7-8 amendments only they tested. Remaining and all they can ask for November exam. Okay. Next, look into the next area, section 51 and 52. Section 51 talks about TDS and 52 is about TCS. So when TDS is applicable, whenever you are making supply to notified recipient, then TDS will be applicable. So who is that notified recipient? Central government, state government, local authority or union territory, then government agency, public sector undertaking, or government body where government has invested greater than or equals to 51% is the notified recipient. So whenever the supplies are made to these notified recipients, TDS will be applicable. First we will see TDS and then we will compare with the TCS. Okay. And next one you see, who is liable to deduct and at what rate? TDS who will be deducting, that notified recipient will be deducting. What is the rate of TDS? 2%. If it is IGST, 2%. If it is CGST, SGST, 1% and 1%. Non-applicability, when TDS is not applicable if the supplier is unregistered, because the TDS deducted will be reflected in the electronic cash ledger of the supplier. So therefore first they should be registered. Suppose if the supplier is not registered, TDS is not applicable. Supplies are exempted or non-taxable. Mainly to catch the supplier only they are bringing this TDS in order to know what is the value of supply of the supplier. Therefore if the supplier is making exempted supplies or non-taxable supplies, TDS not applicable. And there is a threshold limit for TDS. The contract value should not exceed 2,50,000. TDS not applicable. Only if the contract value means what is the value of supplies under the contract, total value of supplies under the contract you should see excluding GST, it should exceed 2,50,000, then only TDS is applicable. And then suppose if it does not exceed 2,50,000, TDS not applicable. Suppose if the supply is between the notified recipients, so between notified recipients if there is any supply, then also TDS is not applicable. And the recipient is liable to pay GST under RCM. So RCM liability, the recipient is only having, so supplier don't have any liability, so TDS not applicable. Then last point, it is an intra-state supply, means supplier and place of supply in the same state, but the recipient is in the other state, so TDS not applicable. Location of recipient and place of supply not in the same state. Then, so TDS is usually computed on the amount remitted to supplier by the recipient. So while determining whether TDS is applicable or not, you see the contract value, but TDS is always computed on the amount remitted. That amount remitted need not be more than 2,50,000. So that can be any amount. And TDS not applicable if it is an intrastate supply and the recipient is in the other state. That is the meaning. Location of recipient, place of supply not in the same state means it's basically an intrastate supply. CGST, SGST. Say for example, Tamil Nadu CGST and Tamil Nadu SGST, but the recipient is in Karnataka. How recipient will deduct 1% towards Tamil Nadu SGST? Not possible. That's why TDS is not applicable. Then next TCS you see. So TCS, when it is applicable, whenever the supplies are made through e-commerce operator then TCS will be applicable. And the supplier should be different from the e-commerce operator. If the supplier is only e-commerce operator, TCS is not applicable, and e-commerce operator should not be a mere agent like a payment gateway or logistics operators. And what is the rate at which TCS is deducted by e-commerce operator? At the rate of 1%. If it is interstate supply, 1% IGST. If it is intrastate supply, 0.5% CGST, 0.5% is GST. When TCS is not applicable, if the supplier is unregistered and if the supplies are exempted. So same point, first point and second point is same. And third case, if the supplies are notified under 9.5, TCS is not applicable because the liability to pay GST is on e-commerce operator. Also, if the payment is not collected by e-commerce operator, then also TCS not applicable. If the payment is directly collected by supplier but not collected by e-commerce operator, TCS will not be applicable. So payment should be collected by e-commerce operator. So already they have tested in one exam. So write a short note on what are the cases where TDS is not applicable, like that already they tested. So but TCS also they can be testing. Okay, for a short note question this is important. Then look into additional points, that is a special procedure to be followed by the e-commerce operator. Suppose sir, if the supplier is unregistered, can the e-commerce operator allow that supplier to make supplies through their platform? Yes, supply of goods is allowed. But in that case, they should not allow that supplier to make interstate supplies. So there is a supplier who is unregistered. See the next page. There is a supplier who is unregistered and whose aggregate turnover has not exceeded the threshold limit for registration. However, the supplier has obtained the unique enrollment number. Now, what is the obligation on the e-commerce operator? Point number 1. So e-commerce operator allows the supplier to make supply of goods only after allotment of enrollment number. Number 2, should not permit the supplier to make interstate supplies. Number 3, not required to deduct TCS. Why not required to deduct TCS? Because the supplier is unregistered, so TCS is not applicable. But these details they need to report in GSTR 8. These are the obligations on the e-commerce operator. 4 points pa. Allow the supplier of goods to obtain UEN and only then they can make the supplies through e-commerce operator. Number 2, should not permit the supplier to make interstate supplies. Number 3, should not deduct TCS and should declare these details, even though there is no TCS, but they need to declare these details in GSTR 8. GSTR 7 is the TDS return and GSTR 8 is the TCS return. Then what if the supplier is a person opting for composition scheme? Can a supplier opting for composition scheme make supply of services through e-commerce operator? No. They can make only supply of goods through e-commerce operator. In that S9 RCM, we have seen E for supply of services through e-commerce operator is restricted. So supplier of goods through e-commerce operator they can make, but even then that supplier should not make interstate supplies. If they make interstate supplies, they are disqualified from the composition scheme. So what are the responsibilities on the part of the e-commerce operator? E-commerce operator should not permit the supplier to make interstate supplies. TCS is applicable or not? Yes, TCS will be applicable because the supplier is registered. Even though they are under composition scheme, they are registered now. Moreover, this TCS will be coming in which ledger? Electronic cash ledger. Anyhow, they will be using electronic cash ledger only for payment because they don't have electronic credit ledger. So yes, this 1% will be applicable. Then should declare the details in GSTR 8. Again, this can be asked as a theory question, because last attempt they did not ask, so possibility is there. That is, what are the obligations on the e-commerce operator? So in case the supplier is under composition scheme or in case the supplier is unregistered. Okay. Next, you can see details of TCS furnished by e-commerce operator to be made available electronically only to the registered suppliers, because in case of unregistered suppliers, TCS will not be applicable. Then this is also an important point. What if there are multiple e-commerce operators involved in the same transaction? So which side e-commerce operator TCS needs to be deducted? Is it the seller side e-commerce operator or the buyer side e-commerce operator? That is, see this, there are multiple e-commerce operators here, like sellers, 4 sellers are there. These 4 sellers have listed their product through Meesho, and Meesho has listed the product through Amazon, and from Amazon lot of people are purchasing. Because the problem is that lot of people will not buy from Meesho because Meesho don't have a proper customer support. They don't have proper things, etc. and all. And due to that reason, lot of people will not buy through Meesho. They are interested to buy only through Amazon. But there are various sellers who will not be able to access the Amazon platform, because Amazon will take only those sellers who are reputed sellers, etc. Not every Tom, Dick and Harry can sell through Amazon. They have their own criteria for the purpose of seeing the seller rating, etc. and all. Due to that reason, normal small sellers will list through Meesho. Meesho will list through Amazon, and Amazon will be making supplies through the customers. Now, in this case, which e-commerce operator should deduct the TCS? So, is it Amazon or is it the Meesho? So, which e-commerce operator is finally making payment to supplier? That e-commerce operator should deduct the TCS. That is seller side e-commerce operator. See this. So, such e-commerce operator who finally releases the payment to the supplier is liable to deduct TCS. Each e-commerce operator involved is required to pay GST on the commission earned by them. Then computation and compliance, TDS you see, as per section 51, TDS is computed on what? Value of supply excluding GST, on the amount remitted excluding GST. Remember, while computing TDS and TCS, GST should be excluded, and TDS deducted should be payable to government, and they need to file a return. What is the return to be filed by TDS deductor? GSTR 7. What is the time limit by which GSTR 7 should be filed? By 10th of the month following every month. Also, they need to give a certificate in GSTR 7A. Whereas TCS, if you see, they are required to compute TCS on the amount remitted on the, that is like whatever is the turnover in their platform minus sales returns. Payment towards the contract value excluding GST minus returns during the month. So, whatever is the sales made during the month minus returns during the month. Usually in case of e-commerce, lot of returns will be there. So, on that net amount they need to. And TCS should be remitted by 10th of the month following every month, just like TDS. And what is the return? GSTR 8. And TDS deductor, suppose if they have not deducted it on time and they have not remitted, what is the late fee for delay in filing GSTR 7? Late fee will be 25 rupees per day subject to maximum 1000 rupees. But for TCS, you see the late fee. The late fee will be 100 rupees per day subject to maximum 5000. Why such disparity? TDS is government, TCS is private. So, government cannot pay more late fee, na? So, because they don't have that much money here. So, 25 rupees per day subject to maximum 1000. But TCS 100 rupees per day subject to maximum 5000. And TDS deductor is required to file any annual return? No. But TDS not required. But TCS required to file an annual return in GSTR 9B by 31st December of the succeeding financial year. And in both the cases, for delay in payment of TDS TCS, they have to pay interest at the rate of 18% per annum for the period of delay. And there will be a general penalty of up to 25,000, but there is a specific penalty also. For TDS TCS default, what is the specific penalty? 122 subsection 1. TDS TCS default is there na, 100% of tax or TDS TCS or 10,000, whichever is higher. And whatever TDS TCS that is deducted will be reflected in 2A or 2B, only in 2A. 2A of the supplier, and which will go to electronic cash ledger and can be utilized for payment of any liability. And what is the time limit for rectification of TCS return? 30th November of the succeeding financial year, or date of filing and return, whichever is earlier. But for TDS return, is there a rectification that is possible? No. Only for TCS return there is a rectification that is possible. Now look into this illustration on TCS as to how TCS will work. So first, there is a supplier who enters into contract with e-commerce operator to list their mobile and sell it for a commission of 1000 rupees plus GST at 18%. And the buyer will place an order with the e-commerce operator, and the e-commerce operator will get the product from the supplier with an invoice of 10,000 rupees plus GST 28%, 12,800. Then e-commerce operator will do the delivery of the mobile and will recover money from the buyer, 12,800 rupees. Now in this case, how much money the e-commerce operator will remit to the supplier? They collected 12,800. From this 12,800, they will deduct their commission 1000 rupees, plus they will also deduct the GST on commission, that is 180 rupees, and also they need to deduct TCS. What is a TCS? 1%. 1% of what? Value excluding GST, that is 10,000 into 1%, 100. So the balance amount 11,520 will be remitted by e-commerce operator to the supplier. And what are the liabilities of e-commerce operator to government? They need to pay GST on commission 180, and they need to deduct and remit TCS of 100 rupees. This GST, whatever they are paying as on commission, can be taken as ITC by the supplier, because for this commission part, who is the supplier? E-commerce operator is the supplier, and the supplier, like e-commerce operator is the supplier and the supplier of goods is the recipient. So Flipkart is the supplier and MI is the recipient for the commission part. So Flipkart will raise invoice to the supplier for this commission of 1000 rupees. So MI can take ITC of 180 rupees plus this 100 rupees will be coming as TCS credit. Both TDS and TCS credit, both TCS credit and input tax credit can be adjusted for payment of the gross liability of 2800 rupees. So this is how we need to do the computation. So whatever TCS that is given in the question, ensure that the TCS is being deducted from our gross liability. TCS credit also can be deducted along with input tax credit also. Okay, and related to this, there is one question. So Starcart Private Limited, like that, one question is there in solved workbook. We can see that that is a study material question and not tested. Even it is there in MCQ also. So we will see that MCQ, it's there in MCQ. Yes, actually from it was given long back in the case scenario booklet. Then they modified this question and they have brought this question in this study material as one comprehensive question. Okay, but it's a very good question. You can see this. Kindly look into page 298, case scenario 25. Starcart Limited owns and operates a web portal in the name of Starcart and is registered with the jurisdictional GST authorities in Delhi as an e-commerce operator and liable to collect TCS under section 52 of CGST Act. So basically they are an e-commerce operator. They provide listing service to various sellers for selling the goods to ultimate consumers. Besides this, they also sell their own products through the same web portal. So therefore, they are also making their own products through the web portal on which TCS is not applicable, and they are supplying the goods belonging to others through their portal on which TCS is applicable. Correct? If the seller and e-commerce operator is same, TCS not applicable. If the seller is different from the e-commerce operator, definitely TCS will be applicable. Then, for the listing services provided to the sellers, Starcart charges a listing fee at the rate of 10% on the turnover of goods sold by the seller in a particular month. Usually in case of supply of goods through e-commerce operator, who is liable to pay GST on the goods? On the goods, who is liable to pay GST? E-commerce operator or the supplier? Supplier. Only in case of supply of notified services through e-commerce operator, liability to pay GST is on e-commerce operator. But in case of supply of goods through e-commerce operator, the liability to pay GST is on the supplier. But what is the liability on the e-commerce operator? Supplier will pay GST on sales power, but e-commerce operator will pay GST on what? Commission plus TCS. Understood? So they are collecting a listing fee, commission. What is that listing fee? 10% of the turnover of goods sold by the seller in a particular month. Such listing fee is recovered from the seller irrespective of any return of goods sold through Starcart. The customer can choose from wide range of goods listed on the web portal and place an online order for the goods. The payment is made by the customer through the payment gateway in online mode only. At the time of monthly settlement, Starcart makes the payment to sellers after adjusting the tax collection at source. Means TCS is applicable. And why are they talking about these points? Because one of the conditions says that so the payment should be collected by the e-commerce operator. So in this case, Starcart is only collecting the payment from the buyer and they are deducting the TCS commission, etc. and then they are remitting it to the supplier. Then the invoice for the goods sold on Starcart is issued by the seller. So the liability to pay GST is on the seller in the name of the customer, and the tax is charged on the basis of location of seller and the customer. The goods are shipped directly by the seller to the customer, and there is no responsibility of shipping the goods on Starcart for third party sellers. Okay, there is no responsibility on the Starcart. Okay, so which means in case of return of goods by the customer, the shipping is arranged by Starcart and it charges a fee of 20%. So when they sell the product, so 10% they get, and when they return the product, when a customer return the product, they get 20%. Super, na? So if someone sells the product through their platform, they get a listing fees of 10%, Starcart, and if the product is returned, Starcart will get a fee of 20% of the value of goods returned as cancellation charges and refunds the balance amount to customer. Further, 10% of the value of goods returned is collected from the seller by StarCart as handling charges, means 30%. Whenever there is a return, they will get 30%, 20% from the customer and 10% from the seller. In the month of January, Pulkit, so up to this is the knowledge of the business, and from here only the question starts. In the month of January, Pulkit, a resident of Rajasthan, purchased following goods from StarCart. Laptop having a value of 50,000. Now carefully listen. So from StarCart, laptop having a value of 50,000 and printer having a value of 10,000. Both the products are sold by Infocom Limited, a seller listed on StarCart and registered under GST in the state of Uttar Pradesh. So who is the supplier? Infocom. Are you listening, pa? Can you all stand and sit once? I could not see your eyes and all. Your eyes are fully like, for last 50 days, if you are consuming weed, how it will be? Like that your eyes are. Sit here. I am also getting up early in the morning. I am also taking class. I am also putting effort. I am not getting sleep. How you will get sleep here? Say this. I am having fear. You know what is the fear I am having? What if, this is the last batch for me. So next batch, if I am not having any students, what should I do? Like that I have a fear. Really. So therefore, always I will give my 100%. And therefore, so the fear will always be there. What if the students rate me so badly? Because this is a competitive industry and any good faculty may come any day they may come and it will be an exit for me. So therefore, every day is like a challenge. So that fear is there. So I will not get sleep. But you don't have the fear. You don't have the exam fear. Okay. So keep that exam fear in your heart. You will not get sleep. Night and all, exactly 3 o'clock you will get up and sit and read. It will come. If the fear is there, scientific reason, people who get up at 3 o'clock will have some kind of fear or stress, they only will get up. It's okay. After you go for job, you don't have stress. But until now, you should have the stress. Okay. You should definitely have the stress. Okay. Then only you will not sleep. Listen. So, see this question. Who is the supplier? Infocom Private Limited is the supplier. And who is the e-commerce operator? StarCart. Who is the recipient? Pulkit. Where the Infocom is located? Uttar Pradesh. Where Pulkit is located? Rajasthan. Which means it is supply of goods. Normal supply of goods. What is the place of supply? Ending point of the goods. Supply involves movement of goods. Correct or not? So therefore, ending point of the goods will be taken. What is the ending point of the goods? Rajasthan. Location of supply Uttar Pradesh. Place of supply Rajasthan. Two different states only na. Therefore, interstate supply chargeable to IGST. Now in this case, on 50,000 and 10,000, who will pay GST? Infocom will pay GST. Then what StarCart will get? Out of that 50,000 and 10,000, they get 10% as the listing fees, plus they are also required to deduct TCS. Then second transaction, mobile phone having a value of 30,000, sold by StarCart in its own capacity. In this case, who will pay GST on 10,000? Sorry, 30,000, StarCart. TCS applicable or not applicable? Not applicable, because it is their own sales. So they have only the GST liability. Correct. So where is StarCart located? Delhi. StarCart is located in Delhi. And where is Pulkit located? So ending point is Rajasthan. So therefore it will be also interstate supply. Then C, CCTV camera system having a value of 1 lakh, sold by Secure World, listed on StarCart and registered under GST in the state of Gujarat. Who is the supplier? Secure World. Where is that located? Gujarat. And who is the recipient? Pulkit of Rajasthan. Ending point Rajasthan. Again it is interstate supply. And therefore who will pay GST on 1 lakh? Secure World. Then what is that? This StarCart will pay GST on listing fees, plus even TCS also will be applicable to them. Is it clear? Now all the amounts given above are exclusive of GST wherever applicable. The opening balance of input tax credit for the relevant tax period for StarCart, Infocom Limited and Secure World is nil. Further, there is no inward and outward supply transaction for StarCart, Infocom Limited and Secure World in January apart from the aforementioned transaction. Subject to the information given above, assume that all other conditions necessary for availing ITC have been fulfilled. and GST applicable, they have given the rates, but no CGST, SGST is irrelevant, only IGST will be applicable. Now based on the facts of the case scenario given above, choose the most appropriate answer to the question number 2.1 to 2.4. So 2.1, 25.1, the net tax liability including amount payable as TCS and after set off of credit if any of Starcart Limited for the month of January. Now we need to compute the liability of Starcart. Now first transaction, in the first transaction what is the liability on Starcart? 60,000 into 10% into 18%, correct? So do that, 60,000 into 10% into 18%, that is 1080. Second transaction, first we will compute liability or GST liability, okay, and thereafter we will see TCS. First GST liability. Second case 30,000 into 18%, that will be 5,400. Third case, CCTV camera, in that case what is that they will get? 1 lakh into 10% into 18%, that is 1,800. This is their liability, correct? Do they have any ITC? No, there is no information. If there is anything in question, you need to check for ITC and you need to adjust, because the question is about net liability. Plus, what is the TCS? What is the TCS? First case TCS applicable or not? Yes. What is the value? 60,000. 60,000 into 1%. How much? 600. Second case, secure world. Second case, no TCS. Third case, 1 lakh. 1 lakh into 1%. That is 1,000 will be TCS. They are asking total, including the amount of TCS. So 1,080 plus 5,400 plus 1,800 plus 600 plus 1,000. That will be 9,880. Option D is the answer. Understood? Then, second question. The net liability after set off of credits, if any, of Infocom Limited and Secure World for the month of January. So, net liability of Infocom and Secure World they are asking. Go to Infocom. Infocom gross liability is how much? Boss, 60,000 into 18%, correct? So, what is the gross liability of Infocom? 10,800 minus, they will get ITC. What ITC? Sir, whatever commission GST paid, they will get the ITC. So, this 1,080 they can take as ITC. Are you understanding? So, they will get a ITC of 1,080. How 1,080 we got? That is the recipient, that is e-commerce operator will be deducting a listing fees. On that listing fees there is some GST na, that can be taken as ITC by us. Plus even TCS also can be deducted. What is the TCS? 600. So 600 also will be deducted. So what is the net liability? 10,800 minus 1,080 minus 600. That will be 9,120. Okay. Then for Secure World, what is the gross liability? 1 lakh. 1 lakh into 18%, that is 18,000. Then that person will be collecting commission na. On that commission, what is the GST? 1,800. So 1,800 we can take as, that is Secure World can take ITC plus TCS. What is the TCS? 1,000. So if 1,000 is deducted, then what is the net liability? 18,000 minus 1,800 minus 1,000. That will be 15,200. So option C. Then next, third question. In case it is assumed that Secure World's turnover does not exceed the threshold limit for obtaining registration under applicable GST law, Secure World. So third case, third transaction, Secure World is third transaction. They have not exceeded the threshold limit means, are they compulsorily required to get registered? No. No. Why they are compulsorily required to get registered? Good. They are making interstate supplies. Actually, they are not compulsorily required to get registered if they are making intrastate supplies. That's why we discussed where is Pulkit located, where is Secure World located, and it is an interstate supply. If they are making interstate supply, definitely they need to register compulsorily. So, Secure World will discharge tax only on sales made through Starcart. Secure World is not required to obtain registration. Starcart will be liable to discharge tax. secure world is required to obtain registration and shall be liable to pay tax on all taxable supplies made through StarCart on its own. Option D is the correct answer. Suppose if they are making only intrastate supplies, then they are not compulsorily required to get registered. Then fourth one, assuming that Pulkit returns the printer. So printer purchased from Infocom Limited in the month of January. As per the return policy, StarCart charges 20% of the value of the printer as cancellation charges from Pulkit and 10% of the value of printer as handling charges from Infocom Limited. The net tax liability, including amount payable as tax collected at source and after set off of credits if any of StarCart in such scenario for the month of January would be. So first our regular liability is there na for StarCart. What is the regular liability of StarCart with respect to the first transaction? They get a commission na for the first transaction. What is the commission that they get for the first transaction? 10%, 1080. No change here. These three things will be same. These three things will be same first. Okay, 1080, 5400 and 1800. 1080, 5400, 1800. Now extra they get 30%. So what is the value of the printer returned? What is the value of printer returned? 10,000. So 10,000 into 30% into 18%, that is 540. You understood how we got 540 extra? That is printer returned. On that printer, 20% they get from Infocom, sorry, 20% they get from the customer and 10% they get from the Infocom supplier, which means that they are getting 30% of 10,000, that is 3,000. On that 18% GST, 540. Understood up to this? Now, then TCS you compute. What is the TCS? First case, what is the TCS? First case, what is the value? Not 600, wrong answer. Return, sales returns we need to reduce while computing the TCS. Okay. So what is the sales value? First case, what is the sales value? 60,000 minus sales returns 10,000. So 60,000 minus 10,000, 50,000. 50,000 into 1%, that will be 500. You understood? So sales returns needs to be reduced. Okay. Next, last 1 lakh, that will be same. 1 lakh into 1%, that will be 1000. So you do the total of this, 1080 plus 5400, 1800, 540 plus 500 plus 1000, that is 10,320. You understood how we got 10,320? Only this 500 and this 540 are the adjustment extra points. Remaining and all will be same. Okay. So purely this question is on TCS and e-commerce operator. Again, this question also chance is there. Okay. Really, trust me, because it was given in study material. Long back it was in case scenario MCQ, either as a case scenario MCQ or as a practical question. They may be asking this. Okay. So we completed payment process. Look into returns under GST. Any doubt in that question here? And if time permits, I don't know whether you have time or not. If time permits, try to solve as many questions as you can in this case scenario MCQs, because I gave with explanation answers with detail. Reason being, don't think case scenario questions should be asked as case scenario only. From this only they inspire and make the descriptive questions. Okay. So due to that reason, if you are solving this, you know what are all the treatments that is being done. So the same thing may be asked as a descriptive question also, because see, they have limited resources here. Within that limited resources only they need to search while setting the question paper. If it is other subjects na, they have lots of resources. Foreign author books and all will be there, a number of books will be there for AFM or FR, etc. But when it comes to DT, IDT, the scope is very limited. So here and there only they need to keep on searching. That's why definitely you will be able to cope up if you are completing all ICI resources. Okay. All these are not created by me. That much scene I don't have. So this is like past ICI resources only, all these case scenarios. That's why I asked you to do. MCQs, individual MCQs I only created, that individual MCQs which is there for chapter wise, but this case scenario MCQs and all fully of ICI sources, I just did the working, okay. And if you have any doubt, you can ask me in the Telegram. See this, segment 14, returns under GST. So in this returns under GST, so first we have QRMP scheme. So we need to know that, because QRMP scheme also from quite a long time they have not asked any question. Mostly interest computation on QRMP can be tested. So when QRMP scheme is applicable, quarterly return monthly payment, if aggregate turnover during the previous year does not exceed 5 crores, then they can go for quarterly return monthly payment scheme, wherein they will not file returns on a monthly basis, but they will file returns on a quarterly basis. What is the due date of this quarterly return? Already we know GSTR1 due date is 13th of the month following every quarter, and GSTR 3B due date is 22nd or 24th of the month following every quarter, and they have to pay tax on a monthly basis. What is the time limit by which they need to pay the tax? They have to pay the tax by 25th of the month following every month for the first month and second month. What about third month? Anyhow, first month, second month, third month together they will be filing GSTR 3B. So for first month and second month they have to pay by 25th of the month following every month. But how they will pay this tax? Just they will deposit in the PMT6 challan. They are not literally paying, they will deposit into the electronic cash ledger. How much they need to deposit? That depends upon two methods. There are two methods for them, that is fixed sum method and self-assessment method. And what about the invoices, B2B invoices? If they are reporting the details in GSTR1 on a quarterly basis, the recipient will be able to take ITC also on a quarterly basis. Due to that reason, they can file IFF, Invoice Furnishing Facility, on a monthly basis by 13th of the month following every month for the first month and second month. But for the third month, all 3 months together, they will file GSTR1. And this is optional, not mandatory. Whatever details that we are furnishing in our IFF will be reflected in our recipient's GSTR 2A or 2B, thereby they will be able to take ITC. And QRMP scheme is not like composition scheme. In composition scheme we studied all in, all out. All the registration should be under composition scheme, or all the registration will be out of composition scheme. But QRMP is not like that. When I have multiple registrations, few registrations I can go for QRMP, few registrations I can go for normal returns, okay. So QRMP is GSTN wise, and distinct person have the option to avail the scheme for one or more GSTN. By when I should decide to go for QRMP? So I have to decide it by the specified dates. What is that specified dates? 1 month after beginning of the quarter. What is the beginning of the quarter? Say for example April to June. April to June, what is the beginning? April 1st. 1 month from April 1st means that is April 30th. And 2 months before. What is 2 months before means? 2 months before means February. So February 1st to 30th April I need to decide. So 1 month after, 2 months before I need to decide, and I can opt for the QRMP. What is the condition for opting into QRMP? Whatever monthly return that is pending, all those monthly returns which are pending returns should be filed. And GSTR1 or IFF is an optional facility that should be filed by 13th of the month following every month. Whatever details that we have added in IFF, again at the time of filing GSTR1 we don't have to add, automatically it will be coming. Suppose if you have not furnished any IFF, all 3 months details you need to add in GSTR1. But when you are adding the details in IFF, you have a restriction. You can enter the details only up to 50 lakhs in each month. Then there are two methods applicable for payment. That is fixed sum method. In fixed sum method, we will see the last 3B filed. Last 3B filed, if it is quarterly 3B, then we will take net liability into 35%. That quarterly 3B net liability into 35%, that we will pay as fixed sum method liability for the first month and second month. Suppose if the last 3B filed was monthly 3B, then in that case 100% of the net liability we will be paying for the first month and second month. So 35% of the tax liability and 100% of the tax liability if it is monthly return. And self-assessment method, we will not follow any of these percentages. Actually we determine how much is our liability and how much is the balance already there in the ITC. So the differential amount alone we need to pay into the cash ledger. Suppose if there is enough balance in the cash ledger, we don't have to deposit anything if we are going for self-assessment method. Then any change in the manner of filing 3B, no change, normally we file it. and compulsory opt-out. As and when the aggregate turnover during the financial year exceeds 5 crores, we will come out of the QRMP. Again, next year we cannot go for QRMP because this year we cross 5 crores. Na? Then levy of late fees. So whatever late fee, regular late fee that is applicable is also applicable for QRMP. So that late fee will be payable for delay in filing GSTR1 and GSTR3B. Mainly there is interest on account of short payment or non-payment under QRMP scheme. So see the 3 interests that will be applicable. Interest number 1. So for the first month and second month, I have to pay the tax by 25th of the subsequent month, correct or not? Say for example, April to June I am under QRMP. For April month I have to pay by 25th of May, and for May month I have to pay by 25th of June. If I miss that deadline, I have to pay interest. At what rate? 18%. From when? From the due date, that is from 26th till the actual date of payment. And this is common whether it is FSM method or SAM method. Got it? Interest at the rate of 18% per annum from 26th of the next month till the date of payment. Suppose if there is a differential tax, that is my actual liability for April month is 60,000, but as per fixed sum method I have paid only 50,000. Now there is a difference of 10,000. That difference 10,000 I will pay at the time of filing 3B. In that case, any interest is payable? No. If it is fixed sum method, no. However, if it is self-assessment method, whatever I have already deposited under self-assessment method is 50,000, but my actual liability is 60,000. On the difference 10,000, even though I file the 3B on time and pay the difference, I have to pay interest. From which date to which date? From 26th of the next month till the actual date of payment of the difference amount. So difference amount, that is actual tax minus tax paid with respect to first month and second month of the quarter. Under FSM there is no interest, but under SAM interest at the rate of 18% per annum from 26th of the next month till the date of payment. Then last interest. This last interest is, what if the 3B is filed late? When 3B is filed late, as usual the interest will be coming. So that interest will be at the rate of 18% from the due date of 3B till the actual date of filing the 3B, and this is common, let it be fixed sum or SAM, but here the due date of 3B will differ. So in some cases it will be 22nd, in some cases it will be 24th. For GMCA and states below that, Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh and states below that, it will be 22nd, and for other states it will be 24th. Accordingly the due date needs to be determined. Then, so these are the points about QRMP. Next we need to know what are the various time limits for returns. So GSTR1 is the first return. So what is the time limit? Already we know. Monthly filing means 11th of the month following every month. Quarterly filing means 13th of the month following every quarter. And IFF along with GSTR1. So when we go for quarterly GSTR1, IFF we will file. What is the time limit for IFF? 13th of the month following every month for the first month and second month. And what is the second return? GSTR1. What is 2? GSTR2. GSTR2 series we don't have anything. In 2 we have 2B, but that we will not file, we will get it. And in 3 series we have 3B. And who will be filing 3B? Every registered person will be filing 3B. That is a summary of outward supplies. And what is the time limit for 3BR? Monthly means 20th of the month following every month. And if it is quarterly, 22nd or 24th of the month following every quarter. That already we know. And in case of composition scheme, that is GSTR4. GSTR4 is an annual return to be filed by a person opting for composition scheme. What is the time limit? 30th April of the succeeding financial year. Plus they are also required to file a quarterly return. What is that quarterly return? CMP 8 by 18th of the month following every quarter. And then 5 series. In 5 we have 2, 5 and 5A. 5 will be filed by OIDR supplier, sorry, non-resident taxable person, and 5A by a OIDR supplier located outside India. For NRTP, what is the time limit? 13th of the month following every month, or 7 days from expiry of registration, whichever is earlier, because the type of registration granted to NRTP, non-resident taxable person, is a temporary registration. So that's why like this. So remember, 13th of the month following every month, or 7 days from expiry of registration, whichever is earlier, not whichever is later. And then GSTR 5A is to be filed by OIDR supplier by 20th of the month following every month, like a 3B return they will be filing. And next in 6 series we have ISD return. ISD return to be filed by 13th of the month following every month. And 7 we have GSTR 7 for TDS deductor and GSTR 8 for TCS deductor, and time limit is what? Same, 10th of the month following every month. And next in 9 series we have 9, 9B, 9C. So 9 is to be filed by every registered person annual return if their aggregate turnover exceeds 2 crores. So 9 is applicable only if aggregate turnover exceeds 2 crores. 9B by an e-commerce operator. 9C is a reconciliation statement. And when reconciliation statement 9C will be applicable if the aggregate turnover exceeds 5 crores. If aggregate turnover exceeds 2 crores, annual return. If it exceeds 5 crores, reconciliation statement. But what is the time limit for 9 series? 31st December of the succeeding financial year. GSTR 10 is a final return. Final return when it is to be filed, whenever the registration is cancelled, at the time we need to file a final return. And what is the time limit for final return? 3 months from the date of cancellation or order of cancellation, whichever is later. So actually, is it A, 3 months from the date of cancellation, B, 3 months from the order of cancellation, whichever is later, or is it like 3 months from the date of cancellation, or B, order of cancellation, whichever is later? Actually, the correct interpretation is 3 months from the date of cancellation. This is A. B will be order of cancellation, whichever is later. But ICI is telling that 3 months is common for both. So 3 months, date of cancellation plus 3 months, order of cancellation plus 3 months, whichever is later should be taken. Like that they have given, but that is actually stupid, because date of cancellation means what is the effective date from which your registration will be cancelled, and order of cancellation means what is the date on which they pass the order for cancellation. So logically it should be 3 months from the date of cancellation or order of cancellation, whichever is later. But I say, as usual, they are taking some nonsense, so that nonsense only you need to write for exam also. Okay. Then next, GSTR 11. GSTR 11 is to be filed by UIN holder containing the details of inward supplies, and at the time of filing refund claim, we need to file this GSTR 11. Then look into the special points on returns. Sequential filing of returns, that is, for every month, without filing one of that month, we cannot file the 3B of that month. Again, for the next month, without filing the 3B of the previous month, you cannot file the GSTR 1 of the subsequent month. And without filing GSTR 1, you cannot file the GSTR 3B. Like that, we have sequential filing of returns. And government, on recommendations of GST Council, may allow a person to file GSTR 1 even if GSTR 1 is not filed for the prior periods. That relaxation is there. And in the following cases, even though it is reported in GSTR 1 and it is made available in GSTR 2B, but this ITC cannot be availed because it will be coming under ITC not available when the supplier is a newly registered person, supplier liability in GSTR 1 greater than 3B, or supplier filed GSTR 1 not filed GSTR 3B, supplier default in payment of tax and the default continues, or the supplier has availed ITC in his 3B which is greater than his 2B, or he has to pay 1% of liability through cash ledger and he did not pay. This already we discussed, section 38 in input tax credit chapter. Okay. Then 88C and 88D also already we discussed, that is liability in GSTR 1 greater than 3B or ITC in 3B greater than 2B. Next, who are not required to file GSTR 1 or GSTR 3B? Remember, tonic, in the tonic T square. Okay. So who are not required to file GSTR 1 and 3B? Tonic. T for TDS, TCS, T square. Okay. And next, O for OIDR supplier. Then N for non-resident taxable person, I for input service distributor, and C for composition scheme, because they are going to file other returns. TDS, TCS is going to file GSTR 7 and 8, and OIDR supplier is going to file GSTR 5A, and NRTP is required to file GSTR 5, and input service distributor GSTR 6, composition taxpayer CMP 8. Due to that reason, they are not required to file GSTR 1 and GSTR 3B. Same way, who are not required to file annual return? Remember, CAG tonic. CAG, those people whose books of accounts are subject to audit by Comptroller and Auditor General, means government departments, etc., they are not required to file annual return. Same way, TONIC, in the TONIC, T for only TDS, not TCS, because TCS deductor is required to file GSTR 9B annual return. So O same, that is OIDR supplier, N also same, I also same, but C different, casual taxable person, because composition taxpayer is also required to file annual return GSTR 4. So therefore, don't write interchangeably whenever you get a short note question. This is important for short note, who are not required to file annual return. Then what is the late fee for delay in filing return? For GSTR 1 and GSTR 3B alone, you see, if it is a nil return, 10 rupees per day subject to maximum 250 rupees. And if it is other than nil return, 25 rupees per day subject to maximum. That maximum will differ. If your aggregate turnover during the previous year exceeds 5 crores, then it will be 5,000. If your aggregate turnover during the previous year exceeds 1.5 but does not exceed 5 crores, then it will be half, 2,500. If it does not exceed 1.5 crores, then it will be 1,000 rupees. You have to remember this part because in MCQ, mostly GSTR1 and 3B related late fee can be tested. So what is that? Nil return, it will be 10 rupees per day subject to maximum 250. Other than nil return, per day it will be 25 rupees subject to maximum. Previous year aggregate turnover exceeds 5 crores, 5,000. Does not exceed 5 but exceeds 1.5, 2,500. And if it does not exceed 1.5 crores, 1,000. Then look into GSTR 5 and 5A and 6. In these three cases, same, nil return 10 rupees per day. Other than nil return 25 rupees per day, but always the maximum will be 5,000. You understood? Then next, GSTR 7 and 8 already we discussed. GSTR 7, what is the late fee? I told you there is a difference in the late fee. For 7 it will be 25 rupees per day subject to maximum 1,000. For 8 it will be 100 rupees per day subject to maximum 5,000. And then GSTR 4, what is the late fee? Actually, to whom composition scheme is applicable if their aggregate turnover during the previous year does not exceed 1.5. Go to GSTR1, GSTR3B. If the aggregate turnover does not exceed 1.5 crores, what is the maximum late fee? Maximum late fee 1,000. So copy paste here. So nil return 10 rupees per day subject to maximum 250. Other than nil return 25 rupees per day subject to maximum 1,000 because their aggregate turnover will not exceed 1.5 crores. Then GSTR 9. In case of 9, 9B, 9C, what is the late fee? So per day late fee you see first. If the aggregate turnover exceeds 5 crores, if the aggregate turnover does not exceed 5 crores, 25 rupees per day. If the aggregate turnover exceeds 5 crores but does not exceed 20 crores, double, 50 rupees per day. If the aggregate turnover exceeds 20 crores per annum, that is beyond 20 crores, then it will be double, that is 100 rupees per day. Is it clear here? Turnover during the previous year does not exceed 5 crores, 25. Exceed 5 but does not exceed 20, 50, double. And exceeds 20, it will be 100 rupees per day. This is per day late fee. But maximum will be first two cases 0.02% of turnover, last case 0.25% of turnover. All this late fee is under which act? CGST Act. An equal amount will be payable under SGST Act. And filing of nil returns through SMS, 3 returns can be filed through SMS, GSTR 1, GSTR 3B and CMP 8. So that is, you can file through SMS, you don't have to log in and file, but all the entries in the return should be nil. First return, that is immediately after registration, a person will be filing his first return. In that first return, not only the month for which you are filing the return, but even for the month before the date you are getting registered, that is from the date you are liable to get registered, all those details also should be included in the first return. Every registered person who has made outward supply in the period between the date on which he become liable to registration till the date on which registration has been granted shall declare the same in the first return furnished by him after the grant of registration. And notice to return defaulters, that is in case of non-filing of GSTR 1 or GSTR 3B etc., there will be a notice that will be given in GSTR 3A, and this is like our notice under 139(1) will be coming na for non-filing of returns in income tax, like that only. So if returns are not filed in GST, they will give a return like notice in GSTR 3A. In pursuance of that notice, we need to file the returns within 15 days. If we fail to file the returns within 15 days, that will lead to best judgment assessment. A notice in 3A shall be issued if the returns are not filed. After issuance of notice, return should be filed within 15 days. If returns not filed within 15 days after notice, best judgment shall be initiated under section 62. Then rectification of returns, already we know this. So what is the time limit for rectification of GSTR 1 and GSTR 3B? 30th November of succeeding financial year or date of filing and return, whichever is earlier. But remember, this rectification should not be on account of scrutiny, audit, inspection or enforcement activities. Say department conducted audit, they identified that you have evaded. Now you pay the tax. Now you cannot rectify the GSTR 1 and include it and give the ITC to the other person. Not possible. So rectification is not possible on account of scrutiny, audit, investigation, etc. Voluntarily, when you identify the mistake, then only you can do the rectification of return. Then how the details of outward supplies should be reported in GSTR 1. Suppose if it is B2B supplies, always invoice wise. Suppose if it is B2C supplies, if it is intrastate, always consolidated. If it is interstate, invoice value exceed 2,50,000 per invoice, invoice wise. If the invoices does not exceed 2,50,000 per invoice, then state wise consolidation. Then we have one section, section 48, GST practitioner. So in this GST practitioner, they may ask like what are the activities that can be done by a GST practitioner. If at all a question is asked on this, this is the only question that can be asked. So what are the activities that can be done by GST practitioner? All the activities which you as an article student will be doing, those activities. So as an article student, what you will do in GST? Registration. Next, filing of returns. Then you will pay taxes, correct? They will give the credit card details or net banking details, etc. and all, and you will start making the payment. You will call them sir, OTP sir, like that. So they will be giving OTP and you will enter that, correct? So you will make the payment of tax and you will make the application for refund, correct? Next, suppose if they want to go for composition scheme or exit from composition scheme, that intimation you will be doing. Then e-way bill you will only generate, correct? E-way bill you will only generate. Then ITC for goods sent on job work, receipt from job work, all those details also you will only enter. One thing extra they can do is they can act as an authorized representative, which you cannot. You cannot go and appear before the officer or appear before the appellate authority on behalf of the client. Sometimes you will go and sometimes you will go, but actually you are not authorized. You are not authorized, but many times you will only go. And therefore, why you go? Because your principal has lot of buttocks, no, that he will not be able to go. That's why you will go. So he will not, he will sit only in his place, and that too they will construct a house and office in such a way that afternoon they will go to house and eat fully like pig and sleep, and then somewhere evening he will come, and at the time when we are leaving at 5 o'clock they will sit and torture us. Okay, so this say this and act as authorized representative. So these are the extra activities. Otherwise everything else you will only do. Apply for registration, file GST returns, file intimation to pay tax under composition scheme or withdraw from the said scheme, apply for refund or make payment, act as authorized representative, file e-way bill, and furnish details of challan in, that is ITC for goods sent on job work, receipt from job work, extra. They will make application for unique enrollment number also, or withdrawal from unique enrollment number. To whom unique enrollment number is required in GST? 3 places, I told you already. A supplier of goods through e-commerce operator who is making only intrastate supplies and are unregistered, or transporter and warehouse keeper. What is the eligibility criteria? They should be citizen of India. Foreigners cannot become, okay. Then person of sound mind. For what? For doing this, they should be having a sound mind. Not adjudged as insolvent, okay. And not convicted by a competent court for an offence with imprisonment not less than 2 years. Means up to 2 years if they go for jail and come, it's okay. They can become GST practitioner. So beyond 2 years, they should not be imprisoned, okay. Next, responsibility for correctness of particulars. So who is responsible if there is any mistake in the returns furnished? Not GST practitioner, the registered person only. So GST practitioner before filing all the returns should be showing those returns to the registered person and should get the approval from the registered person, and the registered person should check and verify whether the details furnished in the return are correct, and then the GST practitioner will file, okay. He himself can file that. The responsibility for correctness of any particulars furnished in the return or other details filed by GST practitioner shall continue to rest with the registered person on whose behalf such return is filed. Any statement furnished by GST practitioner shall be made available to the registered person on the common portal. For every statement furnished by GST practitioner, a confirmation should be sought, and the registered person before confirming should ensure that the facts mentioned in the return are true and correct. Suppose if he is not responding, deemed confirmation, okay. Then every person who want to appoint a GST practitioner, so should appoint the GST practitioner through PCT3, and they will be like a single power of attorney. It's like every time we have to get a POA from the client, whenever we are going and meeting the officer or whenever we are making a representation. But whenever we appoint a GST practitioner, so it will be clearly visible in the portal itself on behalf of this registered person who is the GST practitioner. So that is about returns, a small area only. And next you can see so assessment and audit, liability to pay tax in special cases. You can see that page number 154. After break we will discuss registration. Okay. Then. So these are the various places where we have come across interest in GST. So just now we saw section 50 subsection 1. What is that? Delay in payment of tax. What is the rate of interest? 18%. From when it should be computed? From the first date after due date till the actual date of payment. Then 50 subsection 3. What is that? Interest on account of wrong availment and utilization of ITC. So we need to compute interest at what rate? 18%. From which date to which date? First date after the date of utilization till the date of payment. Section 60 interest is there, that is on account of provisional assessment. So whenever the registered person is unable to compute how much tax he need to pay, either value or rate of GST, he will make an application to the proper officer, and the proper officer will compute the provisional tax. Thereafter he will determine the final tax. If the final tax is more than the provisional tax, he need to pay the differential amount, ditto like customs. Okay, so he need to pay the provisional tax, differential tax. But what is their interest rate? There 15%, here 18%. Their interest we computed from the first date of the month in which provisional assessment is passed, but here we are taking from the due date, usual due date. So whatever is the due date of the month for which provisional assessment is resorted, from the due date till the actual date of payment. Same way, so we will also be paying interest under section 16. So if the consideration is not paid to supplier within 180 days from the date of invoice, we need to pay interest on ITC reverse along with interest at 18% from date of utilization till the date of addition of ITC. Then in 17, read with rule 42 also we have interest, that is we need to compute D1 and D2 provisionally as well as finally at the end of the year. Suppose if the final D1 D2 is greater than provisional D1 D2, then we need to pay that difference along with interest at 18% from the 1st April of the succeeding financial year till the date of payment of the difference. Then in rule 43 also we have come across interest. What is that? So in case of capital goods, first we need to avail the ITC, and every month over the next 60 months, monthly ITC into exempted turnover divided by total turnover we need to reverse along with interest 18%. But here it is from the date of availment till the date of reversal. Then section 56, in case of refund on account of delay in passing the order, what is the interest rate? 6%, and this is applicable from which date? From 61st day from the date of receipt of application till the date of refund. But interest on account of refund arising on account of order of adjudicating authority, appellate authority. So whenever the adjudicating authority or appellate authority is sanctioning the refund, in that case it will be 9% per annum. This is like tax paid in excess. It's like some by mistake we have, not by mistake, it is like, so they have passed an order, adjudication authority passed an order, we paid the tax, but after payment of tax we are going to the court of law and fighting against this. In order to buy the piece we have paid, but thereafter we are not accepting. This is only called as protest. So we are going for protest against this, and we are going for appeal, or we are filing a writ petition. In that case, the adjudicating authority may be instructed to sanction the refund by the appellate authority, or the appellate authority may sanction the refund. In that case, it will be 9% per annum. This is what I told you. ICAI took the assumption that, so pre-deposit will also come under this category, and they computed 9% per annum. And the interest will be 61st day from the date of receipt of application till the date of refund. Usually due date will be taken as GSTR 3B due date, that is 20th of the month following every month. And this already we know, for delay in filing 3B, interest is computed on net liability, otherwise interest is on gross liability. Now look into the assessment. So in assessment we have total 5 types of assessment: self assessment, provisional assessment, scrutiny assessment. and best judgment assessment. That best judgment assessment, actually we have two types. One is on account of non-filing of returns, another is unregistered person who suppressed his turnover and he is having liability. Then last, summary assessment. So first we will see self-assessment. So column wise we will see self-assessment section 59, status of the person, registered person, and that registered person, so I need to file the return. Every registered person has to assess the tax payable and furnish the return. Time limit is the due date of that return, and here there is no consequences. So normally every person will compute how much tax he need to pay, that is known as self-assessment. Whereas provisional assessment under section 60, status of the person is a taxable person. Who will do this assessment? By the proper officer, because the registered person is unable to compute, so he will make an application to the officer. And notice, no notice, because he is only requesting the officer. And situation where the taxable person is unable to determine the value of goods or service or both, determine the rate of tax. And what is the time limit by which the provisional assessment order should be passed? Within 90 days from the date of application, they need to pass the provisional assessment order, and once the provisional assessment order is passed, they need to complete the final assessment within 6 months, and it can be extended for a further period of 6 months by ACDC and further 4 years by the commissioner. Okay, so you remember the time limit: 6 months plus 6 months plus 4 years from provisional assessment order, they need to pass the final assessment order. And here consequences, already we discussed, 3 situations may arise. Final assessment is greater than provisional assessment, we need to pay the difference along with interest at 18% per annum from the first date after due date for the month for which we went for provisional assessment till the actual date of payment of difference. Suppose if the final assessment amount equals to provisional assessment amount, we don't have to pay anything. Suppose if the final assessment amount is less than the provisional assessment amount, we need to make an application for refund. Once we make application for refund, within 60 days they will grant, otherwise interest will be payable at the rate of 6% per annum from 61st day till the date of refund, that is this. And look into scrutiny assessment. Usually self-assessment continuation is only scrutiny assessment. So whenever we file the returns under self-assessment, those returns will be taken up for scrutiny by the officer. So section 61, registered person is filing returns and the proper officer will do this assessment, but notice will be given. So whenever they do the scrutiny assessment, if they find any discrepancy, they will be giving a notice. So what is the objective or what is the situation? In order to verify the correctness of the return, the proper officer may examine the return and seek the explanations. Is there any time limit? No. For scrutiny assessment, they have not given time limit, but logically, the time limit under 73-74 will be applicable, because if they are able to do this scrutiny assessment within the time limit, then only if they identify any discrepancy, they can give a notice. Means we have a notice time limit under 73-74, so logically that will be applicable. Then officer to take permission, no. And withdrawal of order also no. Consequences, explanation is not obtained within 30 days or extended period, or registered person fails to take corrective measures, the proper officer may conduct audit or initiate recovery. So what is the time limit within which they need to respond? 30 days. Within 30 days they need to respond to that notice, otherwise the proper officer will initiate either audit. Audit, again 2 types of audit is there, either departmental audit or special audit, or they will initiate recovery, that is under 73 or 74, that will be applicable. Then look into best judgment assessment. So we have 2 sections, section 62 and 63 for best judgment assessment. The difference is section 62 already we discussed in GSTR 3A. So GSTR 3A notice will be given. After GSTR 3A notice for non-filing of returns, we need to file the return within 15 days. If we are not filing return within 15 days, then they will initiate best judgment assessment under section 62. Whereas section 63 is, I am an unregistered person, I suppress my turnover, but I have a liability. How department will come to know that I have a liability? In my bank account, some 5 crores or 10 crores gross receipts is there, but I have not got registered. Definitely, I would have not reported the entire turnover in the income tax or etc. So because of that reason, if you see the bank transactions, lot of transactions are there, but the income shown in the income tax is only 80 lakhs, 8 lakhs, 10 lakhs, like that. Lot of people will be doing this. Then in that case, that is account of unregistered person liable to pay tax. Then best judgment assessment will come under section 63. So look into the status of the person. In case of 62, it is registered person. Who will assess? Proper officer. Will there be any notice? Yes, already given under GSTR 3A. Situation where a registered person failed to file the return within 15 days in pursuance of notice under GSTR 3A. What is the time limit within which it should be completed? 74 time limit. What is 74 time limit? 5 years from the due date of filing annual return, the time limit. Officer to take any permission? No. Withdrawal of order? Yes. When there will be withdrawal of order? When the registered person furnishes a valid return within 60 days. Before it was 30 days. Now they have modified it to 60 days. So within 60 days. Actually this best judgment assessment is because the registered person not filed return. Suppose if he files a return after best judgment assessment order within 60 days, then the order will be withdrawn. As per return, whatever is his liability, that will be proceeded with. Is it clear? And here, suppose if he is unable to file within 60 days from best judgment assessment order, is there any extension that will be granted? Yes, that extension is for a further period of 60 days with a late fee. What is the late fee? 100 rupees per day subject to maximum 5,000. Okay, you understood? No, 100 rupees per day. That is different late fee. Where we studied that section 47. That section 47 late fee will definitely come. For initial 60 days also section 47 late fee will come. Further 60 days also that late fee will come. That late fee to guarantee. That is under section 47. Depending upon that 25 rupees per day or 10 rupees per day, etc. that will be applicable. But this is for the further extension. So initial 60 days also you can file, pay only late fee under section 47. But further 60 days you have to pay a normal late fee under 47 plus this late fee also 100 rupees per day. Here there is no subject to maximum concept and all, just 100 rupees per day. Then next, suppose if it is best judgment assessment under section 63, status of the person, he is an unregistered person. Who will assess? The proper officer will assess. Opportunity of being heard? Yes, definitely notice will be given. Situation where the taxable person fails to obtain registration even though liable to do so, or whose registration has been cancelled but still they have the liability to pay tax. What is the time limit? Same time limit, that is 5 years from the due date of furnishing annual return. Whether officer to take any permission? No. Withdrawal of order also? No. Means whatever best judgment assessment order they pass, either pay as per the order or go for appeal. Pay as per the assessment order or prefer appeal if not satisfied with respect to assessment order. Then look into summary assessment. Summary assessment is like income escaping assessment in income tax, wherein whenever officer has conducted the search or conducted the raid, etc., they identified the goods which are liable for payment of GST but they are unaccounted, or they have identified some unexplained cash, etc., and they have evaded the GST. So delay in passing assessment order, they may escape from payment of GST. So on the spot itself they will be passing a summary assessment order, no notice, because on the spot then and there they will be passing the order for recovery. Otherwise that cash they cannot seize, that goods and all they cannot seize. So due to that reason they will be passing a summary assessment order. So section 64, status of the person, taxable person. Who will do this assessment? Proper officer. Opportunity of being heard? No notice. Generally everywhere notice will be given. Everywhere notice will be given. But in this case there is no notice. Situation, the proper officer has evidence that a taxable person has incurred a liability and the proper officer has sufficient grounds to believe that delay in passing an assessment order may adversely affect the interest of the revenue. Like that person may escape from payment of GST, or he can pack that cash and send it to some other place, or anything he can do. So due to that reason they will pass the assessment order. Time limit not given. Officer to take any permission? Yes, as they are going beyond the principles of natural justice. Usually before passing every order they need to give an opportunity of being heard. In this case, as they are not giving any opportunity of being heard, they need to take the permission of the superior. So yes, previous permission of additional or joint commission is necessary. Withdrawal of order possible. That is, whenever this order is passed, either you pay as per the assessment order, or if the order is erroneous, proper officer may withdraw the order and follow the regular procedure under 73-74. That is, if you confess, if you say that yes sir, sorry, I have to pay the tax, so please proceed regularly. That is, they will give a notice, and because you admitted that this is your liability like that, so you will be getting a notice and thereafter you will make the payment. The advantage is what, you know, when they initiate summary assessment, they will go for penalty under 122 subsection 1. When they go for penalty under 122 subsection 1, flat 100% will be the penalty. Whereas if you ask for 73, there is an advantage of 10% of the penalty, like 10% of the tax will be paid as penalty. That's why, so we will request them to withdraw the order and follow the procedure under 73, 74. Understood here? Then next one, audit under GST. There are two types of audit under GST. One is departmental audit and another is special audit. Mostly in MCQ only it will be tested. So section 65 deals with department audit, and who will be conducting this department audit? Either by the commissioner or any officer authorized to undertake the audit. What is the frequency at which it will be conducted? Not yet notified, but usually it will be conducted at a frequency which will be notified in future, but now randomly whenever they wish to, they will be conducting. What is the time period of conducting the audit? They have to complete the audit within 3 months, plus it can be extended for a further period of 6 months, so 9 months. Thereafter 3 months they will go for summer vacation, and again next year also they can come. Okay, so every year they can conduct the audit. So 3 months plus 6 months, and they need to submit audit report to whom? To the registered person as well as to the commissioner. What is the period within which they need to submit the audit report? Within 30 days from the conclusion of audit. Mostly from this audit report itself we will know for what are all the things they will be giving a notice, because in that audit report they will mention the audit objections. If you better pay those amounts, there won't be any notice. Otherwise, based on these audit objections only, a show cause notice will be coming under 73 or 74 in future. Then expenses of audit. Who will bear the expenses for audit? Department only. Scope of audit. Audit of all books of accounts and records, they can verify everything. Financial records, non-financial records, contracts, everything can be verified by them, including the trial balance, cost audit report, income tax audit report. Notice for audit, yes, a 15 working days prior notice will be given. In customs it will be 15 days. In GST it will be 15 working days prior notice will be given. What if already audit is complete under any other law? Let it be. We will conduct the audit here also. Sir, last week income tax department came for audit, sir. Let it be. Now we are GST department. Tomorrow some other department also will come. Ease of doing business. Come on. So therefore, any person, any department can come and do the audit. So that is not restricted. And sir, already department audit is conducted under GST. So can there be a special audit also? Yes. This is different section, that is different section. Okay, special audit also can be conducted. And section 66, who will be conducting special audit? CA or CMA, selected by department or selected by registered person? Definitely selected by department only. So practicing CA CMA nominated by commissioner. When this audit will be conducted? Whenever officer during the scrutiny or inquiry or investigation identifies that there is a huge evasion in terms of ITC or valuation. It is like, you know, officer is trying to find, but we made the mistake so perfect that he is not able to break through the mistake. You understood? So not every officer will be having that much of intelligence to identify the evasion. They know that they have a doubt that there is evasion, but they cannot identify the evasion. So they need the expert help. That's where they will be roping in CA and CMA. So value is not correctly declared or ITC is irregularly availed. What is the time period for audit? Within 90 days, and it can be extended for a further period of 90 days by ACDC. Here 3 plus 6, here 90 plus 90. And they will not submit the report to the registered person, because the registered person will be able to again plan something based on this. Due to that reason, report will be submitted only to the department. And expenses of audit borne by the department, they will not be doing audit of everything. Their scope is limited only for valuation and ITC. And notice for audit, no notice, but just the direction to get audit will be issued. What if audit is already completed under any law? This will be compulsory. Then can the audit be conducted by department even for part of a year also? Yes. So they can conduct for part of a year. Sir, I commenced business in July, sir, and March, not even 1 year. Can they conduct the audit for this financial year? Yes, they can. They can conduct. There is no restriction. Then liability to pay in special cases. These are some points not yet tested in exam so far. Neglected area. I don't know why. So this just quickly we will see. Listen to this one sufficient. whenever there is a transfer of business. Both transferor and transferee is liable for the dues with respect to before the date of transfer. So for example, with effect from 2024 January, there is a transfer of business. Up to January 2024, whatever is the liability, logically who should pay? Transferor should pay. But as the business transferred, transferor and transferee jointly severally liable for the dues. So in case of transfer of business, both transferor and transferee jointly and severally liable for the pre-transfer dues. Then in case of agent, whenever the supplies are made by agent on behalf of the principal, not only agent but also principal jointly and severally liable. Then whenever there is an amalgamation or merger of companies, even though in principle they are amalgamated or merged, but till the date they get the order from the court, they will not be treated as amalgamated or merged, and they will be treated as two separate persons, and they need to pay the liabilities accordingly. And in case of company in liquidation, usually company in liquidation, so subject to IBC, so one liquidator will be appointed. That liquidator should intimate to the commissioner his appointment within 30 days. Thereafter, the commissioner within 3 months will notify the dues, and already we discussed one section 83 which says that liability will be, GST liability will be having first charge. So therefore, the liquidator should consider this liability as first charge and need to liquidate the assets and repay the GST liability. What if it is a private company? In case of private company, even the private company is liquidated, the directors of that private limited company will continue to be liable. So there is a personal liability on the directors, not on the shareholders, on the directors. Okay. So just because someone is asking you to become director of a company, not a shareholder, be careful. Okay. So therefore, director will have a personal liabilities in the GST dues. So director shall remain liable jointly and severally. And what about the directors of a private company during the continuation? At the time of liquidation, okay, during the continuation, so private limited company means limited liability only, na? Correct. For company it is limited liability, but for you it will be unlimited liability. So if the company is a private company, all directors shall remain liable jointly and severally. What if the private limited company gets converted into public company? Then the director will not be liable. Okay, that's where, you know, a lot of people now with 8 employees, 10 employees also, they will become a public limited company. You are not aware. Recently, 2 showrooms, they went for a IPO and they became a public limited company. They converted to a public limited company. So anyone can become. There are a lot of SMEs. So small and medium companies are now coming into IPOs and they are converting into public limited company because these are the privileges. And liability in case of partners of a firm, whether partners and firm both are jointly severally liable, of course. So far company, we did not see liability for company, we saw liability only on the directors. But when it comes to partnership firm don't have limited liability, na? So therefore firm also liable and partners of that firm is also liable, and retiring partner will continue to be liable till the date of his retirement, provided he gives a notice of his retirement within 1 month from the date of his retirement. Suppose if he is not giving the notice of his retirement within 1 month, the date on which he gives the notice of his retirement, till that date he is liable for the dues, even though it is after retirement. Then liability of guardians or trustees. So guardian or trustee of minor or incapacitated person will be liable to pay dues as if this business is carried on by them only. And liability of court of wards. Same, court of wards also like guardians, but guardian will be natural guardians, whereas in case of court of wards, it will be appointed by the court when there are no natural guardians for that person. So when the person is not having any parents, relatives, etc., but lot of estate is there in the name of that person, then in that case court will be appointed one administrator general or official trustee. That person will become the guardian and that person will have the liability. And whenever there is a death of a person, whether the liability will be there on the legal representatives? Yes. If the business is continued, the legal representatives have to pay liability, whatever may be the amount. But if the business is discontinued, even then there is a liability to the extent of estate is inherited by them. Business discontinued, legal representative will remain liable to the extent of estate inherited. And HUF or AOP, there is a partition. Whenever there is a partition of assets between HUF, so then even then, before partition, whatever was the dues, all the members are jointly and severally liable. Same way, when partnership firm is dissolved, partners will remain liable jointly and severally. And this point you remember, whenever the partnership firm there is a change in constitution, so all the members are jointly severally liable, which means that you are newly admitted as a partner in one partnership firm. Before the date you were admitted into the partnership firm, there will be some liability. Are you required to pay the GST dues? Yes, you will have the liability. So whenever there is a change in the constitution, so newly admitted partner will have the liability before the date he was admitted into the partnership firm. If there is any GST dues, he is also jointly and severally liable with respect to the dues. Clear? So these are the points that we have. So maybe it may or may not be asked, but this much knowledge is sufficient related to this. And we'll take a break. Then we will continue with, I think 3 topics are left: registration, advanced ruling, ethics. Okay, ethics in GST. Fine. So with that we will complete. Okay, we'll start. So there is one query, sir, if distinct person is within a single state, even then SGST credit cannot be transferred from one to another. Problem is the distinct person transfer of credit from one cash ledger to another cash ledger is not given in SGST Act. So these provisions were given in CGST Act and IGST Act only, not given in SGST Act. We discussed one concept now today, that is this. Why is it like that? Why is it like that? Because this section or this provision is missing in SGST Act. When this is missing in SGST Act, where from we can make the transfer? So we cannot make the transfer. So therefore, even if it is within the state distinct person also, this is not possible. Not only interstate distinct person, within the state distinct person also, same story. Okay. Next, can you solve some sample questions for 14 marks in YouTube session? I'll try, but not now, because let me complete this portion first. But I am not going to stop this. So even there are a lot of things which I wanted to do. So one MCQ session we will do, and covering few 14 marks questions also. I will try to upload it as to how to approach that, etc. and all. So therefore, don't worry, I will definitely do that. So see this segment 12, registration. So in this registration chapter, we have section 22 to section 30. So section 22, 23, 24, which talks about the legality of registration. So when a person is required to get registered, and when a person is not required to get registered, and when a person is compulsorily required to get registered, these three sections are given in 22, 23, 24. 22 talks about person liable for registration, 23 persons not liable for registration, 24 compulsory registration in certain cases. Then 25, 26, 27 talks about the procedural aspects. As per section 25, what is the procedure for registration? 26 deemed registration, 27 special provision for CTP and NRTP, and section 28, 29, 30 special cases. 28 deals with amendment in registration, 29 cancellation or suspension of registration, and 30 revocation of cancellation of registration. This section 25 to 30 is purely for MCQ and short note questions, whereas the application based questions we will be getting on 22, 23 and 24. So first we need to know when a person is required to get registered. As per section 22, a person is required to get registered if their aggregate turnover in a financial year exceeds the threshold limit. What is that threshold limit? If they are doing business in MMTN, if they are doing business in a single state, and that single state is in MMTN, Manipur, Mizoram, Tripura, Nagaland, then the limit will be 10 lakhs. Let it be goods or services, the limit will be 10 lakhs. And if they are doing business in U-stamp, that is Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Puducherry, then the limit will be taken as 20 lakhs, let it be goods or services. If they are doing business in other states, then the limit will be 40 lakhs if they are exclusively engaged in supply of goods. If they are supplying both goods and services or services, then the limit will be 20 lakhs. And remember, if they are exclusively engaged in supply of pan masala, tobacco products, then bricks and roofing tiles, ice cream and edible ice, that 40 lakhs limit will not be applicable. So 40 lakhs limit is not applicable for persons making supply of ice cream, edible ice, pan masala, tobacco products, bricks and roofing tiles. So there is a restriction. Like this, already we have some list of goods in case of composition scheme also. But what is the difference between that list to this list? There, even only manufacturer of notified goods cannot opt for composition scheme, but a trader of notified goods can opt for composition scheme. But here, let it be manufacturer or trader will not get the 40 lakhs limit. And there it was aerated waters also there, but here aerated waters is missing. So if a person is exclusively engaged in supply of goods, but if that goods is these goods, then they will not be able to get 40 lakhs limit. Then what if they are doing business in multiple states? If they are doing business in multiple states also, you need to remember 3 points. If one of the state is in MMTN and taxable supplies are made from that state, then the limit will be 10 lakhs. So if the supplies are made from multiple states and if the taxable supplies are made from special category states, only then 10 lakhs limit will be applicable. Suppose if none of the states is in MMT and use stamp and they are exclusively engaged in supply of goods, then the limit will be 40 lakhs. In balancing figure cases, it will be 20 lakhs. And also remember, if a person is making only supply of goods and if he has interest income, still he will be treated as engaged in supply of goods and the limit of 40 lakhs will be applicable. I am a person engaged in supply of goods and I have a small income called as interest income, still I will be treated as supply of goods and 40 lakhs limit will be applicable. If I am engaged in supply of goods and I have some other services, small component only, even then 40 lakhs limit not applicable. So the exception for that is that interest income. So the limit of 40 lakhs is applicable only in case of exclusive supply of goods. And next, when this 40 lakhs limit is not applicable in case a person is voluntarily registered or compulsorily required to get registered under 24 or making supply of these goods. So as and when aggregate turnover during a financial year exceed threshold limit as discussed above, they are liable to get registered. And is there any exemption from registration? Yes. In 4 cases they are exempted from registration. What are they? If they are exclusively engaged in making exempted supplies, including non-taxable supplies, or an agriculturist, but agriculturist should be engaged in supply out of cultivation of land. And if they are exclusively engaged in RCM supplies, in these 3 cases they are exempted from registration. Suppose if a person is making both exempted and taxable supplies, then the above exemption not available. Also, generally a person who is supplying goods through e-commerce operator is compulsorily required to get registered, but they have a relaxation. If they are making only intra-state supplies, they need to register only when aggregate turnover exceed threshold limit, but they need to obtain a unique enrollment number. Person making supply of goods through e-commerce who is required to collect TCS and having aggregate turnover below threshold limit, first he should not make interstate supply of goods and they should not make interstate supplies even through e-commerce operator. What is the difference between first point and second point? First point is that directly they should not make interstate supplies. Second point, through e-commerce operator also they should not make interstate supplies, and they should declare permanent account number, address and all for validation in the portal, and they need to get a unique enrollment number in the portal, and as and when their aggregate turnover exceed threshold limit, then they need to cancel that unique enrollment number and get the regular registration. Then compulsory registration we have in 2 places. Section 22 also there is a compulsory registration. That is, if a person is already registered under earlier indirect tax regime, then he will also be required to register under GST law. Same way, whenever there is a transfer of business, transfer is also required to get registered, and whenever transfer pursuant to scheme of amalgamation or demerger, then the new company also should get registered irrespective of threshold limit. However, in these 3 cases, they can make application for cancellation of registration as and when aggregate turnover falls below threshold limit. But in case of compulsory registration under section 24, they are always required to get registered. Even if the turnover falls below threshold limit, they cannot make application for cancellation of registration. What are the cases where a person is compulsorily required to get registered under section 24? I, creations. I for interstate supply of goods other than handicrafts, and C for casual taxable person other than handicrafts, and R for recipient, but which recipient? RCM 9 subsection 3, and E for e-commerce operator. 2 e-commerce operators are compulsorily required to get registered. E-commerce operator liable to pay GST under 9 subsection 5, and e-commerce operator liable to deduct TCS under section 52. A for agent making supply on behalf of principal, and T, TDS deductor. Then I, input service distributor. O, OIDR supplier located outside India and making supply to non-taxable online recipient. Sir, whether OMG supplier located outside India is also compulsorily required to get registered? Yes, already we discussed that part. In section 14A we discussed. So not only OIDR supplier, even OMG supplier. Even OMG supplier located outside India. OMG supplier located outside India is compulsorily required to get registered. Then N for non-resident taxable person. S for supplier of goods through e-commerce operator, but other than those who are making only intra-state supplies. Then here you need to understand that if a person is covered under section 23, they are exempted from registration and they are not required to get registered even though they are covered under section 24. For example, if I am making exclusively RCM supplies, my inward supply is also covered under RCM. Now in that case, as I am making exclusively RCM supplies, I am exempted from registration. But when I have some inward supply on which I need to pay GST under RCM, I need to compulsorily register. Should I register or not? No, because section 23 overrides section 24 or 22. So they are not required to get registered. But section 24 will override section 22. Means once you are covered under section 24, irrespective of threshold limit, you need to get registered. Then section 25 talks about procedure for registration. What is the procedure for registration? REG 1, they need to make application for registration. REG 2, acknowledgement. REG 3, notice for discrepancies. REG 4, reply to the notice. REG 5, rejection of application. REG 6, certificate of registration. And once you make application for registration, immediately you will get the acknowledgement. And thereafter, within 7 working days, either you need to get a certificate of registration in REG 6 or you need to get a notice in REG 3. Suppose if you get a notice in REG 3 within 7 working days, thereafter what is the time limit within which you need to reply to the notice? 7 working days. After you give reply to the notice within 7 working days in REG 4, thereafter whenever they received your reply within 7 working days, either they need to grant you registration certificate in REG 6 or they need to cancel the registration in REG 5. In all these cases, the time limit is 7 working days. Generally, what is the time limit within which we need to make application for registration? 30 days from the date on which we are liable to get registered. But in case of CTP, NRTP, they need to make application for registration at least 5 days before commencement of business. So, application for registration to be submitted within 30 days from the date when they are liable to get registered. In all this procedure for registration, the time limit is 7 working days, and usually at the time of making application for registration, we don't have to submit the bank details mandatorily, but at a later point of time we can submit the bank details. Previously it was 45 days, now they have reduced it to 30 days. So whenever we are making application for registration without bank details, we get the registration certificate. As and when we get the registration certificate, within 30 days we need to make, that is we need to add the bank details within 30 days. From which date? From the date on which we got the registration certificate or date of filing GSTR1, whichever is earlier. Okay. So bank details can be furnished within 30 days from the date of registration or date of filing GSTR1, not due date of filing GSTR1, date of filing GSTR1, whichever is earlier. However, this particulars is not applicable in case of TDS TCS deductor, which means TDS TCS deductor should submit the bank details at the time of making application for registration. But for others, they can submit the bank details at a later point of time. Again, this is an amendment not tested yet in last attempt, so they can make a question on this. So remember the time limit, 30 days from the date of registration certificate or date of filing GSTR1, whichever is earlier or whichever is later, whichever is earlier. Then next one, usually in some cases the 7 days time limit or 7 working days time limit is not applicable. What are the cases where 7 working days time limit is not applicable for granting registration? Usually what is the time limit within which registration should be granted? 7 working days. But whenever physical verification is required, then this 7 working days will not be applicable. Focus here. So whenever physical verification is applicable, 7 working days not applicable. So when physical verification is applicable, in 3 situations, physical verification will be applicable. Concentrate. You are making application without selecting Aadhaar authentication. Then it is subject to, registration is subject to physical verification. Situation number 2, you made the application by selecting Aadhaar authentication, but you have not completed the Aadhaar authentication within 15 days, then also it will lead to physical verification. Okay. Then number 3, you have made the application with authentication and you completed the authentication within 15 days, but the officer, because of the risk parameter, they have taken up for physical verification. In these 3 cases, physical verification of place of business will be required. Wherever physical verification comes into picture, the time limit for grant of registration is 30 days. It's not 7 working days. It will be 30 days. Okay. So what are the cases where physical verification will be applicable? You made the application without Aadhaar authentication. See page number 115. You made the application without Aadhaar authentication, or you made the application with authentication but not completed within 15 days, then also physical verification. Or you made application with authentication and successfully completed the authentication, but the officer based on risk parameter requires site verification. In these three cases, site verification is required. Is that clear? Can you repeat it, Pa? Definitely it will come here as a short note. What are the three cases? Application without authentication, or application with authentication and not completed within 15 days from the date of application, that is from the date of submission of the form. And then next third case, application with authentication and completed the authentication within the 15 days, but based on risk parameters, officer requires site verification. In these three cases, what is the time limit within which they will complete the physical verification and grant? 30 days. 30 days from when? In the first case, whenever you submitted the form, from there 30 days. In the second case, on expiry of 15 days, 30 days. You understood? Because first 15 days, you have to do the authentication now. So on expiry of 15 days, 30 days. In the third case, from the date when you completed the authentication, from there 30 days. You understood? So 30 days, carefully you try to remember with logic. First case, whenever you submitted without for authentication, on expiry of that 15 days, 30 days will count. And in case of third case, you completed the authentication. When you completed the authentication, from there within 30 days, they need to do the physical verification. What if they are not doing the physical verification within the 30 days and the registration is deemed to have been granted? Okay. So, officer will conduct the verification of place of business within 30 days of application. After physical verification, so registration certificate is granted. If proper officer fails to issue notice, so if they complete the verification, they need to give notice or they need to grant the registration. Nothing is given within 30 days, then deemed registration. Is it clear? And whether the person should be present at the time of physical verification? No. So at the time when they do the physical verification, the applicant need not be present, but someone, if it is there, if they are in the place, that is sufficient. So not necessary that the applicant should be physically be present at that place. Okay. Now related to this, they have given one amendment, that is, what is the time limit for physical verification? Can the physical verification be done even after grant of registration? Yes, physical verification can be done even after grant of registration. Physical verification can be done even before grant of registration. So if the physical verification is done after grant of registration, means they gave the registration certificate, then they are doing physical verification. What is the time limit within which they need to upload the report in the portal? So within 15 working days from the date of such verification, they need to upload the details in the portal, because in the past, lot of officers, just for the namesake, they will be coming, but they will not do physical verification, and they will inform to their officer superior that we went for physical verification, but that person was not present, because of which unnecessarily registrations were getting cancelled. That was a huge harassment. So they will come, if we are not paying bribe, they will be mentioning that we are not located in that place and registration will be cancelled. Even ITC also gets suspended if the person is not in existence or not doing business from the place where they have obtained registration. That is the case for Rule 86A. To surpass that only, they have brought in this amendment. If the officer, any officer is going for physical verification, when is it called as physical verification? Only if they upload the report of physical verification. When they upload, they have to open the app and they need to take the photograph. In that longitude, latitude, everything will be coming. So they cannot cheat the government now. So that is this, where the proper officer is satisfied that the physical verification of place of business of a person is required after grant of registration, he may get such verification of place of business done, and the verification report along with the other documents including photographs shall be uploaded in the prescribed form on the common portal within a period of 15 working days from the date of such verification. Suppose if they are doing physical verification and then only granting registration, what is the time limit for physical verification? Usually 30 days. Means at least 5 days before the 30 days they need to. 30 days time limit is there na? At least 5 days before that end of 30th day, means 25 days, they have to complete the physical verification and upload the report. Where the physical verification of place of business of a person is required before the grant of registration, the proper officer shall get that verification of the place of business done and the verification report along with the other documents including photographs shall be uploaded in prescribed form on the common portal when? At least 5 working days. Here everywhere it is working days only because department is doing. For them working days will be only there. You only days. For you only it will be days here because for you every day is a working day only, correct or not? But for a department, how can you ask them to work on holidays? So it will be working days, 5 working days, 15 working days. 5 working days prior to the completion of the time period specified. You understood this? Now here we need to understand the deemed registration. Now tell me, what are the 2 places where 7 working days is applicable? First, already we discussed. First, we went for Aadhaar authentication. We completed the authentication and no notice. We have to get the registration certificate within 7 working days, otherwise deemed registration. Suppose if we get a notice, we gave a reply to the notice and thereafter they have to grant registration within 7 working days, otherwise also deemed registration. And in remaining 3 places it will be 30 days, correct? So combining everything I have given here, but don't write like this in exam when you get a deemed registration. So when you get a question like, it is important for short note, when you get a question like, what are the situations where the registration of a person is deemed to have been granted, you need to write these 5 situations. Situation number 1, Aadhaar authentication opted. Aadhaar authentication opted or not opted? Not opted. Okay, no. Aadhaar authentication not opted. And what is the time limit within which the registration should be granted? Within 30 days from the date of application. If the registration is not granted, then registration deemed to be granted. If Aadhaar authentication is opted, but Aadhaar authentication not completed within 15 days, then on expiry of the 15 days within 30 days, if the registration is not granted, then also registration deemed to be granted. Suppose if Aadhaar authentication is opted and Aadhaar authentication is completed within 15 days, but based on risk parameters, so the officer has taken up for site verification, then within 30 days from the date of application, if the registration is not granted, then also deemed registration. Suppose if Aadhaar authentication opted and authentication completed, but officer gave a notice under REG 3 and we gave a reply to the notice, and thereafter within 7 working days, if the registration is not granted, then also registration deemed to be granted. Aadhaar authentication opted and completed, neither notice nor physical verification, then the registration should be granted within 7 working days of the authentication, otherwise registration deemed to be granted. Is it clear? So this is what you need to write when you get a question on deemed registration. And you may also get another short note question, what are the cases where Aadhaar authentication is not applicable? Aadhaar authentication not applicable, like that you may get a question. So what you need to write? So for a person who is not a citizen of India, if you are a citizen of India, no doubt Aadhaar authentication is applicable. Not a citizen of India, there is no Aadhaar number na for them. Then HUF, in case of HUF, who is required to undergo authentication? Karta. Then who is not required to undergo? Co-partners, that is other members of HUF. In case of firm or LLP, who is required to undergo authentication? Authorized or managing partner. So who are not required to undergo? Other partners. In case of company, body corporate or other entity, who is required to undergo? Authorized signatory. So other members are not required to undergo. So tell me what are the first 4 points who are not required to undergo authentication? Not a citizen of India and co-partners in case of HUF, partners other than managing or authorized partners, members other than authorized signatory. Then government and its family members. 4 already we discussed. Central government, state government, department, local authority, statutory body, PSU. Next 4. And last, UIN holder. UIN holder is also not required to undergo authentication. Is it clear? And this is not only at the time when we make application for registration, even subsequently also they are not required to undergo authentication. But others, initially at the time of application not required, but after they get the registration, they need to definitely undergo authentication. That is mandatory. Got it? Then next, say this. The above persons are not required to undergo authentication even though they have already registered, but other than above, if they are already registered also should undergo authentication. Then what is the time limit for making application for registration? Already we discussed, within 30 days from the date you are liable to get registered, but in case of CTP, NRTP, at least 5 days before commencement of business. Then section 26 talks about deemed registration. Sir, what is this deemed registration versus this deemed registration? This deemed registration is registration deemed to have been granted, okay, whereas section 26 specifically one deemed registration is there, which says that if your registration is deemed like completed under CGST Act, it is deemed to be completed under SGST, UT, GST Act also. Under every act you don't have to apply for registration separately. Then section 27, special provision for CTP, NRTP. Basically casual taxable person and non-resident taxable person will not be having any physical place of business, so they get a temporary registration for a maximum period of 90 days, and it can be extended for a further period not exceeding 90 days, and during that period they need to deposit the advance tax, and that advance tax deposited in the electronic cash ledger will be adjusted against their liability. But how much they need to deposit as advance tax? Estimated tax liability, whether it is estimated gross liability or net liability, estimated net liability they need to deposit, and even for the further extended period also they need to deposit the advance tax that will be adjusted towards their liability. If there is any excess amount, they will be able to get the refund. Now, is there any time limit for making application for refund in this case? No, because usually whenever there is excess balance in the cash ledger, there is no time limit for application for refund. Do you remember in the refund provisions? So that is this. These are the points you need to remember. And distinguishing point, CTP. Who is a CTP? Who come from other state to this state occasionally and is engaged in making supply of goods or services and is not having any physical place of business in this state. Whereas NRTP, outside India to India, who is not having any physical place of business in India. And casual taxable person should undertake the transaction in the course or furtherance of business, but no such requirement is there for NRTP. And casual taxable person will have a permanent account number. Using that permanent account number, they will get a normal registration. But for NRTP, there is no permanent account number. So therefore, using their passport or the permanent account number of the authorized signatory, they will be taking. Does not have a PAN, so he can take registration with passport. And what is the application for registration? CTP, regular registration, REG 1. Whereas for NRTP, it will be REG 9. And what is the return that will be filed by CTP? Regular returns, GSTR 1 and GSTR 3B. But for NRTP, they will be filing return in form GSTR 5. And amendment in registration, section 28. So whenever there is a change in details initially submitted at the time of registration, if there is any change at a later point of time, we need to intimate that to the department. And what are those changes? It can be change in core fields or change in non-core fields. What are change in core fields? Change in name, change in address, change in top management, that is partners or karta or managing director is known as core field. In that case, amendment is subject to approval by the officer. But any other change, what is any other change? Change in bank account or change in like mobile number or change in email ID or change in goods or services, HSN or SAC, all those cases it will be non-core field. In case of non-core field, there is no approval of the officer is required. Automatically it will be updated in the portal. But in case of core fields, we need the approval of the proper officer. And whether the amendment that is carried out in the portal will be prospective or retrospective, mostly it will be prospective from the date on which you made the application for amendment. But if you want a retrospective amendment, then it should be subject to approval of the commissioner. Retrospective amendment in registration is possible only with the order of the commissioner. What is the procedure for amendment in registration? First, you need to make the application for amendment in REG 14. What is the time limit within which you need to make application for amendment? Within 15 days. As you are doing, it will be 15 days. And once you make the application within 15 days, so if it is a core field, the application will be forwarded to the proper officer, and if they have any issue, they will give a notice in REG 3. Usually notice will be REG 3. What is the time limit within which they will give notice? 15 working days. They are doing now, so 15 working days. And then REG 4, you need to give reply. Usually reply will be 7 working days within which you will give reply, and thereafter within 7 working days, either they can reject or they will be granting the amendment order. Is it clear? So order of amendment within 15 working days from the date of application. Suppose if they give notice within 7 working days from the date of reply, else it will be deemed to be amended. Okay. So initially when you make application within 15 working days, either they need to give you notice or they need to pass the amendment order, if not deemed to be amended. Suppose if they give a notice, you will give a reply to the notice, and thereafter within 7 working days, either they need to reject the application or they need to pass the amendment order, otherwise also deemed to be amended. You understood the procedure now? Next, section 29, cancellation of registration. In this cancellation of registration, there are 2 theory questions. Number 1, that is what are the situations that leads to cancellation of registration, or number 2, what are the contravention of provisions that leads to cancellation of registration. The answer for these 2 questions is not same. First, when they are asking about the situations, we need to write 8 points. So first 3, where the registered person can make application for cancellation or proper officer also can initiate cancellation. What are those cases? Whenever there is a transfer or discontinuance of business, or whenever there is a change in constitution resulting in change in permanent account number. Automatically when the permanent account number changes, so therefore the new registration needs to be obtained, like death of the sole proprietor and legal heir is taking over the business, that is change in constitution. Number 1, transfer or discontinuance of business. Number 2, change in constitution. Number 3, the registered person is no longer liable to be registered, means their aggregate turnover falls below threshold limit, or now they are not covered under compulsory registration. Then they can make application for cancellation, or officer also can initiate cancellation. But the next 5 cases, proper officer will initiate cancellation of registration. What are those cases? Number 1, contravention of provisions of the act or rules, or what are those provisions that we will see next point. But second one, if they are not filing returns, so which person composition scheme has to file annual return within 30th April of the succeeding financial year. If they are not filing annual return within 3 months after due date, within 3 months after due date, if they are not filing annual return, registration is liable to be cancelled. If they are under normal scheme, and if they are not filing returns for consecutive 6 months or 2 quarters, or registration has been obtained by fraud, or if they have voluntarily got registered but not commenced business within 6 months. In these 5 cases, proper officer will initiate cancellation of registration. They will give a notice in REG 17. Suppose if you make application for cancellation, that is REG 16. But remember, whenever you are making application for cancellation, Aadhaar authentication is mandatory. Sir, optional is only at the time of registration. Thereafter, everyone should undergo authentication only. And reason being, say for example, no, you are a CA article student and you ask the principal for leave, and they are telling no, leave will not be there. After September 30th, you take leave because up to September 30th, you have work. Sir, in 1 month I will not be able to complete it. It's okay, you postpone the exam for May 25, like that they are telling. Now what you will do, you want to take a revenge. So you know the username and password of the clients in GST portal. You logged in and you made application for cancellation of registration. Possible na? So therefore, due to that reason, Aadhaar authentication is mandatory. Whenever you apply the cancellation also, the client will receive a SMS. You have successfully initiated a cancellation of registration, please share this OTP, like that it will come, okay. Then he will call the principal, beep, 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 like that. So it will happen, you understood. So that's why Aadhaar authentication is mandatory at the time of making application for cancellation of registration. Then can TDS TCS deductor also make application for cancellation of registration? Yes. And what is the meaning of contravention of provisions of the act or rules that leads to cancellation of registration? Total 7 points here. That is wrong address. Wrong address means they are not doing business from the place where they have obtained registration. Wrong ITC. Wrong ITC means they avail the ITC in contravention of the provisions of section 16, means they did not follow proper conditions and they have taken the ITC. Then wrong invoice means they have not given valid invoice, so they have given incorrect details in the invoice or supply without invoice, etc. and all. In these 3 cases also it will lead to cancellation of registration. Then 3 violations. Violation of anti-profiteering order. So whenever you have not passed on the benefit to your customers by reducing the price, even though there is a reduction in rate of GST, then it is known as profiteering, and anti-profiteering authority will pass an order. So if you are not complying with that anti-profiteering order, that is violation of anti-profiteering. Number 2, violation of furnishing the bank details. You have to furnish the bank details within 30 days from the date of registration or date of filing GSTR1, whichever is earlier. Otherwise, what will happen is that your registration will be cancelled. And next, third violation is violation of 86B. That is, you have to pay 1% of your liability through cash ledger. If you violate that, then also that is a reason for cancellation of registration. Understood the 6 points? First 3, wrong address, wrong invoice, wrong ITC. Next, 3 violation. Violation of anti-profiteering, violation of furnishing bank details, and violation of Rule 86B. And last case, if your liability in GSTR1 greater than liability in GSTR3B, we discussed 88C and 88D. That is also a reason for cancellation of registration. Liability in GSTR1 greater than 3B for 1 or more tax periods, or ITC in 3B greater than 2B for 1 or more tax periods, then also it will lead to cancellation of registration. So whenever you get a question on contravention of provision that leads to cancellation of registration, these 7 points you need to write. Whenever you get a question on what are the situations or what are the cases that leads to cancellation of registration, you need to write these 8 points. Okay. Then next, whenever you make an application for cancellation, and whenever there is a cancellation of registration, what will be the consequence? We discussed already. We need to reverse the ITC, section 29 subsection 5. So much of the ITC on inputs as such in stock, inputs in the form of WIP in stock and inputs in the form of FG in stock, and even on capital goods, ITC avail needs to be reversed. So that is the consequence. So whenever you make an application for cancellation, or whenever officer initiate cancellation, they may suspend, not shall suspend, may suspend, highlight that. So it is not compulsory to do the suspension of registration. They may suspend the registration till the cancellation proceedings are happening. Okay. So when you make an application for cancellation, what is the conclusion of the cancellation proceedings? Either they will reject your application or they will pass a cancellation order. Until that point of time, your registration will be suspended. Same way, when officer initiate cancellation, so what is the conclusion of cancellation proceedings? Either they will drop the proceedings or they will do the cancellation order. Till that time, they may suspend your registration. So whenever they suspend your registration, which means that are you a registered person or not? You are a registered person, but you will behave like an unregistered person, which means on your outward supplies, you cannot issue tax invoice. On your inward supply, you cannot avail ITC, means you cannot file returns. Got it? But the moment when they pass the cancellation order, you are officially unregistered person. So far you are behaving like unregistered person. Now officially you are an unregistered person. That is the meaning of that. Okay. So suspension of registration can be without affording reasonable opportunity of being heard. And what is the procedure for cancellation of registration? So first, you are making the application for cancellation of registration in REG 16, and proper officer satisfied that the registration is liable to be cancelled? No. So within 30 days from application, if they are not satisfied, they will reject the application. Means maximum for how many days they can suspend? 30 days. And suppose if they are satisfied, yes, your registration is to be cancelled, then within 30 days, they will pass an order for cancellation of registration. For this 30 days itself, they can do the suspension of registration. You understood this process? Then second, suppose if the proper officer feels like your registration is liable to be cancelled, so he initiates cancellation. What is the first step? He will be giving the notice. And after notice, you need to give the reply within 7 working days. Always in registration, remember the reply will be 7 working days. You need to give the reply. And the proper officer is satisfied with the reply, yes, then they will drop the proceedings. And suppose if the proper officer is not satisfied with the reply, then they will pass an order. What is the time limit within which they need to do this action? Within 30 days. So wherever this 30 days is given, actually this 30 days is not given in the law, but this 30 days is through a CBIC direction. Means they are giving the direction to the department to do that in 30 days. Try to complete in 30 days, but mostly they will take 60 days, 70 days, 100 days also they will be taking. So time limit not prescribed in rules, but as per CBIC direction, it should be completed within 30 days from show cause notice. Understood the procedure for registration? Now, see this, what is the period for which registration will be suspended? I told you already, whenever you make application for cancellation, whenever you make the application or the date selected by you, whichever is earlier or whichever is later, For example, today you are making application and you are selecting 1st October. So therefore, today or 1st October, whichever is later, from 1st October your registration will be suspended. Today you are making application for cancellation and you selected 1st September. So 1st September or today, whichever is later, will be today's date. So they will be taking as the date of suspension of registration till the conclusion of cancellation proceedings. Suppose when proper officer initiate cancellation, he will specify from which date your registration will be suspended, from that date till the conclusion of cancellation proceedings. And during the suspension period, so can a person make taxable supply by issuing tax invoice? No. Means he need to make the supply without collecting GST, because he is like an unregistered person. Can he avail ITC and file returns? No, he cannot file any returns. And whenever they conclude the cancellation proceedings, they will be revoking the suspension. The suspension of registration shall be deemed to be revoked upon completion of cancellation proceedings. Now they have made one amendment, that is, whenever the suspension is initiated till the conclusion of cancellation proceedings, if you file the returns, see, non-filing of returns is also one of the reason for cancellation, na? So therefore, if you have not filed any returns, you would have gotten notice for cancellation. So the suspension is initiated. During the suspended period, can you file the returns? Yes, you cannot file the returns of this suspended period during the suspension of registration, but you can file the returns of the prior period during the suspension of registration. Are you understanding? That is, during this period, you cannot file the returns of that period, but you can file the returns of the earlier period during this time. And when you file those pending returns, the registration, that is the suspension, will be automatically revoked. Then look into the next one, last section, section 30, revocation of cancellation of registration. That is, whenever they pass the order of cancellation, what is the time limit within which we can make application for revocation of cancellation? Previously 30 days, now they have changed it to 90 days, and it can be extended for a further period of 180 days. 90 days plus 180 days. That 180 days extension can be given either by commissioner or additional commissioner or joint commissioner, and not 90 plus 90, 90 plus 180, 90 plus 180 days, and 90 days plus 180 days by commissioner or officer authorized by him. And once we make application, we need to ensure that all the pending returns are filed if the registration is cancelled on account of non-filing of returns. So before making application for revocation, all the pending returns till the date of cancellation of registration, please concentrate. Before making application for revocation, all the pending returns up to the date of cancellation of registration you need to file. Then only application for revocation will be accepted. And once you make application for revocation, within 30 days, if proper officer is satisfied, they will revoke the cancellation and you will continue in the registration. Suppose if the officer is not satisfied, within 30 days they will give a notice, and thereafter you need to give reply to the notice. What is the time limit for reply to the notice? Within 7 working days, and thereafter within 30 days, if the proper officer is satisfied, they will revoke cancellation, otherwise they will reject the application. Suppose they have revoked the cancellation, from the date of cancellation till the date of revocation of cancellation, you have not filed returns, na? Correct or not? When they revoke the cancellation, you will continue in the registration. So those pending returns, which pending returns? From the date of cancellation till the date of revocation of cancellation, those pending returns you need to file within 30 days from the date of revocation. See the below. So first, order of cancellation, revocation application, then revocation order. Okay, now carefully listen. Whenever there is an order for cancellation, this is the order for cancellation, then you made the revocation application and then you got the revocation order. Now all the returns which are not filed up to the date of order of cancellation, you need to file before making revocation application. Correct? All the returns up to the date of order of cancellation you need to file before making revocation application. From the revocation application to revocation order or order of cancellation to revocation order, whatever returns not filed, that needs to be filed within 30 days from revocation order. Is it clear? So therefore 30 days from revocation order that should be filed. Then, sir, when you explained the Bayer Act in the regular class, you said time period is 90. Yes, Pan, I explained initially 90 plus 90. I am accepting that. But at a later point of time, a clarification was given. This was applicable for May 24 exam itself. Okay. So there itself I mentioned, because if you have doubt, you can see the last revision also. So it was 90 plus 180 only. I rectified that because of the clarification. But this clarification was old clarification only. When I took the regular batch, it was in October 2023, and thereafter, so clarification came and I have incorporated that it is 90 plus 180. Sorry for that, kindly rectify. Then, so with this we completed registration. And sir, Aadhaar authentication is mandatory even for revocation of cancellation? Yes. Tell me what are the 3 places where Aadhaar authentication is mandatory? Mandatory. Application for refund, application for refund, application for cancellation, application for revocation of cancellation. Okay. Then there is one query. Sir, can demand and recovery or assessment is possible even after GST is cancelled but within the time limit? Yes. Even if their registration is cancelled, the assessment is possible. Demand and recovery not possible. Demand and recovery is only 73, 74 only for registered person. But assessment is possible. You tell me which assessment is possible even after cancellation of registration. 63. 63. Assessment of unregistered person. Which assessment? Best judgment assessment is possible. Okay, even if the registration is cancelled, still they have liability now. So that liability to recover, they can do the best judgment assessment under section 63. Then next. Can you clarify regarding exemption related to handicraft goods for registration? You tell me what is the exemption for handicraft goods. Already I discussed. In the discussion it was there. Tell me, yaar. Handicraft goods we did not discuss at all. Huh? Go. Compulsory registration, you see. Compulsory registration. What is the exemption? Generally, a person who is making interstate supplies is compulsorily required to get registered. But suppose if they are engaged in making handicrafts, they are not compulsorily required to get registered. They need to register only when aggregate turnover exceeds threshold limit. Same way, every casual taxable person is compulsorily required to get registered. Suppose if they are engaged in sale of handicrafts, they are not compulsorily required to get registered. They need to register only when aggregate turnover exceeds threshold limit. That already I gave in the compulsory registration itself. Interstate supply of goods in brackets other than handicrafts, and casual taxable person in brackets other than handicrafts. Okay. Then look into advance ruling, page 177. So what is this advance ruling? It is like destroying the career of professionals. really, yeah. Because this advance ruling is like a consultancy which is done by the GST department itself, wherein if the person is having any query, any question, so he can seek the advance ruling from the department, and that advance ruling what he sought from the advance ruling authority will be binding on the department, and which means tomorrow the department cannot question him as to why he followed that treatment. Okay. And what are the various questions on which advance ruling can be sought? So what is the beginning chapter? See the index. See the index. Supply chapter to registration chapter. Supply chapter to registration chapter, except place of supply, everything can be questioned. You understood? So what are the questions for which they can go for advance ruling? Supply to registration, except place of supply means registration, they can go input tax credit, they can go time of supply, they can go exemption notification, they can go composition scheme, they can go, or whether an activity is supply or not they can seek, or what is the value of supply also they can seek. Is it clear? Sir, what about offences penalties? No, you cannot ask. Sir, I am thinking of doing this offence, sir. What will be the implication? Like that you cannot ask. You understood? So that is not possible. So up to registration. So say this: supply, classification, valuation, registration, tax liability determination, time of supply, input tax credit, and applicability of notification. What are some ineligible questions? Place of supply, not possible. Returns, payment process, penalties, appeals, etc. not possible. Why place of supply not possible? Because the advance ruling authority is basically a state level authority. If it is advance ruling on place of supply, that is going to impact 2 states. So advance ruling authority, we don't have a national advance ruling authority, we have only state advance ruling authority. See this: AAR, authority for advance ruling. Another authority is appellate authority for advance ruling. Like that, we have 2 different authorities here. First one is authority for advance ruling, and the second one is appellate authority for advance ruling. First, when we go for authority for advance ruling, they will be giving the ruling. Suppose if there is any difference of opinion between the members, then the application will be forwarded to appellate authority for advance ruling. Geographical scope, if you see, it is a state level authority. There is no central AAR, and separate AAR for each state will be there. When application can be made, either before commencing any activity or in respect of ongoing activity, you can go, and either registered person can go for advance ruling or unregistered person can go for advance ruling. That's what many times to my friends I will be telling. Suppose if you want to give a very good opinion and even the client is ready to wait, you ask your article student to make application for advance ruling. Let the advance ruling be given, you copy paste in your letterhead and you raise invoice to that person. You understood? That's the easy way. But only thing, advance ruling, how many days it will take? 90 days. So if the client is ready to wait for 90 days, it is super. Otherwise, definitely not. But no client will be willing to wait for 90 days and all. Today they will ask question and tomorrow they need to get the reply, because I know how my students are. So they will ask question morning, by night I should reply, otherwise they will tell, waste faculty, or he is like that. I have to look after my career also, I have one family and I have to look after that also understand. So why I am telling you this? Because you ask query, but give me some space to reply. Definitely I will reply, I will not run away anywhere, but give me some time also to reply, because I have other things also to be done. Okay, so don't expect me to reply immediately like a client how he expects from the chartered accountant. So what is the time limit within which? But department, see, authority for advance ruling, how many days? 90 days. One attempt also will get completed. And this, what is the fees here? With fees, of course, you have to wait. 5,000 plus 5,000. 5,000 under CGST and 5,000 under SGST. Withdrawal of application, no express provision. Time limit for pronouncing the ruling, 90 days. Rejection of application. If the issue is pending in any authority, like for example, we commence the activity and they gave a notice. They gave a notice on us. Related to this notice, we cannot go for advance ruling. You understood? Whatever issue for which we got a notice means the issue is pending before the authority. So before any adjudicating authority, now we cannot go for advance ruling. If the matter is pending or decided by any court or tribunal, we cannot go for advance ruling. Suppose if the AAR pronounced the ruling, now on that, can we go for appeal to AAR? Yes, we can go for appeal to AAR, and there if there is any possibility of difference of opinion between the members, then the advance ruling cannot be pronounced. And what is the geographical scope of this AAR? Same, it is a state level authority and separate AAR for each state. What is the time limit for appeal? 30 days, plus it can be extended for a further period of 30 days, and the fees will be, that is time limit for appeal, fees will be double. 10,000 rupees under CGST, 10,000 under SGST, but AAR also will pronounce the ruling within 90 days from the date of application. See some special points related to this. Suppose if a person is not satisfied with the ruling pronounced by AAR, then what he can do? He can go for only High Court, Supreme Court using writ petition, but the regular appeal route is not possible. Even an unregistered person can make application for advance ruling. Even if supply is already made, application can be made. And advance ruling is state-wise, which means that whatever ruling I have got in this state will not be applicable in the other state, and also to another person in the same state. So whatever advance ruling that I have got, it will be binding on me only, it will not be applicable to other person. And advance ruling is binding only on the applicant and the department. advance ruling is valid till the time there is no change in law. Okay, and suppose if there is an amendment in that section, then again we need to get the new advance ruling, because that advance ruling will not be valid. And suppose if the advance ruling has been obtained by misrepresentation of facts or suppression of material facts, then they will consider that advance ruling obtained is void ab initio. Okay, so that is about this advance ruling concept. See the last chapter that we have in GST, ethics and other provisions. So there is a query, tell me how to prepare for GST for 1.5 days during exam, whether focus should be on problem solving or concept, and how to prepare for IBS. IBS you don't have to prepare anything, because whatever you prepare in indirect tax, that will be useful for IBS also. But only thing, you know why I have not omitted the amendments which already came for May 24, for the reason that it may be tested in IBS. I have discussed everything. Everything I have discussed, one point also I did not skip. So reason being, if not in the November 24 paper 5, but it may be coming in paper 6, the possibility is there. Okay, and the type of questions or the difficulty of questions in IBS is not that difficult questions and all, because I have seen the May 24 paper. So to be frank with you, actually without any preparation also, if you carry the books sitting in the 4 hours, but you should have attended some classes. All subjects, if you have attended the classes, you can happily do, because we only thought that the paper will be very difficult, this, that, a lot of overaction we did, I agree. So, but reality is that the paper was not that difficult, okay, and this IBS, don't think much about it, you focus on other papers. Actually, the problem will be in DT, IDT only, it's not in any other paper. IBS also, it will be easy. And in group 2, either DT or IDT, and last time both, okay, and this time we have to see how it is going to be, because they reduce the number of papers. When they reduce the number of papers, they have to make it difficult only. Okay, you prepare in such a way. Then next, see this, ethics and other provisions. So here ethics, like that one new topic they have added. What is the role of CA in ensuring ethics under GST? Maybe you will get a short note question. So what they need to do? No, I cannot teach this here actually. It will not sync with me. So what is the role of chartered accountant in ensuring ethics under GST? So every chartered accountant should follow certain fundamental principles while doing the GST consulting. What are they? BICOP. What is BICOP? B for behavior. They should exhibit professional behavior, and integrity means they should be transparent, and confidentiality, one client data they should not disclose with anyone unless it is required under the law. Unless it is required under the law, because in the law it says that they have to submit the information written. Now you cannot say no confidentiality, like that you cannot say. You have to disclose it with the department. Okay, then objectivity, so you should not deviate from the issue. Then professional competence, you should possess the reasonable knowledge and updates with respect to the GST. So these are the fundamental principles to be followed. Okay, then what disciplinary action on CA for not following ethics? First we will see under GST what disciplinary action will be taken. So they will come under the category of attempt to commit or abetting commission of the offences. So therefore penalty wise, if you see, there are 2 sections for penalty, that is 122 1A, at whose instance or who is a beneficiary of the offence a penalty will come, or 122 subsection 3, that is who is a party to the offence, whereas 125 general penalty also may be levied on them. And imprisonment will be applicable or not? Yes, of course imprisonment will be applicable on CA under 132 under the category of attempt to commit or abetting commission of the offence. Okay, then under ICI Act, what is the penalty? They are deemed to be guilty of professional misconduct if they are not exercising due diligence or grossly negligent or fail to obtain sufficient information for giving an opinion or certification. Then they can either reprimand the CA or remove the name of member permanently for a period of time, and what is the fine under ICA Act? Up to 5 lakhs. Then what are the areas where CA has to ensure ethics in GST? When it comes to advisory, 3 areas CA will be working in GST. One is advisory, another is compliance, and last is litigation. In terms of litigation, their role is very limited. Either they can appear before the GST officer, or they can appear before the appellate authority, that is Commissioner Appeals or Additional Commissioner Appeals, or they can appear before the GSTAT. They cannot appear before the High Court and Supreme Court, you know that. Then when it comes to compliance, these are the areas where they will be working. Remember, tracer, TRACER, T for TDS, TCS related compliance, then returns, anti-profiteering, they can do certifications, e-waybill and accounts and records. Okay. Then what are the areas where they will be working in the advisory, that is transaction advisory. So either they can provide their knowledge in structuring the transaction. Remember this SURA, S-U-R-A, S for structuring the transaction, okay. U for understanding the client's operations and registration, so they can advise them related to whether you need to register or not required to register, etc. And they can work on the assessing the impact on the pricing or assessing the impact on the supply chain, etc. These are the areas, purely theory only. And what are the certifications that can be done by a chartered accountant, like that you may get. So out of these 4, any one theory question they can ask for. So because this chapter is there, newly added, so they can ask any one question. Either they can ask this, or they can ask disciplinary action, or they can ask areas where CA has to ensure ethics in GST, or certifications by CA. What are the certifications? You tell me. ITC 1, if the ITC exceeds 2 lakhs. Sorry, it missed. Okay, 2 lakhs. So GST ITC 1, if the amount of ITC exceeds 2 lakhs. And ITC 2, when? If there is a transfer of business with specific provision for transfer of liabilities. And ITC 3, when? If market value is replaced with invoice value. RFD 1, if the ITC exceeds 2 lakhs, if the refund exceeds 2 lakhs, to prove that there is no unjust enrichment. And finally, they can work in the special audit under section 66. Then look into next one, anti-profiteering. What is anti-profiteering? First we need to understand what is profiteering. There are 2 situations profiteering will be applicable. Number 1, there is a reduction in rate of GST, but that reduction in rate of GST is not passed on to the next person by way of reducing the price. For example, the restaurant, there is a change in rate of GST, say from 18%, the restaurant GST has been reduced to 5%. But before change in rate, restaurant was fixing 500 plus GST 90 and 590. Even after change in rate of GST to 5%, they are collecting the same amount of 590 but paid only 5%, that is 5 by 105, 28, because of which from 500 rupees their value is increasing to 562. So 62 rupees, easily they made a value addition without, easily they increased that profit without making any value addition. So profited amount without any value addition is 62. This is a case of profiteering, that is reduction in rate of GST but benefit not passed on to the recipient. Another case, increase in ITC but benefit not passed on to the recipient. For example, they made a purchase of 1 lakh, old ITC 15,000, means the net purchase price is 85,000 and the sale price is 1,50,000. So 1,50,000 minus 85, 65,000. But now they have got more ITC, 25,000 ITC they got, but even then they are fixing the same sale price, thereby their profit is increased by 10,000. This is also profiteering. So what are the 2 situations where profiteering is applicable? Reduction in rate of GST but benefit not passed on to the recipient, increase in ITC but benefit not passed on to the recipient. In these 2 situations, anti-profiteering order will be passed. But who is the authority that will pass anti-profiteering order? Previously National Anti-Profiteering Authority, now it is Competition Commission of India, which is established to regulate the profiteering. What are the functions of the Competition Commission of India? Mainly to identify whether the benefit has been passed on or not, and to identify the registered person who has not passed on the benefit, and they will pass an order to reduce the prices, and to return to the recipient the benefit not passed on. If they are unable to identify the recipient, the money will be deposited in the consumer welfare fund, and they can impose a penalty. How much penalty can be imposed? 10% of the profited amount, but for that penalty also there is a waiver. If they deposit the profited amount within 30 days from the order, then the penalty will be waived off, or it can also lead to cancellation of registration. We saw na, violation of anti-profiteering, cancellation of registration. Then application and process flow, there will be SCAP, Standard Committee, that is Standing Committee on Anti-Profiteering. What this standing committee will do? So they will receive the application. If the issue is of national impact, application will be made to SCAP. Suppose if the issue is of local impact, then the application will be made to state level screening committee. And here you can see the process. There is an applicant who will make application if it is local in nature. Say for example, restaurant not passed on the benefit will be local in nature, application made to state level screening committee. If there is a company like Hindustan Liver Limited or P&G or any other company has not passed on the benefit, so which means it is having a national impact, then the application will be made to Standing Committee on Anti-Profiteering. Now the state level screening committee, if the application is made, they will forward the application to Standing Committee on Anti-Profiteering. So how many months it will take for forwarding? So 3 months, that is 2 months plus 1 month, because they have to go by walk-now, so it will take 2 months plus 1 month for the purpose of forwarding the application. Okay, it is forwarded to SCAP. Then what SCAP will do? It will take 2 months plus 1 month to check whether evidence is there or not. Okay, because they have to check, no, so it will take time. So evidence, suppose if there is no proper evidence, they will reject the application. To reject the application itself, it will take 6 months. 2 plus 1 and 2 plus 1, they will reject the application. Then again we need to make a fresh application. Suppose if they accept the application, will they pass order, sir? No, wait, they will do investigation. That investigation, it will take 6 months plus 3 months. In this 6 months plus 3 months, even we can find Dawood Ibrahim also. So 6 months plus 3 months for what? Investigation, whether really they have passed on the benefit or not. So they will do the investigation. What is the authority which will do investigation? Directorate General on Anti-Profiteering. They will forward the report to the SCAP, and CCI will take further 6 months for what? To pass the order. During these 6 months, suppose if they feel that the investigation is not done properly, then again they will order for the fresh investigation. Okay, so 2 plus 1, then 2 plus 1, then 6 plus 3, and finally 6 months it will take for the purpose of passing the order. That's it. So these are the areas so which you need to, and apart from this, so I have not skipped anything, but there are like, of course, definitely 100% you cannot expect me to cover in the revision batch. So there are certain things which I have skipped, like normal, which is like clutter and all, I have not discussed, but these are the areas usually repeatedly it will be asked in exam. Okay, so now for the first time I have completed rocket revision on time. Okay, so I need to thank you. I need to thank you because see, I have the problem of doing only recording. This camera, na, if I see this camera, hardly 2 hours. Beyond that, I will not be able to take class. But by seeing your face and all, I will be able to. That's why first time I have collected fees for face-to-face rocket revision, and I have taken it in the YouTube also for free. And thanks for coming for face-to-face. But I did not collect much money from you, and for whatever money I collected, I gave you one book also, and AC also is there. Therefore, it is not for me. And next, henceforth, what is that you need to do? Actually, you completed the entire revision, and we have seen some important questions also. And I will be doing a Mighty 50, and in this Mighty 50, so already some questions we have discussed, around some 30 to 35 questions we discussed. So these questions only I will take, plus extra some more questions are there, that also I will put it in the video, that's a separate video for Mighty 50. I said by end of this month I will be doing that. And henceforth what you need to do is that just you need to focus on other subjects. Okay, for other subjects, and then I want you to spare only 4 days for revision before the exam, 4 more days. In these 4 days, what you need to do is that I have already given you the test series. In the test series, because already you have revised this, so you need to just take the test series, and 2 days you need to just go through the question paper, write the answer and cross check with the suggested answer, so that whatever we have learned, that can be applied. So 2 days you spend for that. Then 2 days you spend on this mighty 50 and mighty 200 questions. Already if you are having solved workbook, in that in the beginning itself after amendments I have given 200 questions. So those 200 questions you try to complete, plus the mighty 50 questions which I am sharing, enough. Okay, because in this itself lot of questions we saw. Beyond that, if you practice, it is enough. So 4 days. First 2 days for what purpose? Test series. Next 2 days for what purpose? Mighty 50 and mighty 200. Then in this October month, 1 day, like half a day, we will spare some time on MCQ. We will do a live MCQ test in the YouTube itself, or maybe in the classroom if you are able to come in the classroom. So we will do a live MCQ test. So some top 100 questions. I'll take 100 MCQs, but very, very difficult MCQs. Those 100 MCQs, you have to open your mobile and you need to do the test. So 1 day we will plan for that, and that will be somewhere by October 15th, like that I will be doing it. Before that, the October first week or second week, like that we will try to complete. And next, 1 day before the exam, what is your strategy? Simple. DT exam will get over, and when the DT exam get over, so thereafter actually gaining the conscious is very difficult. Somewhere like 8 p.m. you will start, okay, assuming that 8 p.m. you will start. 8 p.m. to 11 p.m. you try to complete the mighty 50 questions which I am sharing with you, and thereafter next day, this time you don't have much time. So at least last time we had 3 days, etc. and all, but that is only a big mistake I feel, okay. So what happened is that students said, okay fine, 3 days is there, 3 days is there, like that they were thinking, and they skipped. So now you don't have that. Hardly 1.5 day in the DT exam, mighty 50. Then next day, morning 7 o'clock to afternoon 1 o'clock, you need to complete revision of these That's It book. So already I am taking the class, I have taken from Rocket Revision, and That's It book you have. So what I feel is that whatever topics which you feel like it is difficult, when you are reading you are not able to read, that you watch video. Remaining things when you are able to read, if you can read, you just quickly go through that. Is it clear? Anyhow, everything is there, everything you attended. So when you are sitting and preparing, you feel like while reading it is not moving, it happens. For example, registration chapter, time of supply chapter, invoice, there are few chapters, it will not move at all. In the same page you will be sitting for half an hour and all. At that time immediately you open the video and you watch that. But target by afternoon 1 o'clock you should complete entire revision. Okay, possible, you can do, because it is sitting and reading only. Now you are not learning for the first time. And then afternoon onwards, somewhere like maybe 2 hours you will take rest, and thereafter you need to complete this solved workbook. First target mighty 200 questions. While solving now itself, you would have marked that these are the critical points or important points, etc. Quickly you go through that. You don't have to read the question again and again, practice. Just glance, question, answer. What is the difficult point in that? So while preparing itself, you do that, so that there it will be helpful for you for revision. Okay, just what is the critical point in this? So what is that you need to focus for? Then next day, so that will get over by the day evening, and that day I will do one marathon also. So discussing all important concepts, critical concepts, not chapters and all, concepts. So few concepts like we discussed now, duty free shop, what is the impact, then cash ledger can be transfer or not, like that some critical concepts alone we will discuss that day. And next day morning, that is our IDT exam, hardly you will prepare from 7 a.m. to 11 a.m. not more than that. So what you should do is that first you should revise all the monetary limits. So monetary limits, that I have given in my website itself. So here I have given CA final summary of monetary limits. All the monetary limits I gave in one place. You can quickly go through this monetary limits PDF, and then all time limits also you can go through quickly, so that in MCQ it will be helpful. Mostly this monetary limits, time limits will be confusing, so that will help you. So monetary limits, time limits, and then customs case law summary. Customs case law summary, hardly half an hour. All the case laws which is there in customs, I have made one video in my YouTube channel. So that customs case law summary video alone you quickly go through, so that the sufficient time will be there. And even interest computation under customs and interest computation under GST with illustrations I have given. All the interest computations in GST, then same way all interest computation in customs, because sometimes there will be some 4 marks or 5 marks question on interest computation itself. So this is enough. Monetary limits, time limits, customs case law summary, interest computation under GST, interest computation under customs. Exactly that much time only will be there. And before day, when you are doing the revision, first preference should be for category A topics. I told you what are the category A topics. That category A topics you should complete, then only you should touch for the other topics. Clear? And you go for the exam, and when you go for the exam, ensure that that 3 hours is properly optimum utilization should be there. What is that you should do? First 15 minutes, they will give you the question paper. When you get the question paper, go to the 6th question. In the 6th question, you read the theory part. When you read the theory part, you will come to know, okay, can you write the theory question or not? And if you are able to write that theory question, then just keep that in mind. And any 2nd question to 5th question, if you find difficulty, immediately you replace that 6th question. Timing you see. If the timing is not sufficient, immediately you replace that 6th question, otherwise you proceed to that. Okay. Next, you divide the entire 3 hours into 6 parts. First half an hour you devote for MCQ. You please carry one timer watch. Normal, no kids watch and all will be there in the timer. For every 30 minutes you keep a timer. Okay. And what you should do is that first 30 minutes will be MCQ. Beyond that, don't spend time, because it will pull away. MCQ and question number 1 will actually pull away your time, so that 1.5 hour, 2 hours also it will go. In the last 1 hour you will not be able to, and you feel that paper is lengthy, you will attempt only for 70 marks. When you attempt for 70 marks, you cannot expect 60 marks and all. It will be very difficult. So that's why half an hour for MCQ. And after this half an hour, you leave it, it's okay. Then you go for question number 2. Don't touch question number 1. I'm telling you, don't touch question number 1. So question number 2 to question number 5. You have to write 4 questions. 2 hours you are having. Definitely you will not take 2 hours. Trust me, you will be able to complete in 1.5 hour or 1 hour 45 minutes, because these are all small questions. 5 marks questions, 4 marks questions. There won't be much to write. You will save a lot of time, and you will be not having pressure also. Now last 45 minutes you will be happily sitting and writing the first question. So because you don't have a pressure, but when you are writing the first question in the beginning itself, you will have a pressure that all other questions I need to write. But now the pressure is taken out. Now you don't have anything else. Till the time the invigilator is asking you the answer sheet, you will be sitting only on question number 1. So patiently you can think and write, and you can write notes and all beautifully, and you can complete it. Then only you will be able to attempt for 100 marks. And suppose if you have really time, then you go back to MCQs and check once again. MCQs, what will happen? So you do a mistake and you get an answer, that answer also will be there. In MCQ it will happen. You do one mistake, you will end up with an answer, that answer also will be there. So that's why MCQs alone, you check once if you have the time. If you don't have time, it's okay, leave it. If you have time, MCQs alone you check once, because maybe you would have selected a wrong answer, or again at the time when you are seeing the MCQ, maybe there could be a change in answer, etc. and all. That if you have time you check, otherwise you complete it this way. Done? Then you will get a result and you will be having minimum 60. Let's see who will stop you. You understood? All the best for your exam. and if you are preparing properly, result will be positive only. So with the positive hope, you start your preparation. Okay, so whatever has happened, and therefore you need to strategize that. Then what is the point in committing a mistake? You should learn out of that mistake. You should know where we went wrong, what presentation we went wrong. So all those things you should keep in mind, improve yourself for the next attempt. That is what you need to do. Everyone should do the same thing, not only in indirect tax, every subject you need to do. But always the positive hope should be there, and do the effort. Don't waste your time, because this October month will be full of festivals only, and Diwali and all is also coming, and then only the exam is happening. So due to that reason, lot of time will be wasted, and you have only 20 days. Like that you plan. You have only 20 days. You plan itself with 20 days, so that these days and all will just like that it will go off. Okay, don't get deviated and uninstall Instagram, uninstall all unnecessary apps, just to keep YouTube and this Telegram. That too, when you are sitting for preparation, so turn off the notifications, prepare. Whenever you want to ask the doubt in the Telegram to your faculty, at that time you post the query and you devote a time for seeing the replies. So maybe today you ask the query, so maybe tomorrow you devote one time for 1 hour like that for your YouTube or unnecessary things, etc. and all, just 1 hour, not more than that. Is it clear? So then only you will be able to be successful in exam. Done here? And can I conclude? Thanks a lot for giving me opportunity to take classes for you, and all the very best for your exam. And sorry if I have not covered anything. Almost I have covered, but if I have not covered anything, you prepare that. And always I will be there till the time you go for exam. Any query, anything, any support you ask me, I will be able to do this for you. Okay? Good. Take care. All the best once again. Thank you, thank you, thank you all.